609. Ooh. Here go.
Eli Lilly reporting results in the last hour. CNBC's health and pharma reporter Angelica Peebles joins us now with more big sell-off in the stock, although there was some indication that some people were expecting a revenue shortfall. So I have two questions for you. Is it all GLP-1 related? And if so, is it just Lilly's version of GLP-1, or is there some type of, I don't know, softness? Did we get ahead of ourselves on the whole weight loss? I mean, in this country, everybody talks about it. Everybody's taking it. And do we get ahead of ourselves? Is there any slowdown in demand for it?
So certainly the story for Lilly is all about the GLP-1s, about Mounjaro and Zepbound, because that's the thing that investors are paying the closest attention to. That's the revenue driver going forward. So that's why we're focusing so much on it. And that is the focus of today's report, because the company just a quarter ago, raising its full year sales estimate by $3 billion, saying that it had better visibility into supply. And now they're taking that back a little bit, trimming the top end of the guidance, and both Zepbound and Mounjaro coming short of estimates in the third quarter. And so we're going to have to hear what Lilly has to say about that. But remember, last quarter, Novo Nordisk also reporting a little bit of weakness there in its business. So I don't know if we can say at this point that we're past peak obesity and past the peak of these drugs by any stretch. But it is interesting to see these dynamics play out as we talk about supply, demand, and also what the prices of these drugs look like as we get into more insurance and Medicaid markets. And so I think there's just a lot to see about where we go from here.
We might as well. He's coming up right now, so we can talk about it, because you did mention, and I don't. In the past, I have seen other companies say something about like wholesale inventory destocking. I don't even know what that means. Does that mean is it commentary on demand, or is it just a technical thing? Should we ask him, or do you want to wait?
We definitely need to ask, because it's interesting to say that wholesalers, they're not buying as much because they don't need to, but we know that there is demand out there. Like you said, people are clamoring for these drugs.
Right.
There's this whole debate of whether or not tirzepatide is available or not, whether it's in shortage. And so to hear that at this point the wholesalers feel like they have enough, that maybe they're not buying as much as they were before, I really think we need to ask Dave Ricks about that, because it's an interesting dynamic.
Okay, joining us now to break down the report, Eli Lilly CEO David Ricks. And we know how, we've seen this movie before, I think, David. Things do get very excitable about great products. Like your stock's up 50%. It's almost got to $1 trillion, which would have been the first drug company, I think, ever to get there. So there's been great things happening. Is this 3 steps forward, 1 step back? How do you view it?
Well, we had a really strong quarter, so I know there's a difference in what the street expected, but to be honest, we're pretty pleased with how things turned out. Up 42% year over year on the right compare. I think that's a pretty small group of companies our size growing at that rate. And sequentially, if you look at in-market prescription growth, it's actually accelerating in the US. So while reported sales are, I know, light compared to the street estimates, we're on track with what we want. We are taking a little bit off the top of our guide, because during the quarter, I think we changed an assumption. We changed the assumption that we should start promoting and launching sooner in the US and in other markets. And we basically pushed some of that out into Q4 because of customer service levels. So we want to make sure people, when they get a prescription, can fill it. We understand that's a frustration for our customers. So we relaxed that constraint a bit. And so there's a little lighter demand in the year and now projected. But overall, I think we're in pretty healthy shape, and underlying demand is extremely strong.
I'm trying to understand this. So you concede maybe demand is a little bit lighter, and then in terms of lowering, because you said the street was expecting this, but the street was basing their expectations on your guidance, and your guidance on the top end for revenue did come down a little. Is that 100% of that because of the customer service concerns and pushing it into the fourth quarter, or anything else to account for the high end of the yearly guidance coming down?
Yeah, it's really that. I mean, we moved out plans to advertise and promote Zepbound, which we're not really doing right now. We're just starting that now in Q4. So here in November, mid-November on, we'll begin that in the US. And then outside the US, we held back on launches. So those activities which drive revenue, we slowed down a bit because we want to make sure our inventory levels at Lilly and in the channel rise. Now, I think Angelica was speaking earlier there about the channel dynamics, which we cite in our press release, and we did have a lot of inventory going into the quarter. We had a lot less going out in the channel. So I think this is not a function of supply, though. It's a function of these wholesalers and retailers having capacity and wanting to stock every dose, which they often don't. So yeah, we're just balancing all these parts, and there isn't excess supply, but we haven't been stimulating demand the way we had originally planned. So we're pausing that a bit. We did pause that, but we're restarting here. So look, the growth story though is fantastic underlying this, and incretins which are Zepbound and Mounjaro, are growing pretty dramatically. We plan for that to continue.
Dave, it's nice to talk to you again. But it's interesting because last quarter you were saying that you really didn't even need to promote Zepbound. It was basically promoting itself because there was so much demand. And now it sounds like you're almost saying that you need to go out there and do more promotion. Is that right? Or you see demand softening at this point?
No, I think if we had juiced promotion in the quarter, we might have risked on some dosage forms people having a bad experience, going to the pharmacy counter and not having it available, et cetera. Again, there's this supply chain is very tightly managed. We're still in the growth. We're investing heavily, as you know, in that. We're still in the growth phase of that, expanding capacity pretty dramatically. We're on track to hit our goal of at least 50% year-over-year growth in the second half of this year versus second half of last year. But when people go and they can't get their medicine, they're very frustrated. They tell us that. So, we didn't want to send more people to do that necessarily. That said, underlying sequential prescription growth is up 25% Q3 over Q2. So a lot more people went to get the prescription, even though we did not promote. But we are going to start that because we do expect even greater expansion in our manufacturing capacity exiting the year and into next year.
And how much of the supply situation has to do with the fact that you want to make sure that tirzepatide is available so that it's off the FDA shortage list? Obviously, that's been a big issue with you and the compounders. So how much of that dynamic is at play here?
I mean, that's a factor. Our key indicator, though, is fill rate at the pharmacy counter for consumers. So when that is slipping down, meaning people are unsuccessful in fulfilling a prescription the first time or the second time, that's when that's what we pay attention to. A byproduct of that is what the FDA decides to do. We don't really control that. We give them the relevant information, how much stock is at Lilly, which, as I said, we have available supply on all doses of Mounjaro and Zepbound, and they make a determination whether it's in shortage or not. We agree it's not in shortage because we have stock.
The other issue, David, are these copycats. I know you're going after them, suing some of them, but is that like a whack-a-mole game to try and come up with the biggest copycat issues on this? What risks are there for consumers if they're going that route instead of going through a doctor?
Yeah, I mean, the primary concern there is one of safety. A lot of these outfits are dispensing drugs without doctor supervision, certainly not an in-person visit. They are not FDA regulated. They claim they're regulated by state boards of pharmacies, but I don't think they're getting inspected. They're not approved drugs, really. So we've created a world here where there are these knockoffs that people can access, and our point of view is that needs to get put back in the box. We have the FDA for a reason, which is we want to have consumers confident when they go to get a prescription that it's the dose and the medicine that they expect it to have, and it's safe and effective. None of these other guys can say that.
How much of a frustration is that, and what do you think the government should be doing?
Well, I think it's not really a business matter for us. As we just talked about, we're sort of selling what we make, and it's a tight supply chain for us. I just worry long term if we're sort of avoiding the real issue here, which is coverage of these medications on insurance. I think that's really what's happening is people want to buy a lower priced product, even though it's lower quality. It's not a real medicine. It's not an approved medicine. That's what compounding is. What we need to do is bring those people into the insured system. And if we have other diseases like diabetes or hypertension, we expect our medicine to be covered by insurance. Why is this different? That needs to change. I think that's the primary thing I'm worried about.
Mm-hmm. And one thing you did, though, for people who can't get these drugs covered by insurance is to make the vials available for cash-paying customers through Lilly Direct. So how is that going so far? And do you think that you'll start adding vials maybe into the supply of people who are getting the drugs through insurance?
Yeah, that's going well. As you point out, we launched vials in August on the 2 starting dose and then the 5 milligram, which is a highly effective dose, really to help people, particularly those in the Part D, the senior care program, where the government has basically prohibited use of all weight loss drugs for that indication. And it's going well. I think we're seeing week-on-week growth in that channel, and thousands of people being able to get legitimate product through that channel. That's the right way to address cost and coverage, and we're committed to try to bring down pricing for consumers in that way. There'll be more ahead of that for us because there is a lag in this insurance coverage issue, even though that's the ultimate answer. Obesity is a disease. People with it deserve coverage of their medication.
Go ahead.
I just want to talk about Alzheimer's for 1 second here, because yesterday you presented some data showing that if you tweak the dosing of Kisunla, that you can reduce the risk of that brain swelling. So how do you expect that to affect sales of Kisunla, and what can you tell us about how that launch is going so far?
Yeah, Kisunla is our new medicine for the treatment of the beginning stages of Alzheimer's when you have symptoms. We're excited by that launch. Of course, we just got going, but we basically have a month and a bit of sales. So the sales aren't what we're talking about. It's more, are hospitals adopting it? Are we getting on formulary? Are doctors beginning to write? And all those indicators look really strong. The one thing in this class that's been much discussed is the risk-benefit and whether the safety can be managed. And we believe it can, and the risk-benefit's highly appropriate even with the existing dosing regimen. But we ran an experiment to see if we could improve upon that, and it's pretty exciting news because you get the same degree of amyloid plaque lowering, but with about 40, almost 50% less of the side effects. So we're rapidly going to submit that to the FDA, change the dosing regimen, and people can have more benefit with less risk. And I think that's a good development for the drug.
All right, we're going to go, I think, David. Will we forever think of Eli Lilly as a weight loss company? Is that what you are now? Or let's add something. What else?
Yeah, well, I mean, as I mentioned, we're actually investing and growing in all kinds of other areas. There's serious unmet needs in all kinds of diseases, and Lilly is not just a diabetes company. So, I mean, one of our fastest growing products is our breast cancer product, Verzenio, which is for early breast cancer and metastatic breast cancer. It's now the leading product in that category and doing extremely well. We've got a growing immunology business for psoriasis, ulcerative colitis, and atopic dermatitis. And we just talked about neuroscience, and I'm really optimistic for the future of treating brain diseases. You know, this is the company that invented Prozac. We used to be known for that drug, Joe.
I know, Prozac Nation.
And that's still one of the biggest unmet needs on the planet for mankind is brain diseases. But we're beginning to crack the code. The biology is revealing itself. We don't even have AI working fully in our industry's innovation cycle yet, but when we do, it's going to make a big difference. And I think neuroscience is the next frontier of growth. We're investing in all of those areas at a high rate. We are more than an obesity company, although obesity is an exciting story.
Right, that is the last. Many people think that's the last frontier, the human brain. You're right, and it's all chemically mediated. We know that. So almost anything that you do or think or feel, it's hard to believe, but there's some physiology or neurochemistry to it. David, thank you.
Thank you. Good to see you guys.
Appreciate it. You're so young. You'll probably be there for all this. You know.
Hope so. I hope so.
Yeah, me too. Okay. Thanks. See you later. Thank you.
Coming up next, a preview of today's first read on third quarter GDP. The number could move markets when it hits at 8:30 Eastern Time. As we head to a break, though, check out shares of Chipotle, the fast food chain, reported mixed quarterly results as earnings beat expectations. Revenue, though, fell short. And you're looking at that stock off about 6% this morning. We're coming right back.
Time now for today's Aflac trivia question. According to Bankrate, what are the 3 least affordable states for full-time center-based infant care? The answer when Squawk Box returns. DNBC. Trivia question. According to Bankrate, what are the 3 least affordable states for full-time center-based infant care? The answer? New Mexico, Hawaii, and New York. Average prices for one child represents between 19.6 and 20.5% of median family income in each state.
White snack.
All right, welcome back, everybody. 3 big numbers on the way in the next 3 days, and a final economic report card for the Biden-Harris administration before the election. Our senior economics reporter, Steve Leisman, has a preview of that. Good morning, Steve.
Good morning, Becky. Yeah, the candidates are going to watch these numbers for any opportunity, positive or negative, they might provide to score points on the economy. But I think Wall Street, the bond market, they're going to be watching even more closely for what it means for basis points on bond yields, which have been driving markets. ADP coming in at 113. That's a reduction, maybe perhaps reflecting some of the strikes and some of the hurricane issues out there. But GDP, pretty strong, 3.1%. PCE, 2.1. I don't know, I might call that victory for 2%, the 2% target, but the core a little bit elevated at 2.6. And there's the jobs number. We're going to talk a lot about this the next couple of days, but coming in at 100,000, again, strikes and hurricanes maybe playing a role there, especially the potential for it to be affected, by the way, by those hurricanes. And moving on here, taking a look at the 3.1% forecast would represent a second straight number well above potential there, right in a row, and there's a pretty strong repudiation of the growth forecast. We had this really anemic growth forecast for the second and third quarters that we saw at the beginning of this year. That didn't happen. Strong consumer spending, that's going to be behind this now, this number here. But business equipment also doing pretty well. Big aircraft spending as well, helping while housing seen as a drag. And a quick technical note, the consensus may be a little bit lower in reality on the street because it may not include yesterday's stronger trade number, which of course subtracts from GDP. They may have been bringing stuff into the country ahead of either strikes or tariffs or who knows what. The candidates, they're going to make hay of this number, but hey, the bond market's going to make profit and losses, and it's going to look like it will take weakness in the economy to reverse this upward reversal in yields that's raised yields more than 50 basis points since the Fed meeting. Just before the GDP number, we get ADP. That's a heads up on the jobs report. And a look at how wages may or may not be boosting inflation. Guys, a lot of talk about yields and what's driving them.
Yeah.
Torsten Slok, we all follow Torsten. We read Torsten says this is maybe reflecting the fiscal outlook. Then I pick up the Journal this morning, and I thought they repeated a story. There's a $50 billion investment plan from KKR about energy and data centers. A $40 billion investment from Musk. I thought they were the same thing with different numbers, but that's $90 billion. Then I read this wonderful piece by our friend, remember John Sylvia?
Yeah.
Used to work, I guess, in Wachovia, whatever it was. He's now working, I guess, for himself. He says, interest rates never end up anyplace. They just keep moving around to reflect the difference between the supply of savings and the demand for investment.
Yeah.
And we are living in a moment here of extreme demand, yes, from the fiscal side, but also from the private sector, which can't seem to raise enough money to build enough AI stuff all over the country.
That's a really interesting back and forth pull. I thought it was interesting that you said bond yields are going to rise on this. The only thing that would push them down would be a reflection of weakness in the economy. I thought you were saying that that's why we've seen elevated yields, but it's not. I mean, it's a combination of factors.
Combination. You have growth you have out there. You have an expectation for, you have firmer inflation. And one of the things John points out in his column, I showed you those numbers, that 3% growth. Potential's thought to be 1.8. Well, depending upon the breakdown of that data, right? If a lot of that extra data is productivity, that's not necessarily inflationary. If some of that data is building infrastructure or building new plant and equipment that will add to potential growth, that's not inflationary. But if you're adding growth above potential without adding resources, that's inflationary. So yeah, you might come along with firmer inflation, and also if you have a 4.1% unemployment rate, and that unemployment rate is below a kind of steady state, then that could also add to it, which why, by the way, at, what time is it? 8:15 this morning. One of the best parts about the ADP report is their wage data.
Yeah, I'm sorry.
Their wage data.
Okay.
They have wage.
Real data.
I guess we're going to have Neela in. I'm very excited. She's going to be in the show here. Their wage data comes from 10 million actual paychecks, which is orders of magnitude more than the government data on wages. So when they come through and say what's happening with wages, that's when we want to look really good indication of strength
Well,
and
that's
weakness of the
interesting.
job
If there's a
market.
difference between what we hear from ADP and the government, do you say forget the government, go with the ADP number?
Of all the private sector pieces of data out there compared to the government, their wage data may be the most important, and it's been different. It's been a percentage point higher, but it's also been coming down as well.
All right, Steve, thank you. We'll see you a little later, and when we do, maybe we talk about what the Fed thinks about these higher yields and how that plays into their calculus too.
Excellent question.
Neela's going to be here. Do not bother her when she gets here. Do not run out there and
And talk to her ahead of time.
glom all over. Just leave her alone. Leave her
Joe wants to do
alone.
that himself.
It's going to be very exciting.
Up next, stocks on the move ahead of the opening bell, and then Corning CEO Wendell Weeks is going to join us. Squawk will be right back.
Squawk 2 social media stocks soaring. Snap reported better than expected third quarter results. Though revenue guidance did come in a bit light, a new $500 million share buyback program may be easing some of those concerns. You don't want to miss a exclusive interview, Evan Spiegel on Money Movers. That's at 11 a.m. Eastern time today. Meantime, shares of Reddit, they are soaring. Earnings of 16 cents per share beat estimates for a 7-cent loss. Revenue also beat estimates, and daily active users growing 47% year over year, 97.2 million now. Company's Q4 guidance coming in above expectations. And take a look at shares of Shake Shack, also surging this after quarterly results. Earnings of 25 cents a share, 5 cents better than estimates. Revenue of $316.9 million, beating expectations. Same-store sales grew 4.4%. That's well ahead of the 3.6% that the street had expected, Becky.
Up next, Corning CEO Wendell Weeks. We'll talk to him about what they are seeing in terms of growth and AI. Also, Later, we're going to talk the SALT tax and the election and much more with New Jersey Governor Phil Murphy. Squawk Box will be right back.
.com.
Welcome back, everybody. Corning and AT&T announcing a multi-year agreement to expand fiber and cable networks to more Americans. It's a more than $1 billion deal, and it comes as Corning reported better than expected earnings and positive guidance for the quarter. Joining us right now is Wendell Weeks. He's Corning's CEO, and Wendell, thanks for coming in on set.
Always a pleasure.
Let's talk a little bit about this, and maybe we start with the earnings first, because in the earnings it lays out the huge growth you're seeing, in large part because of AI spending and what's been happening. And when you were here in July, you talked a lot about how the fiber that Corning makes is really important for what you're doing in terms of transmitting so much data. You have laid out some really aggressive goals. I think you said enterprise growth, you wanted to see compound annual growth of at least 25% through 2027, but you've been kind of knocking that out of the park. This week you reported growth in that business of more than 55%. What's happening? What's the demand picture that you're seeing?
Well, what's driving our demand is to do Gen AI, you need to connect the GPUs, each one to each other in these large GPU clusters, and you connect them with fiber. And it takes around 10 times more fiber in a Gen AI enabled data center than it would in a traditional data center. So as the world's technology and market leader in this technology, it gives us great opportunity not only to grow, but to innovate. And that's what we're doing. And what's driving our outperformance is the really strong adoption of our new Gen AI products.
You rolled these out in June, you were here in July talking about some of these things. There is some big money that's being spent on these things, most of it coming from major companies that are doing this along the way. How are you keeping up with demand right now?
Well, we were able to, over the previous years, to build both the technology capability and the capacity. We saw the potential for these products, so we already have the assets in place. And that's what's leading to the really strong incremental performance. Since we already have the capacity and technical capabilities in place, and the cost was already in our financials, when the revenue shows up, we develop very, very strong positive incrementals.
I mean,
That's why you see EPS growing twice as fast as sales.
I mean, that's a similar story to what we've heard with NVIDIA. Jensen Huang was building that for over a decade or longer, and then when the demand was there, he was able to keep up with it. You've been doing this job at Corning for over 20 years. This year has been phenomenal. Over the last year, the stock's up 83%. This year to date, up 60%. What would you compare this to in what you've seen over your more than 2 decades at this company? Or what you just see in the business overall?
Well, if you can get positioned behind the right secular trends, you can have super powerful growth cycles. And what we're seeing right now is a convergence of both cyclical and secular trends is what's driving our growth. Gen AI is clearly a secular trend, but it's not the only one we're seeing. And so if you patiently invest, build the right innovations, do the right thing, get the right products, when you hit the trend right, you can have a very, very good set of years. And that's what we're aiming at. We're only 3 quarters into a 3-year growth plan, and I'm delighted with the start.
Where's all this stuff manufactured?
It depends on the piece,
Right.
but the bulk of it is manufactured in the United States. The 2 largest and
That's
lowest
where I was going
cost.
with this, because we're going to have big questions about tariffs coming up,
Yeah.
maybe,
The
depending on
2
what
largest
happens.
and lowest cost fiber factories in the world are in North Carolina, and we own them both.
And can I say one other question, which is, when you look at like a pie chart of what you think the business looks like 3-5 years out, given the AI piece of it, how much of it is still laying sort of legacy or old school fiber in the ground, right? I mean, or manufacturing fiber for that purpose, versus the connectivity piece in the AI world?
It's a great question. We're already seeing this change in mix. It used to be about a quarter of our business was for data centers in our optical segment. This last quarter, it grew to 40%, and we're seeing it just continue to accelerate. The next milestone you'll see is connecting the data centers to each other. And we just recently had this announcement with Lumen Technologies, which is all about that. Since these GPU clusters are power hungry, they may need to separate them between data centers, creating a new market to connect the Gen AI-enabled data centers to each other. And that has taken yet another new innovation for us, and we expect that to start coming into our revenues next year.
That sounds like a lot of fiber that would be required to connect one data center to the next. I mean, Steve Leisman was just here talking about $90 billion in energy and data centers investments being announced today by KKR and Elon Musk. I mean, that sounds like miles of fiber that you're talking about too.
Yes, and the good news is we make a lot of fiber. So we're going to be able to step up in this market and continue our leadership position. And that adds another spring to our springboard plan. And that'll start next year. And we expect that to continue to gather momentum.
What's the deal you announced this week with AT&T? $1 billion over how much time to do what?
AT&T's a partner of ours for decades, both in technology and markets. And they're a leader in connecting you and you directly to fiber. And so what this is about is to take our new fiber to the home offerings and connect more and more people into super high bandwidth internet
How
connections.
concerned are you long term about the disruption of that business by either satellites, so thinking of what SpaceX is doing or Amazon is doing with Kuiper in terms of high speed to the home, or fixed line wireless to the home?
Well, I'm a big fan of satellite, and I know a lot about Amazon. I'm on their board. So that has an important piece of the overall communications puzzle, but it's just physics. You can't compete with fiber. In a single fiber pair, you could connect every human to every other human, if you get them all in the same place, to have a simultaneous voice conversation in just one fiber pair. So satellite has far less capacity. So it's really important part of the mix. It makes it easier to connect people that are far apart from each other in underserved areas, but physics wins.
Wendell, you say that this is something you guys were prepared for because you were investing for years and years before
Yes.
the demand was there. What's the next great thing that you're investing for and preparing for down the road?
Well, next year, we hope to introduce a new solar map, new solar market access platform to add another leg of growth as we seek to help the U.S. onshore domestic production of solar to help make sure that our security stays in place and we have the ability to support renewable energy here.
Is it a cost factor that keeps that from happening right now, and how do you bring down the cost, the prohibitive cost?
It has historically, but what we've been able to do is working in conjunction with government funding. What we're able to do is bring up a low-cost factory right here in the U.S. We have a bunch of our new innovations coming in place for automotive. It's going to be yet another piece of growth, as well as the products you know is for your phones are going to change and your notebooks are going to change.
Would tariffs on companies that are producing things outside of the United States help you in this quest?
Well, by and large, it depends which products. In certain of our products, yes. In others, what's really important is what happens to our customers. So we want to see something where someone like an Apple can continue to sell a lot of phones around the world.
That makes sense. Wendell, thank you so much for coming in. And again, taking a look at the 1 year for that chart, it's actually up 86%. We appreciate your time today.
Thank you.
All right, coming up, the private payroll data from ADP. The numbers and the market reaction straight ahead. But first, New Jersey Governor Phil Murphy joins us to talk election, taxes, and much more. And a reminder, next week, CNBC will be live all night on Election Day. Did you get, you talked to Lionel Richie yet, Sorkin?
I haven't, but I need to. I need to get that license, don't I?
Yep, you do. Actually, we're not allowed to play any music or have any fun.
But you can see.
Yeah, we have the results as they come in and reaction from the biggest names in business. It all starts at 7 p.m. Eastern. And then the morning after, a special 4 hours of Squawk Box starting at 5 a.m. Eastern. Stay tuned. might be.
Coming up, New Jersey Governor Phil Murphy joins us right after the break to talk about the election and taxes. And then a number of data points out this morning. ADP private payrolls are going to hit at 8:15 Eastern Time. And then at 8:30, third quarter advanced GDP data, that's to be out. We will bring you those numbers and market reaction. Squawk, come right back.
At night.
Welcome back to Squawk Box. Our next guest is going to be weighing in on the 2024 election and the key issues, including jobs, taxes, and more. I want to bring in New Jersey Governor Phil Murphy. Governor, it's nice to see you this morning. We are less than a week out, and I'm curious, given that I'm sure you talk to folks inside at least the Harris campaign. I don't know what other campaigns you might be talking to, but how you see the race as it stands right now. What polls you believe, what polls you don't believe, what you think about the betting market. Where do you think we really are?
Good to be back, first of all. Secondly, it's on the knife's edge. There's no other way to put it. I mean, you could pick your poll, but this is going to come down to 7 or 8 states, and it feels 50-50 to me. It's a stark comparison as to what each of these candidates stand for. I am a huge Kamala Harris fan and supporter, but that doesn't mean that this isn't close, and we're going to have to see this play through Election Day and perhaps beyond.
Well, I'm curious why you think it's 50-50. We talk oftentimes about the polls, which seem to, I mean, there's the rate of error, but they do look like they are in former President Trump's favor at the moment, and then you look at the betting markets, and even more so.
Yeah, I'm not a fan of the betting market because I assume that there are folks in there who can somehow express themselves that's maybe perhaps different than what the polls suggest. Listen, whether we like it or not, this thing is a jump ball, and my plea with folks who want to see the America that we all know and love is don't focus on why this is so close or how frustrated you are because it's so close, get out there and vote. We've had record early in person, record vote by mail returns right now in New Jersey. Let's see that printed across America. Folks got to get out there, make their voice heard, and vote for the future of America that we all believe in.
Governor, as a supporter that you are for Vice President Kamala Harris, my question to you is, I think there's a question mark out there in the public right now, is how much do you think the Democrats are voting for her or they're voting against Trump? And maybe the question also relates to, does it matter?
Yeah, I think it does matter, and I think it's both. I think you've got a lot of folks out there who, including moderate Republicans, who look at this very stark, authoritarian blueprint that Donald Trump is portraying and say, you know what, that's not me. I don't want to be a part of that. And at the same time, I think you see an uplifting, this is what America has always been story in the Harris-Walz campaign that people are attracted to. Does it matter? I guess every vote is every vote, right? So winning is the name of the game here, but I think it's a mix of both.
So, Governor, just if we went on a checklist, you like all the things that you like Kamala Harris, not just against. So, what are? Let me ask you: do you believe we should abolish the filibuster? And you can answer after I do it. How about getting rid of private insurance? How about taxing unrealized gains? How about nationalizing energy? How about mandatory gun buybacks like Australia? How about decriminalizing illegal crossings, ending cash bail, child gender reassignment surgery being paid for in prison? I mean, what are your, raising the corporate tax rate, what are your favorite proposals from Kamala Harris that make you like her so much? Which of
Joe,
those
for a Jersey guy, you sound like you're on the Trump campaign, for crying out loud. Come on, man.
Okay, well, which of those
you're
do you
cherry
like?
picking stuff.
Which of those do you like? Which of those do you like? Which of those are you in? Are you in favor of ending the filibuster? We'll go one by one.
Yeah.
Are you?
It is. I'm not sure on the filibuster, honestly, but I think
So
getting
you're not
fair
going to
tax
talk about any
rates makes
specifics
sense.
of what's that?
I said I think fair tax policy is
What does that
sensible.
mean? Fair. What does that mean? Fair.
Fair means you pay what you should pay.
Well, you know I live in your state, Governor. Right? Do you think if I pay 55% total, is that fair for me, or do I need to pay 80%? What would be fair for you? Because I live in your state.
I know, Joe. I said that up front. Believe me, I know you do. But you sound like you're on the Trump campaign.
No,
I don't know what the right number is, but
go ahead, Andrew.
Well, no, I was going to say what I think is potentially unfair. I think that there's a number of things. There are a number of issues that were embedded in those questions of the governor just now.
He didn't answer a single one about what he's in favor of.
Well, but I think there were a number of things that she's not in favor of. And that's
Joe,
the
hold
point.
on a second.
She's on the record on every one of these things.
Governor?
Many years ago.
Guys, hold on a second. We passed a millionaire's tax 5 years ago. Everybody, Joe, including you, said it would drive people out of New Jersey. We have more millionaires today than we've ever had in our history. So tax fairness isn't necessarily a bad thing.
We have a very progressive tax system. Do you think we have a progressive tax system in the United States? Do you think it's not progressive enough, or are you talking about billionaires? I'm not sure because you know how much the 1% does pay the lion's share of taxes, of federal taxes. So what does fair mean?
Color me open-minded. How's that?
I'm sorry?
I'm open-minded. I've obviously voted with my feet. We have a millionaire's tax in New Jersey.
Would you tax unrealized gains?
We're not a low-cost state to live in, but we give you an enormous amount back for what you pay.
Are you
We're
in
the
favor
number
of
one state in
taxing
America to raise
unrealized
a
gain?
family.
But she has not made that
Not
argument.
wild.
She's made
I'm
the
not
argument.
wild
She
about
says
that.
she doesn't want to. Go ahead, Governor.
No, I'm saying I'm not wild about on unrealized gains. But I'm
What are you wild
open-minded.
about? What are you wild about? Not Trump?
Here's what I'm wild about. I'm wild about a democracy that works. I'm wild about the rich history of our country continuing for the future. I'm wild about opponents having a voice and having a seat at the table, as opposed to being thrown in jail or hunted down by our military. That's what I'm wild about.
But we might throw Trump in jail. The Justice Department was not weaponized under Trump. It's been weaponized under the current administration, right?
I mean, Joe, come on. You got to be kidding me.
Okay. I don't know. I haven't
You gotta be kidding
seen
me.
Trump. I haven't seen Trump throw anyone in jail, but I have seen a lot of lawfare against Trump.
There's no rational viewer right now watching this discussion that thinks that Harris is the authoritarian threat versus Trump. There's no one who's reasonable who comes down in that conclusion. How could you?
You just look around. I mean, you want me to go over the 5 cases that we're talking about? Alvin Bragg. You want me to? Those were all misdemeanors, trumped up to felonies after the statute of limitations. You don't think that's lawfare?
Alvin Bragg doesn't work. Alvin Bragg doesn't work for Kamala Harris, and you and I both know that.
Okay, I'm talking about if either candidate is in danger of using the Justice Department to punish his enemies. What we've seen recently is not from Trump doing it. I mean, you might. What is there some reason you think that's going to happen with him? It's his rhetoric.
Joe, I'm having a hard time believing we're having this conversation. Are you kidding me? Did you see what happened on Sunday in Madison Square Garden? Have you followed what he said about what he's going to do against his enemies?
Joe Biden said last night that all the Trump supporters are garbage, and that wasn't a joke. That was the president, sitting president of the United States, and that wasn't some comedian that no one knew what he was going to say. That was Biden himself. You saw it? Did you see that? Trump supporters are garbage?
I saw it, and he said specifically it was about the people who were in Madison Square Garden, and you and I both know that that's what he said.
So they were garbage. Okay.
Governor, I want to thank you. I do want to just say one thing to contextualize it because I think it's important. There's one important point to be made. President Trump, when he was the president of the United States, did seek to prosecute Comey and Hillary Clinton, and his own Department of Justice refused to do it.
Okay.
But he asked them.
And that's a good.
to do it.
Then there's an example of on that side.
I just want to be
the other
100%
side.
clear of the context of this. And it's, I say that, I hope I could say that apolitically, if that's even possible.
Come on, Andrew. You don't even need to try to say it apolitically. Just say politically. We have these discussions every day. Okay. All right.
All right, let's talk about the markets and a weekend note from our next guest who said he couldn't recall another 9-day period with more potential economic importance. Joining us right now is Barry Knapp. He is managing partner and director of research at Ironsides Macroeconomics. And Barry, let's talk about that. What do you mean that you haven't seen another 9-day period with more potential economic importance? What do we have ahead of us?
Well, you had a good discussion with Steve Leisman a little bit earlier about some of the economic data. I suppose I would toss in the employment cost index on Thursday as well. In addition to, this is belly week, so I joke about that, but this is when the Treasury issues all the securities in the belly, so we struggled to take down 2-year notes and 5-year notes on Monday, and then we received the financing requirements for the next 2 quarters on Monday afternoon at 8:30. We're going to get the Treasury's mix of bills versus coupons of bonds. We all know they've been issuing more bills to try and keep the long end from getting out of control as a consequence of all this supply, but it's very likely they're going to need to increase that issuance next year in the first quarter. So we have a lot of Treasury supply. We have information about how they're going to be supplying those Treasuries. The economic data, which I would really focus on the labor market data. We got that very strong September report, but it's been weak for the better part of the year. And then, of course, getting into next week is the election and, of course, the Fed meeting. And I do think the Fed has the makings of having a discussion about the maturity profile of their portfolio and whether they ought to be facilitating all this government spending. So to me, it's just a wild sequence of 9 days, amidst that, an interesting election.
The other issue is just what you really think is driving yields higher in the Treasury market. We talked with Steve about that earlier too. Just this idea: is it a potential for weakness in the economy? Is it concern about the needs for the Treasury with the amount that's coming up? We've seen higher yields, and that it poses a problem, just in terms of what it means for budget deficits for the United States too.
Yeah, there's no doubt that the supply issue is a very big deal. I reject people that say there's been no evidence that the Treasury market hasn't reflected the increase in supply. We saw a very sharp sell-off in the first quarter of 21 after the American Recovery Plan was passed. We saw another sharp sell-off at this time last year. In both cases, Treasury and the Fed took actions to try and tamp that down, but the Fed can't keep monetizing that debt forever. One of the papers presented at Jackson Hole provided plenty of academic evidence that supply is starting to affect the market. So that's clearly an issue, and I agree with Torsten Slok about that. We had a series of stronger growth numbers. The question is, like the bear market from 1951 to 81, the only thing that interrupted that bear market was recessions or periods of extreme weakness. The only question is the labor market really as strong as that September number implied? If we get a weaker number this one, I think people will look past it a little bit. But I do think the small business sector is weak, and that's really the only thing that can prevent the Treasury market from retesting 5%.
What do you tell investors to do here if you're concerned about some of these issues? If there's so much riding on this, you put more money into the market ahead of this or not?
Not ahead of the Fed, although we've had a pretty healthy position in tech, communication services, industrials, energy. So I would stick with that, but I'd still have a healthy cash holding. You and I have talked about that a couple times this year. I think that still makes sense because there is so much risk. That tax policy issue is a big one.
Barry, thank you. Barry now.
All right, coming up, breaking jobs data, ADP private payrolls for October next. Stay tuned. You're watching Squawk Box on CNBC.
Welcome back to Squawk Box. We are now approaching October's ADP employment report. The futures, take a look right now. We got some red on the screen on the Dow. NASDAQ up just marginally. You have the S&P 500 up as well. That number is going to be coming to us in just a moment, like now, maybe.
Yeah, I think we can do it now, Andrew. And I'm going to tell you what's below. ADP October jobs numbers for the private sector up 233,000. That's against a forecast of just 113,000. Service, good sector up 22,000. The service sector 211,000. Now there's the non-farm payroll estimate for Friday, which is government and private sector at 100. And I don't know what the street does with that. By the way, the ADP was revised up 16,000 from 143 to 159, so closer. But last month they still were potentially underneath. So I don't know if this is potentially catch up. But we have Neil Richardson here. We'll talk to her in just a second. I'll give you a little more of the data here. The jobs were substantially in large businesses. Small was up just 4,000. Medium, that's 50 to 499 workers, up 86,000. There's large business up 140,000. And where were the jobs? Where the places where they've been? Education and health services up 53. Trade, transport, and utilities up 51. Leisure, hospitality up 37. Construction doing well. Professional business services doing well. The only decline in any sector was manufacturing, down 19,000. And now, as promised, as advertised, as promoted, you want to talk about?
Well, just before we get to
okay.
a lot of questions for her, but I'd like to see, the futures haven't moved a whole lot. I'd like to see what yields are doing in the Treasury market, because this morning, Steve, you told us that the only thing that's going to put pressure on yields at this point is weaker economic data. This is certainly not that. And 425, sure enough, is the 10-year. Earlier this morning, I think we were at 422, 421 when we checked, so a little bit higher.
Yeah, it's a little bit higher. But here's the wage data, Becky, which again is taken from millions of actual paychecks, up 4.6%. That is down a tenth from the prior month, and that's job stayers, people staying at their job. And then going over to job changers, that's 6.2%. You would expect that to be higher, but that is also down 0.4% from the prior month. Now, I think we want to, it's Andrew's job to introduce Neela.
I wanted that. You can do it. You're right there.
I almost did it.
You can do it.
Okay, ladies and gentlemen, let's bring in Neela Richardson.
There she is.
Chief economist at ADP, the person who puts all this together.
Numbers
the one responsible for revamping. I will tell you.
How long have you had to know these numbers in your head?
I'm still constantly remembering them, so I'm ready with the numbers. But luckily I have Steve here.
I want to tell you though, you probably know this already, your plus or minus absolute difference over the past 3 months is 29,000 with the payroll numbers. I know you don't even like that to happen because you're saying you're not predicting it, you're giving your own different estimate. First question, how do you treat strikers?
So as long as a worker, and by the way, good morning, I'm thrilled to be here in person. As long as the worker is on payroll, we count them. So whether they got paid or not, they're still counted in our data set.
How does the government count strikers?
They count the number of people who received a paycheck. So if you work an hour or 40 hours, it makes no difference.
So if the strikers did not receive a paycheck, they may not be counted in the government.
That's right.
And you do it because they're still on payroll.
They're still on
they show up in the computer as being an employee of the company.
They're still an employee.
So that could be a difference, plus or minus 30,000
Okay.
between it. How about the hurricane? What did you see in terms of the hurricane?
So we saw a quick effect in terms of the number of people who got paid. So we have two types of data. What we report are people on active payroll, but we still have paychecks. We still know who got paid during that week.
Right.
And during the reference week, which is when Hurricane Milton touched base, the reference week is the week we count in terms of the jobs numbers. We saw a 7% dip in both North Carolina and in Florida of workers who received a paycheck. That next week, the week of October 20th, it rebounded. So yes, there was an effect, but it was short-lived.
But that did not show up in your data because they were still on payroll. However, they may not show up. So this is fascinating, and let me tell you why. Because the whole game with the Friday number is looking through the distortions to understand the underlying strength. What you're saying is there's a lot of underlying strength if these people were not fired.
That's right.
And that we should really look through a low number because it's strikes and it's hurricanes, and that the number is maybe more in line with what you're saying.
I think so. We expected a cloudy, messy October for a variety of reasons. two of which you just outlined. But what the ADP data does is make that clear. We know who's on payroll, right? And it rhymes with other data like the initial jobless claims that also saw a peak up and then a dip down subsequent to the hurricane's landing.
So does the Fed realize that and pay attention to these other numbers instead? And I'll ask that of both of you.
I think the Fed is paying attention to a lot of economic data. You can't be data dependent for 3-4 years and not see the whole scope of private sector and public sector data. So yes, this is probably an input along with other inputs of how the Fed is making their decisions. And if they look at the grand scope of data, they're seeing a broadly resilient economy, especially in October.
You know, we have to wrap because we're going to break through more numbers, but here's a question. What about the wage data? The wage data seems to be coming down. The Fed has said it does not see the job market as a source of inflation. Is that your read from these numbers?
For an inflation watchers, this is the most important point. The economy is having its cake and eating it too. It's creating all of these jobs while at the same time wage growth is coming down, and that's good news for inflation. So we're really in a sweet spot in October. I don't know how long it lasts, but I'll take it this month.
This number today is going to be a big factor in thinking about understanding the number on Friday.
Sure.
And I know people dismiss the ADP number because it may or may not correlate, it may not be helpful to them in their models, but this is something that you have
Gotten
to
better
consider.
since she was here, right? It's gotten better. Who was there last time? Sandy?
Well, if she's not here, all you got is me.
No,
so
it's gotten better at ADP.
We'll continue this.
Of course
Squawk Box,
it's better.
rolling on right after this.
ADP's got
Hello.
Meta is going to report after the bell this afternoon, and Julia Borston joins us now with a look at what to expect. Hey, Julia.
Well, Joe, with Meta shares doubling in the past year and 63% of analysts rating it a buy, expectations are high for Meta going into earnings after the bell. Those expectations only heightened by the better than expected results out yesterday afternoon from two smaller ad-supported platforms, Snap and Reddit, along with Google, all of their stocks higher going into the market open this morning. Now, analysts expect Meta to grow its revenue 18% to $40.3 billion a slight deceleration from last quarter's 22% revenue growth, while earnings per share are projected to grow by 20%. Meta's AI investments and whether it increases its CapEx spend will be very much in focus, a possible headwind for the stock. As will the positive impact, though, of AI. After last quarter, Meta boasted that its AI assistant is on track to be the most used in the world, and it explained how AI drove results for advertisers and then, in effect, for Meta. Now, there's some other key areas to watch as well. Meta's progress monetizing Reels, plus some tough comparison with last year when Chinese retailers were spending more on ads. So, Joe, based on what we've heard from all those companies that reported yesterday afternoon, the market is pretty healthy. There seems to be some robust ad market commentary there, but we'll hear about all of that and more when we have an exclusive interview this morning with Snap CEO Evan Spiegel. That's coming up in Money Movers at 11:50 a.m. Eastern. And then, Joe, of course, will have those Meta earnings after the bell.
Yeah, so many things to parse. You know, is it all about the ad market now, or is it about AI spending, or is it about? I mean, there's so many different the tech. I mean, everything. The landscape is changing so quickly that I feel like I need to go back to school or something.
Well, here's the thing with Meta is they've managed to grow their revenue and even in certain quarters accelerate the revenue regardless of what was going on with the ad market. And I think what we've seen that's been so interesting over the past couple of years is Meta really pivoted from talking about being a metaverse company to being an AI company. And while they're talking about making these long-term AI bets, we're seeing all of these AI investments pay off in the near term, not only with their AI chatbot, but AI simply making their ad products better.
Okay. All right, thank you, Julia. Up next, our first look at third quarter GDP. We already got the ADP number. This could be interesting too. Squawk Box will be right back.
we're just seconds away from the first look at third quarter GDP. The futures this morning showing the Dow down by about 75 points, NASDAQ up by about 20. You've got the S&P up by about 3 points. Treasuries show the yields have picked up a little bit this morning. Right now, the 2-year's at 4.13, the 10-year's at 4.26. Rick Santelli is standing by at the CME in Chicago.
Yes, this is exciting. Our first look at third quarter GDP, 2.8%. We didn't grab that 3 handle, 2.8%. Many were looking for 3. 2.9-ish was probably the highest estimate in terms of percentages. Rear view mirror is 3%, of course, and the quarter before that was 1.6, so you can see where 2.8 fits in. Let's look at consumption, shall we? We're expecting a number around 3.2%. Zoom, zoom, zoom. 3.7%. 3.7%. That's the best, going all the way back to the first quarter of 23 to 23. That should boost yields a little bit. And if we look at the price index, expecting 1.9, rear view mirror 2.5. Good news. 1.8, 1.8. 1.8's the latest since it was 1.5 the last quarter of 23. So, you know, you have two ways to look at it. Nice progress, but been there, done that at a lower level already. And if we look at core price index quarter over quarter, same scenario. Came in very close to expectations at 2.2, well below 2.8, and 2.2 fits in last quarter of 23 when it was 2.0, 2.0. We see yields now hovering right around 426.5-ish. And do keep in mind, before ADP, that was at 422. And before ADP, the 2-year, which is now just a whisker below 414, was at 408. So you see these yields moving up and led by the short end, which makes sense because of the implications for the Fed. Of course, the Fed lowered rates because of a weak labor market. We've seen very few signs of that. On the inflation front, regional areas to Germany have seen hotter inflation already released. Top of the hour, we see the actual German number. You want to pay very close attention to some of those across the pond numbers. And finally, we still have many important data points for the rest of the week. Tomorrow, employment cost index, personal income, the PCE numbers. So this is going to be a very, very big week, and it's the quiet period because of the next Fed meeting. Becky, back to you.
Okay, Rick, stay right there. Before we get all those other numbers, we do have some breaking news from the Treasury Department. Megan Casella joins us right now with more on that.
Hey, Becky, Treasury has just announced its refunding plans for the coming quarter, planning to auction off $125 billion in securities. Now, that matches expectations. It holds exactly in line with the past couple of quarters, so no surprises for the Treasury market here. A few more of the numbers for you guys. Treasury says it'll be refunding just over $116 billion, raising about $8.6 billion in new cash. The breakdown in tenors will also remain the same as before. So that's a $58 billion auction for the 3-year, $42 billion for the 10-year, and $25 billion for the 30-year. And the other piece of good news for the market today in this release, Treasury is maintaining its forward guidance that it continues to expect to hold these auction sizes steady for what it says will be at least the next several quarters. That language has been in there for the past few cycles, but there had been some speculation that it could change or get cut this time around after Treasury said on Monday it was planning to borrow more than had been anticipated early next year. That's because it's beefing up its cash reserves ahead of the next debt ceiling fight, potentially having to borrow more money in the next administration. But for now, guys, Treasury is sending the signal of stability and saying they expect these auctions to hold steady in the months to come. Joe, back over to you guys.
Very good. Thank you, Megan. And for more on the new GDP and Treasury data, let's bring in Dana Peterson, Chief Economist at the Conference Board, our own Steve Leisman, Mike Santoli as well. Steve, you remember earlier this week, we were talking about something we were going to get on Wednesday in terms of coupon size, whether we were going to start worrying about anything.
No, I didn't hear anything in what Megan was saying. I'm so glad she did this. Did the story she reported?
You did, yeah. Not you. But the stability, so...
They don't want to make waves right now, Joe.
But nothing
there may be waves to be made next quarter and the quarter after that. There's a huge and massive and interesting discussion for another day about the debt ceiling and how the Treasury manages a January 2nd debt ceiling with an August running out of money because they have all these different ways of accounting and yada, yada, yada. But that's not the story for today. They're keeping it kind of quiet. They still need to I love your comment. Who made the comment that I grade the Treasury on pass fail? That's they go out and they do something like it.
And this other guy who wants in right now, you grade. You're a tough grader, Rick. You don't grade on a curve.
No, I don't grade on a curve. You know, here's what I find fascinating. We see that the refunding announcements come out. If you've been following these packages, whether it's, 2s, 5s, 7s, 3s, 10s, 30s, they keep going up a little bit. The notion of, wow, expectations match the size of the auctions, so, it's good news. I have an issue with that. Look at what these auctions were like a year ago, 2 years ago, 3 years ago. They're going up in size. That's why, other than today when we saw yields come in lower, now they're moving back up. It was because of a breath of relief after the auctions we already had. And 2 out of the 3 were very weak. The 7-year was strong yesterday. And I don't mean to change the, tone of what we're discussing here, but this supply issue is tantamount to anybody thinking about trading fixed income, investing in fixed income. Globally, there's going to be so much extra issuance, whether it's China, the UK, the EU. France is talking about trying to cut spending and less issuance. Don't believe it. Don't believe it's going to happen anywhere. And a lot of the money's already spent that we're issuing the debt for.
Can we talk about this GDP number? Because there's a...
You want to ask Dana? Bring Dana in?
No, I don't want to do that.
You don't want to bring...
I tried to do that earlier. I don't think I did a good job at it. I think that's not my
I think you're good. Dana, will there come a time where this isn't so easily digested? And is a 10-year telling us that it's closer than we think or not?
Well, I mean, when I look at the data today, I mean, we had 2.5%, so 2.8 is not that far off. We just missed on government, which is really outsized. But I think the key thing is that consumers continue to spend. They spent on a lot of goods and also services. They bought cars, they bought furniture, and that's because prices are falling. Residential investment was weak again, but we think that's going to improve as the Fed starts cutting interest rates more. When it comes to trade, we knew there'd be some volatility. Exports were very strong, but imports were stronger, certainly because companies were trying to get ahead of the port strikes, which ultimately didn't happen. But all in all, I think this is a strong report. And I think the fears about the U.S. going into a recession, those kinds of fears are very misplaced.
Dana, I just need to do a double take on this data because I don't know if I have it right here. I'm seeing 1.5 on the headline PCE price index and 2.2 on the core. Is that your read? I think that's a lot below expectations.
2.2.
Hold on. The personal consumption expenditure price index increased 1.5% compared with 2.5, and ex-food and energy 2.2 compared with 2.5. Dana, Rick, I don't know what you're looking at, but that's what I saw there.
Yeah, I mean,
1.8 is the number on price index. 2.2 is the core price index.
Okay, but these are well below expectations, and we have the consumer doing 3.7%. We had Neela Richardson here, Dana, and maybe Mike too, talking about being in a sweet spot. That seems like pretty good a sweet spot to me.
I think we are in a sweet spot. I think Neela would agree with me that the labor market is doing okay. We've had some strong readings on payrolls, big upper revisions. The unemployment rates ticked back down. The only reason why it rose over the last year, where half of it was people saying, yes, I got laid off. The other half were new entrants and re-entrants. And looking at inflation coming down, yeah, the headline's coming down faster than the core. I'm a little bit worried about the core, but we're getting closer and closer to the Fed's 2%. And that's great. And that suggests the Fed can go ahead, cut interest rates over the next year or so and get us back to some new neutral.
Mike, I know there's a Santelli and a Santoli. I know it's you got to think hard, but you I don't know if you want to talk, Mike Santoli, about refundings. How about would you prefer Alphabet yesterday, Meta today, AMD? Where you want to go?
I mean, I usually, kind of try to throw it all in a pot and see what it boils down to. It's the way the market. Right now, it's netting out to an S&P 500 that's kind of flattish and hovering not too far from all-time highs. The move in yields clearly has the attention of all investors, and clearly there's a fear, because we know how much supply is likely to be coming on a consistent basis, to worry that it is going to basically be just too much. Right now, it doesn't seem to me that the clearing price in the way of yields is punitive for the economy, because we just showed you we're growing pretty well through this period. We're at a level of 4.25-ish on the 10-year where we were in late July, and we were breathing a sigh of relief that we were down from 5. Okay, so I don't think the absolute level matters. If you want to tell me that it's all of a sudden going to become a lot tougher to find buyers for this paper as we issue more and the yields are going to go up for non-economic reasons, that's going to be a problem for stocks. But right now, I think we're kind of navigating it okay. I mentioned the S&P at all-time highs. The NASDAQ has been doing more of the lifting in the last couple of weeks, but clearly yields have held, I think, some of the equity valuations in check. We haven't made any net progress in the S&P in like 2.5 weeks since the 10s went above about 4%. So obviously, you know, there's a whole interplay here that moves over time. I don't think we're at a moment, though, that seems like any kind of a breaking point.
And so Santelli, what was your point? Your point is that it's within expectations, but it keeps going up year after year as we just keep enabling more and more.
Targeting expectations is a mug's game, okay? Just because it's close to expectations doesn't mean anything to me. I want to know where it was, actually where it was and where it is. Expectations is this kind of fudge factor, and I agree with Mike on rates, but the difference is before we were coming down when we were talking about how nice 4.25 is, but now we're coming up from what people thought, many investors thought, could be at 3.5%. Fed cut 50 basis points. And it's the direction and what is causing it to go up. I have never witnessed such a market pushback on a Fed policy where the first rate cut, supposedly in a series of rate cuts, was so, you know, you remember when we used to watch some of those games with Richard Dawson, and you hear the that's what the market did to the Fed, okay? Didn't like the answer, didn't like the rate cut.
Survey says, there's an expression on Leisman's face that I've seen before when you say something, and I could definitely get something started if I were so inclined.
Yeah. Well,
don't do it.
I just think this is an interesting. I think it's an interesting moment, Joe. There's a lot of.
I said don't do it.
He said don't do it.
He said don't do it.
There's a lot of stuff on the table. What Rick is talking about is on the table. What Mike's talking about is on the table. Market has better growth, lower inflation numbers, and a Fed that can cut with the consumer going up 3.7%. And you have this large issuance of bonds that is bothering the market. But you also, as I forget who pointed it out, you have rates that are much lower than they were a year ago. That's important, but it's not unimportant what Rick is saying. So I just think you got to take everything, as Mike said, into account, put it into the stew. But I think it's kind of like a good outlook on all this. That's my take on it.
Okay, we'll end on that positive note. Thanks, Dana. Thank you, Leisman, Santelli, and Santelli, and me, and you.
Thank you. Coming up, the intersection of Silicon Valley money and the race for the president. Kelly Investments founder and former Facebook general counsel Chris Kelly is going to join us for that conversation. And a reminder, CNBC is going to be live all night long on election night next week. We're going to have the results as they come in and get the reaction from the biggest names in business. You can stay with CNBC all night long, and you can wake up with us on Squawk Box. We're going to be starting early at 5 a.m. when hopefully we'll have a better sense of where the country is headed. We're coming right back after this. Welcome back to Squawk Box. Silicon Valley experiencing some pretty big political polarization this election season, just like pretty much everywhere else in the country. Elon Musk and Mark Cuban have jumped into the fray. Others like Meta's Mark Zuckerberg seemingly doing their best to try to stay out of the limelight. Joining us right now on the 2024 dynamics in the Valley and in big tech, Chris Kelly is here as the founder of Kelly Investments. He's Facebook's former general counsel and chief privacy officer, now involved with crypto for Harris. Good morning to you.
Thanks so much for having me.
What do you think has happened in the Valley? There was always sort of a sense that it was a libertarian environment for a long time. Then there was sort of a view that it had moved very left.
Right.
And now it seems as divided as ever and maybe has moved right. I don't know.
I think that there's been a lot of movement from folks who had a more libertarian viewpoint to adopt some more conservative positions, or what Trump conservatism has come to look like. But I think that there's always been a solid base of pro-business moderates who just want to make sure that we are doing fantastic things to further the economy. And I think that that's where Kamala Harris has ended up leading the pack and is actually drawing people, including Ben Horowitz, Adam Andreessen Horowitz, back into the fold a bit.
Yeah, can you explain what happened there? Because we talked about it at the time when Ben Horowitz and Mark Andreessen came out quite publicly for former President
Trump.
Trump.
Podcast.
Yeah.
And then I think that Ben has known Kamala for years, and I think sort of said, hey, there's a real possibility that she's going to win this thing, which I still think is the most likely outcome, and that she actually has been pro-innovation over time.
Okay, by the way, you're a numbers guy. You just said you think that she's going to win, and you feel confident about it. Why do you feel confident about that? We look at, obviously, the polls. You can look at betting markets. You can look at all sorts of. You're in the crypto business. I don't know what you think the Bitcoin's rise signals.
No, I think that what's happened is I also know a lot about politics and what it actually takes to win a race. And she's just got a much better ground game than he does today. And the reason he's melting down right now on Truth Social is that he's behind in Pennsylvania and he knows it now. So I think you're going to see a lot of fulminating this week, and I think that you're going to see a big turnout. But I think that she's certainly in the better position. I'd much rather be her than him at this point.
Chris, just in terms of what we have seen from the Biden-Harris administration and what you see at the Department of Justice, going after some of the big names in Silicon Valley, maybe smaller entrepreneurs there are in favor of this, but how does that play out among investors? Not to mention what you see from Lina Khan, too.
Exactly. I think there have to be a variety of discussions about the way that this administration has gone about particularly in the crypto businesses. I mean, that obviously
Gary Gensler at the SEC.
Exactly. Gary doesn't have any fans in Silicon Valley, and he shouldn't. It's been a regulation by enforcement is always a failed strategy. But Harris has signaled that she wants to make sure that we are innovating in blockchain, that we are leading in America on that, and as has Trump. I mean, he's come around after calling crypto a scam to being quite aggressively in favor of, which I think.
But how does she feel about Lina Khan and the Department of Justice, and what?
So that I'm not sure about. I mean, I haven't talked to her about it. We built a relationship after I ran against her in 2010. That's what I left Facebook to do, was actually to run for Attorney General in California against her, and losing the Democratic primary after I think making a decent showing. But I think that there are a whole bunch of agreements among moderate Democrats and moderate independents that we need change in that area, and I think that's been expressed to her by Mark Cuban and by myself and others. And I think you'll see change. I'm not sure that there will be a replacement for Lina Khan, but I certainly think there will be a replacement.
So you're a moderate Democrat, right? And you ran against her. Did she run as a moderate Democrat?
At that point, I wouldn't say that she did, but she was a law enforcement.
What was she then?
So she had been the San Francisco District Attorney.
So she was not moderate.
I wouldn't say that she's not moderate.
No, back then. But did you run with the right or left of her? You were totally right.
It's a little bit hard to say. I ran to a very innovative strategy, being skeptical about her coming out of the San Francisco political establishment,
right.
That she would be innovative. And as it turned out, as Attorney General, she ended up doing some quite innovative.
But now you view her as a moderate.
I do.
Democrat.
At this point.
You do.
Yeah.
Okay. How come there are so many people? You just think it's just nasty political rhetoric that she's a far left Democrat? She has had positions in the past that were far left. Many.
Yes, that's true.
But you believe that she's now evolved?
I do, and I think that her service as Attorney General in California and as U.S. Senator from California got her to understand the technology industry a lot better than she had perhaps when she ran initially, and that how she actually governed was not a threat to the industry.
Okay, I was just talking about tech and things like that. There
I
was
have
a lot of
slightly different question for you, because we've been talking more recently about it, about sort of the shift in the way that CEOs, public company CEOs, oftentimes, obviously, you don't run a public company.
I don't.
Bill Ackman doesn't run a public company. Mark Cuban doesn't run a public company. Elon Musk does, interestingly.
Yes.
But you have something that has shifted in this world, which is public company CEOs seem to not be willing or want to enter the fray in the way that they might have before. The kind of thing maybe a Mark Zuckerberg might have said in the past. We talked about how in the old days Jamie Dimon would make donations in his own name. Warren Buffett was out on the campaign trail many years ago for Hillary Clinton, quite vocally so. And there's now big questions about, Jeff Bezos owns the Washington Post and what's going on with endorsements or not endorsements.
Right.
So, what do you think the role of a business leader should be in this election and in elections broadly?
Well, I think in this election, unfortunately, sort of a culture of fear has begun to pervade statements. I mean, when Mark is threatened by Trump with jail time over the possibility of him doing anything in the election, when Elon's got not just his thumb but his whole body weight on the scale showing Trump propaganda on X at this point, it's hard for people to say.
But nobody wants to be a fascist or a Nazi either.
Well,
do they?
They certainly don't want to be.
Right. So if they overtly or openly back Trump, they're Nazis. They're garbage.
I don't think that's the case. At least for most of the way that most people react. I think
You haven't seen people being called Nazis or fascists lately? You haven't?
I've seen a little bit of that.
A little bit.
Yeah. But I don't think that an average voter or the average executive
Let me
in
ask you
Silicon
this.
Valley finds it that
If
way.
you think that this election is as consequential as I think you do, don't you think that the people who are, frankly, the wealthiest in America should be the bulwarks? Meaning, to the extent that they should feel like they can stand up and say whatever they think. That may be, by the way, that they are voting for Trump or voting for Harris, but that this sort of everybody being beat into submission thing, is that good for democracy or not?
I think it's terrible for democracy, and I think that we need to have a major reset after this election. I think that what we're doing right now is unfortunately kind of baked, and it's not going to be pretty for the next week, and I hope that that doesn't get extended much. But I do think we need a full reset in America to think about how public people, make their statements about how they're voting and what they believe about democracy.
Chris, thank you for coming this morning. Appreciate it.
Thanks so much.
Squawk Box will be right back. Today's top earnings mover include Caterpillar and Eli Lilly. Tonight after the bell, we'll get Meta and Microsoft. And joining us right now to talk it through is Stephanie Link. She is Hightower Advisors Chief Investment Strategist, also a CNBC contributor. And why don't we start with Eli Lilly stuff, because this morning it's down more than 10%. Just some concern about demand out there for these the Zepbound, the weight loss drug.
Yeah, no, like, look, they're very high expectations, up 55% year to date. At 67 times earnings, you needed to beat and raise, and they didn't. They lowered the high end of the range by $600 million compared to the last couple of quarters, where they actually raised by $2 to $3 billion for the full year in revenues. But just take a step back. The total addressable market for obesity is $150 billion by 2030. Diabetes is the same. The company just grew revenues 42%, excluding Mounjaro and Zepbound. Revenues grew 17%, and it speaks to the overall portfolio within oncology, immunology, neurosciences. So, and then the one fact that, or the stat that the CEO talked about, is sequentially prescription growth grew 25% for Mounjaro and Zepbound. So I don't think it's a demand problem. I think they're trying to control the customer experience. I don't own it, but I would love to take a look at this. Down 10%. It's a very good quality franchise.
Okay, let's talk about Caterpillar, because the Dow was higher this morning in the futures markets before we heard from Caterpillar. That stock down 3%. That brought the Dow down as well. What do you think about what you saw?
I mean, look, the stock is also up a lot this year, up 31%, and it's not exactly cheap at 18 times forward. It's not a surprise that construction industries was weak, as well as resources. The highlight was energy and transportation, and the big highlight is operating margins, 20% on an adjusted basis. If you go back to 2017 to 2022, their operating margins were 14%. So they are structurally doing the right things on the margin side, and I think you want to continue to own this as an onshore, reshore play, and certainly power.
Steph, thank you very much. Stephanie Link. We'll see you a little later, Steph. In the meantime, keep an eye on shares of Supermicro Computer. They are plunging after the company revealed in a regulatory filing that DY has resigned as its registered public accounting firm. EY, not DY, said that it had questions about the company's commitment to integrity and ethical values in connection with an accounting review. That stock is now down by almost 23%.
That's never great.
Yeah, keep an eye on it closely. Anyway, that does it for us today. Make sure you join us tomorrow. Right now, it's time for Squawk on the Street.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures are split this morning as Q3 GDP and ADP employment both come in strong. Actually now red. It's Caterpillar's miss that's going to weigh on the Dow. We'll get to Lilly, Reddit, Google, AMD, and more on the way tonight. Our roadmap begins with this disappointing weight loss drug sale weighing at Lilly. Shares are getting crushed ahead of the open.
Plus, Caterpillar cutting its annual sales forecast on slowing demand. And Google parent Alphabet, it sees double-digit growth as AI bets boost that cloud business in a big way. And speaking of the AI boom, AMD's Lisa Su, she's going to be joining us exclusively. That's just a few minutes from now.
Let's start with Lilly. Down sharply in the pre-market. The company does post a quarterly miss, lowers the high end of the full-year guidance. Sales of the popular diabetes and obesity drugs, which of course have powered the company into the top 10 list of U.S. megacap, coming in below consensus. Jim, we had Rick's on Squawk in the last hour.
Yeah, look, I'm a big fan of Lilly. I own it. Sold a lot at 960 on this thing. Thank heavens. That just better be lucky than be good. Frankly, it was just discipline. But here's what I'm thinking. The explanations were not sufficient, but not in a negative way, because the actual estimate cut is not very big. You're talking about $500 million. I know that's a lot. It sounds like a lot of money, but the stock is going to be down gigantically. Yeah. David, here's what happened, I think. They could not meet the demand, so they didn't want to stoke demand, because then they'd run up against the FDA shortage rule, would then let the hims and hers in there to take some, take a lot of share. Right. They are building, unless you think David Ricks just fell off a turnip truck, okay? Let's remember that they are building 1.8 billion manufacturing in Ireland, 4.5 billion in the Lilly Medicine Foundry. They're opening just plants all over the world. Now, maybe they mistook demand, or maybe they didn't get the correct amount into the system and that you could not get Lilly, so they drove you to Wegovy. regardless, what he said today was not sufficient to make a decision on whether you should buy it or not.
Why?
Why? Because he said in one breath, he said, listen, we couldn't meet the demand. In the other breath, he said, we have a lot of supply. Now, I've never seen a company have too much demand, have too much supply, and yet somehow that's okay. It's a high multiple, high momentum stock that is not allowed to miss in this environment.
Right. It's hard to imagine that there isn't demand for their product.
There's massive
There
demand.
is, without a doubt,
Massive
demand for their
but
product.
you know what?
It's
If
not
I-
as though this is somehow suddenly falling off.
No.
In fact, there's this long report, I think it's from Citi today, on GLP-1s.
Yeah, GLP-1 is very positive.
And it's very positive about their long-term
It's like
implications.
One Piece, though, and it came out on the wrong day.
Yeah, just ChatGPT it. That's what I did. Give me a quick summary.
Look at Hotshot with the ChatGPT.
Paying $20 a month
All right,
for this thing, it might as well do something for me.
I'm going to give you the most critical read you're going to get. There is a person who is the CFO of a company called Alphabet, who left a company called Lilly. And at Alphabet, Anat Ashkenazi gave you one of the best narratives ever. Ruth Porat, sorry, I don't mean to slight you. You know, I think you're the greatest. But this was one of the tour de force conference calls at Alphabet.
So you're already making the turn here from Lilly to Alphabet? That's it? We're done with Lilly?
No, because Anat Ashkenazi was the CFO of Lilly.
All right, so
and she knew how to tell a story.
Okay.
She knew how to tell a story. David, as much as I like him, did not know how to tell a story.
So this is a failure of storytelling.
What we have here is a failure to communicate. I honestly, I am so baffled. It was a big position by Charitable Trust. It just ran too high. I said, oh, we'll get back in when it goes down. But I think that David misspoke. I think
David Ricks.
David Ricks. I think he should have said, we misjudged the demand level. And when we did not overwhelm with supply. So you know what? You got Wegovy. And he did not say that. Because people are very reluctant to say, look, they went and gave you the other guy's stuff.
Called us till 10 o'clock, I believe.
Well,
so
no, but
maybe
I'm
they'll
saying
have an
that-
opportunity to get more.
he
You're
has-
talking about his communication on the interview he did
But
earlier today.
I think Annette is a person who was integral to what David would say, is how I feel.
The former CFO of Lilly, who's now
Right,
the
yeah,
CFO.
I don't want to go too fast. Annette Ashkenazi leaves Lilly, which is in Indianapolis. They're Anthony Rich, they're not doing that great there.
First football reference, if you're keeping track, 5 minutes in.
So she leaves. I always thought she was unbelievable. I met her through the CFO Council. She's an extraordinary person. I thought she told the story better than anyone and understood the story better than anyone. David Ricks understands the vast panoply of drugs. She then goes to Alphabet. In that conference call at Alphabet, you heard a person that organized the Alphabet story like it's never been organized. So maybe it's possible to believe that Annette was integral to telling the story at Lilly, and we forget how important CFOs are, but I think she might have advised David Ricks differently from what David Ricks said today. Because as far as I'm concerned, David Ricks said, boy, we are overwhelmed with demand, and we're overwhelmed with supply, and all people heard about was overwhelmed with supply.
Right. Well, they have spent $10, $15 billion in manufacturing capacity this year alone. And at these levels, Jim, this would be the worst session for Lilly since March of 2020.
Deservedly so. March 2020, of course, COVID. Deservedly so because I am a close observer of this company, and I watched the interview twice. And I came away and I said, can I watch it a third time? But no, I had to come here and do the show. And I find that situation a situation that is beyond description. Because you could not make sense, heads or tails, of what Mr. Ricks has been on my show many times. And I couldn't make sense of it. So that's why I default to the fact that they are spending billions to meet demand, and that's the way you view it, and you, heaven forbid, buy the stock.
Well, Jim watched the interview twice. For those who missed it, let's give them the chance to watch a piece of it once. This is Ricks on Squawk earlier this morning.
We want to make sure people, when they get a prescription, can fill it. We understand that's a frustration for our customers. So we relax that, constrain a bit. And so there's a little lighter demand in the year and now projected. But overall, I think we're in a pretty healthy shape, and underlying demand is extremely strong.
Where did the supply go? Now, if you go to CVS or you go to Walgreens, they're going to drive you toward Wegovy because they didn't have enough Mounjaro. And yet Mounjaro sales were soft. That tells me that there is a critical problem in managing what they had to sell to the stores. If they were really worried about the so-called FDA shortage, they botched it. So what I'm willing to say is business is really good. So good that they got it wrong. But if you take a long-term view, and he did not even discuss, he was so caught up in, he didn't discuss all the things that are going to be right for Lilly. This was a game that he did not play well.
Right. And we haven't even gotten to some of the comments from, say, RFK Jr. this week about diabetes drugs and policy risk, but maybe later. Let's get to Alphabet really quick. Google's parent up sharply this morning on that report last night. Quarterly beat, strengthened the cloud business. Sundar Pichai did say the company's investments in AI are paying off. Here's what he said about search and AI on the call last night.
I expect search to continue to evolve significantly in 2025, both in the search product and in Gemini. And so, you know, I think that's the opportunity ahead. I think we are in early days of what is a powerful new technology, and with it, I think we can do a lot more for our users, but at the same time underpin it on the foundational bedrock of quality and trust and user experience, which we've always done. So we are at 1 billion people. I don't necessarily see a constraint there.
So there's that, Jim, and of course, we'll get some Azure numbers tonight.
This was a fabulous call. There's a CFO there, by the way, and that is Ashkenazi. I'll tell you why it's a fabulous call. Because you had accelerating revenue growth in Thomas Kurian's unit, Google Cloud. The gross margins there are immense. They are now in the conversation. At one time, I thought, man, Thomas Kurian came in in 2019 and made a series of bold assertions of which I completely doubted, and therefore I was revealed as someone who was pantsed by him when I talk. That's a technical term, being pantsed. Yes. I thought that YouTube was amazing. Mentioned the NFL, David, but I'll spare you. I thought that cloud was incredible. I thought that the costs, dramatic decline in costs, was amazing. And the amount of money these guys are making, Carl, is so big that I understand what, if you were a government official in justice, you say they're making too much money, which happens to be the ethos, I believe, of the Biden administration. This was one of the best quarters I've ever seen from the company that people thought was going to be the weakest Mag 7.
That's true. And the worst performer, Mag 7 on the quarter. Although you did say this morning you thought Reddit was even better story.
Well, Reddit's unbelievable. I mean, I had Steve Huffman on last night, and Reddit wasn't supposed to make money. They were supposed to lose money. Instead, they made money. They had 100 million, 100 million people, 97 million, 100. But you have, can we play? Do we have time to play?
Well, I'm sorry, I apologize. We can circle back to Reddit. I do want to ask you, though, some argue that the CapEx coming in just basically in line is directionally negative for chips. And we're going to talk to Lisa in a few minutes.
Talk about that. I remember, yeah, and that talked about $13 billion spent in the quarter, and that's got to spend much more next year. That said to me, all systems go. AMD is another convoluted one we're going to get to. Convoluted meaning down really badly, because who can tell when you have a momentum stock, it's beat and raise or else die. And Google had beat and raise galore, and a really well-told story by both Pindar, but really Annette made me feel fantastic about this.
You think YouTube and search could have beaten by more?
No, these were amazing. I think if you work at YouTube, like I say you're working at a linear TV, and I used to be head of, let's say I taught sales. I'd say, would you please make 50 more calls because we're not making the numbers. Here at Alphabet, it's like, look, I know you can't handle all the calls. I know that there's too much business. Just prioritize. That is one of the most unusual situations I've ever seen.
The numbers continue to be stunning for Alphabet. Just the numbers themselves. Again, I go over this every time, with whether it's Amazon or Alphabet or certainly Apple and Microsoft and Meta. $13 billion in CapEx in a quarter.
And they need to spend more. They didn't spend enough.
I know, and they will. I mean, they say they're going to keep that where it is, roughly similar levels to the third quarter is what the CapEx will be. Looking ahead in the fourth quarter, on the call is what they said. And by the way, even with that, they're still able to buy back, what was it, 15.3 billion in stock, another $2.5 billion in dividend payments. The numbers are just stunning, as we discussed.
These are countries.
Yeah.
These are countries with a balanced budget.
Yes, they are. It is incredible.
I have to tell you, I was just.
I was in awe. What can I say? I was in awe.
I mean, there was a time, Jim, when not that long ago, when the telecommunications industry was by far the largest spender on CapEx in the country.
No.
One of these companies now, I think Microsoft will equal all the money spent in telecom for CapEx this year.
No, these are companies that are unusual in the sense that I've never seen it. There's just too much demand, but they are doing a good job trying to meet.
And obviously, a lot of it, Carl, is being spent on building new data centers, as we
Yes.
know.
Oh my
and
God.
now energy.
And then
I gotta get
finding the nuclear power sources
let's-
for them that you need in
I mean,
7 years.
yeah. I mean, these guys would activate Chernobyl if they could.
Well, we have our own SMRs.
Space is the answer. Data centers in space.
I used to sleep next to Rancho Seco in Sacramento because that's the only place they wouldn't rouse me when I was in my car because it was a nuclear power plant.
Oh, it was near the power
Get
plant.
that
This
son of a bitch
explains so
over.
much of your everyday
Holy
behavior.
cow!
All the radiation.
I lost all my hair sleeping next to Rancho Seco.
Is that where it happened?
Yeah.
Oh.
Okay. Let's. Holy cow! Let's go to AMD. AMD shares are yes. Let's. Oh, instead of saying Trump, why don't we just say obliterated? I don't like to read copy because I'm not a copy reader, David. And we got to find out what the hell went on here. It was a better than expected third quarter, but people are saying that the forecast was light. I question that, but that's okay because we've got Lisa Sue here who knows a heck of a lot more about the company than I do. Lisa, first of all, welcome. Fantastic. You're great. All right.
Good morning. Good morning. How are you guys?
I'm good. Okay, let's get right to it because people are really, they're concerned. I'm not using the word frightened because we'll save that for Halloween. At the beginning of the year, you said you'd do $2 billion in AI, and you did $5 billion. Now you do $5 billion. At the beginning of the year, your stock was at 154. Now your stock is at 153. How is it possible that you could be offering $2 billion as your forecast, then do $5 billion, and your stock is unchanged? Would you please explain to me that? You're better at math. You went to Bronx Science.
First of all, it's good to see you guys this morning. Look, we had a very strong third quarter. If you looked at the overall growth, we grew 18% year over year. We had a very strong data center quarter. We had a very strong server quarter. We had a very strong AI quarter. And we actually, as you said, we raised our guidance from $4.5 billion of AI revenue to greater than $5 billion of AI revenue for 2024. So overall, lots of positives. And, look, this is a long-term growth story. You know that. When we think about, the massive demand that there is in the data center for both AI and traditional compute, we are one of the very, very few players that can offer all of the different compute capabilities that are required. So, from that standpoint, I think, we feel very good about where we are. Going into the end of the year, we're going to grow in the fourth quarter at our guidance 22% year over year, and that's all about growth in data centers, growth in servers, growth in AI, and also growth in PCs. So those are all positives that we see in the business.
Now, PC and server incredibly strong. I see you taking incredible share. Thankfully, from another company that at one time I met you when your stock was at 4 and they were at 50. You told me to get out of the 50, go to 4. You're taking share from that company, aren't you?
We are having a very strong CPU cycle, I can say that. We just launched our Zen 5 processors, strongest portfolio we've had overall. We are firing on all cylinders. When you look at this traditional server market, we're starting to see refresh cycles actually in both cloud and enterprise, and that's showing through in the overall demand. And we also have a very strong portfolio when you look at the AI market as it relates to PCs. So that's another nice growth vector for us, and we're at the very, very beginning of that cycle as well.
One of the reasons that we own your stock for the Chapel Trust and have for some time is we're firm believers that AI is so big that it's not just that actually has room for 2 players, that it's not just Jensen Huang and then nobody. Could you make the case that actually you are a strong number 2 and getting stronger?
Yeah, absolutely. Look, I am a huge believer in AI. This is really the beginning of, what I like to call it an AI super cycle. We believe AI is going to be in every aspect of computing, whether you're talking about, the large clouds, enterprises, you're talking about the edge, or you're talking about, PC clients. And you need all different sizes of compute for that, and that's exactly what we have. We're at the beginning of the cycle, and, as we said at the top of the program, we started with our MI300, AI GPU, just about 10 months ago. We announced it in December of last year. We said, hey, we think revenue will be about $2 billion, and we knew that this is at the very beginning. But we've had just incredible partnerships across all of the cloud, the largest hyperscalers. We made great progress with Meta, with Microsoft, with Oracle, with a number of AI players, and we're going to continue to do that going forward. So I think AI is really at the beginning, and our goal is to be a very, very strong overall compute provider into that space, and really partnering with the largest vendors in the industry.
At least I know it's not that large a part of your business, but the gaming sector seems to be giving some people issues this morning in terms of at least what appears to have been a sizable miss in terms of what analysts who follow the company anticipated. What can you tell us about what you're seeing there?
Yeah, absolutely, David. So it is true. So if you look at the third quarter, we saw strength, higher than expected revenue in data center, higher than expected in client. Actually, a good recovery in our embedded business, which is one of the ones that serves the broad markets. And in gaming, we were a little bit lower than expected. It is really just where we are in the cycle. I mean, the gaming business is a good business for us. We are very dependent on game console sales, and I think we are in the latter part of the game console cycle, which is as expected. But overall, I think when you look at the growth drivers around data center, around AI, around PCs, and a recovery in embedded, we're actually seeing lots of positives. And that's the beauty of our model, frankly, is that we have such a broad product portfolio that covers such strong markets.
Lisa, David mentioned a moment ago how some of these hyperscalers are rethinking energy supply for the long term, and I wonder if you have the sense of whether or not they're on the case or there really truly will be a crunch when it comes to energy, say in the next 5-10 years.
Well, Carl, I think the main thing that we see is, nobody really predicted just, how fast this AI market was going to grow. I mean, if you think about, just, a year ago where we were, and the fact that there is such strong CapEx spending, it is placing a premium on data center space and power. We see that as we talk to customers. But as a industry, we're really good at attacking problems once we see that they're there. There's a lot of focus in ensuring that there's enough power and data center space to really have room for all of this AI compute that's necessary. So we're working on all aspects of that. And I do believe that we'll continue to make significant progress in those areas.
Lisa, a longer-term question. We're all struggling, or at least I do, to try and understand what this future is going to hold in terms of AI and understand various projections. So there are some I've spoken to who believe as you move more to inference, away from just running the large language models and all the data and taking it all in, that you may not need quite as much compute power, that inference will be more efficient or perhaps require less. How do you see that as generative AI evolves here?
Yeah, absolutely, David. Look, we see the generative AI arc as really going through multiple steps. I mean, these large language models are amazing. We've made excellent progress when you think about where we are today with some of the OpenAI models or some of the Llama models. I mean, they're great, but they can get better. I mean, we really do believe that AI compute will enable the models to get even better, smarter, allow you to do fine tuning as well as inference. And one of the things that I firmly believe is that there is no one-size-fits-all with compute. So yes, as inference comes along, and we expect inference to continue to grow, there will be other types of devices as well. But the beauty of it is, we have a broad portfolio to really address it. So from an overall standpoint, I think we're forecasting strong growth for AI compute. We recently updated our numbers to say that we believe the TAM for data center AI will be up to $500 billion in 2028, and that'll be a combination of both training and inference and all different types of compute in there.
Lisa, we put you on the spot here in the sense that right now NVIDIA, Qualcomm, ARM are all down big. And it's not necessarily in conjunction with you on the idea that there's no demand or slacking demand. I'm not taking that right out. You did mention the word supply at one point in the conference call. Therefore, people believing Taiwan Semi cannot supply you what you want. And because you can't be supplied with what you want, you're going to miss the numbers maybe from here to eternity. Could you please explain what happened with the discussion, the narrative of supply, and whether that was correct in relation to Taiwan Semi and correct in relation to supply that you'll have for 2025?
Look, Jim, the one thing I would like to say is we feel extremely good about the AI market overall. This is one of the most exciting markets, the most exciting market that I've been a part of. It's natural for there to be tight supply. It's natural, right? This is the way the semiconductor business works, which is, as demand goes up, you need to build more capacity to do that. I think our supply chain partners have done an excellent job. I think, we have done an excellent job. Our supply chain team has really ramped up capacity as we've gone through this year, and we are going to ramp up capacity again as we go into next year. So these are the types of things that we manage on a daily, weekly basis. And from that standpoint, we work very closely with TSMC as well as all of our supply chain partners to ensure that we are there to meet the demand.
Well, okay. I mean, I think you've explained as much as we can. Obviously, people feel that the company is not doing as well as the beginning of the year, as the stock is now below that, which seems fatuous given the fact you'll do $5 billion and not $2 billion. I think it's terrific that you explained everything to us. Let the chips fall as they may. AMD CEO Lisa Su, thank you so much.
Thank you.
When we come back, so many movers to get to. We'll get to Caterpillar, who's going to ding the Dow. We'll get to Reddit and Snap and CMG and Shack and Eat and Visa in a minute.
How many more minutes do I have? Got 3.
"30 to 60% of our users are not on other social media platforms. And so Reddit has a unique audience. And then we also have communities and places for people to gather around pretty much every topic imaginable, which means every company's customers are probably on Reddit somewhere. And so Reddit is a place that advertisers need to be.
Time now for a Mad Dash. That was, of course, the CEO of Reddit, a guest last night on Mad Money. This is the Mad Dash.
Yes. We talk about companies that beat and raised and companies that didn't beat and raised, or that cut. Eli Lilly cut. AMD, you could argue, this company was even stronger than Alphabet. Why? Because of that comment, 30-60. So they've become a must-buy for almost every CPG company, David, all the consumer packaged goods companies. There's 7 verticals that are up 50% on this thing. I think that literally there are people, David, who start their day and keep their day on this. Daily average user.
Good morning.
87 million. David.
Morning, Jimmy boy.
And not in China.
Yep. Jimmy's talking about Reddit. Meme stock. Spies pulled back to the pivot point, 581.09 that I had on here all morning. So we're at a pivot point. Definitely read it open. And I'm going to guess right down here somewhere on SPX. Somewhere right in here. Probably a little less, probably less. And China, flat.
China.
Cannabis. AMD had a pullback yesterday. There we go. Oh, I didn't see if I... Damn, Jim. Yeah. Platform. Tomorrow's the last day of the month. Here's my other one. Today. Oh, didn't even think about looking at that. Right to it. 58.25.64, right to the penny. Shoot. Missed that one. Yeah, that was a good one. Double bottom. That was that last higher low. So the SPX, the 58.50. Look, 58.60. $310. Got a tight stop on this one. $3. SPX 5850s for today. Lotto at $3. No, 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 no. Coffee. Right now I'm down 30. Now the next time I'll add 2. Maybe 4. No. Checking first thing this morning. We're 235. Let's see, right about in here. 215. Three black crows. Three 210 to 5850s. Shoes real fast. Gotta get out of this trade. $185. If it gets cheap enough, I'll buy 10 of them. Should get them right here. Should get 5 right here off these crows. Get 4. $175. There we go. Now do it. Come on now. Gonna be one of them kind of days. Come on. We're at 150. Break it. Breakout. Yabba dabba doo. Practically even right now. Come on now, don't be knifing on me. $150. Damn it. Break it. Well, there's $2, 205. Dashing through the snow, making $100. $220. So if you're in this trade with Bobo, and you add it on down there at 150 or 175. Right now you're up nice. You're up at 230, 235. You're running into the 21. So you gotta make a business decision. Hello. This is Uncle Sam. I understand that you just made it into a higher tax bracket. Knowing that, you need to be guaranteed that you are helping the illegal immigrants create a new life. $230. Whoa! There it is, $60 a contract. I could be making a business decision, but now I'm above the 21. Hello, this is Moses. By taking the right path, James Howard, And knowing that you're above the 21 EMA on the daily, you still have a right path to righteousness.
Checkmate.
To the 63 EMA.
We choose truth over facts.
That's right. So we're back to the pivot point. Are we going to break it? Or are we going to take it? Well, Jim, I didn't take it, and I'm down now. When you nailed that 175, now it's starting to take nosedive. Oh, I know what I need to get a hold of today. Break it. Could get out here. $225 right now. Boom. Good job, James. $230. Break it. It's $240. Okay. Now we're hanging out with the big guys. $260. Okay, I'm going to take profit here. Now we're talking big bucks. Make a business decision. $265. Give me a yabba dabba doo. Woo! 63 EMA. Now what do? You make a business decision, you sell it at $290. How did that masked man get away with that?
Thank you very much. That's really nice. Thank you.
Yes. Out at 2.90. Now that's stretching it. Okay, off to the beach. Yoko? Would you like to give me a grade? That was outstanding. I don't know how you get away with it. Do you mind if my daughter will go out with you tonight? She's only 16, but I won't tell nobody. $3.20. One trade a day is all it takes. How in the hell does that masked man do it? Oh, that's some good looking shit right there. Uh-oh! What's next? It's the 200 SMA abuse. Oh, gotta go get my phone. Oak. Mm. $200 SMA. $4.10. Yabba dabba do. So Jim, that was the two. How come you don't have the? Oh, that's because. Oh, I need to put the 200 EMA on here. We have a problem. We have a problem. How dare you? I've tried to tell you about this trade before.
One of us has made a gross error.
Are you impressed? Say it, Mike. Say yes. I promise I won't tell none of your family.
Affirmative.
Uh-oh, we got grades coming out. I wasn't asked, but... Oh. I'll butt in. C minus for initial entry. A B for an overall? What the heck? That will not fly. Yes, would you please get Ronald Reagan on the telephone? I have a little conversation I need to have.
That does not compute.
You have a wise guy in the room. Randy? What you Calm down, Jim. As again, I alluded yesterday about a guy I used to trade with when I traded with Vegas. Name's Bass Cat. He passed away. He's a vet. I guess he was proud of that. And he helped out a lot of traders, and he probably upset a lot of traders. But we wish you the best up there. Nice little early morning trade, that's for sure. I mean, 170. Woo! There's a good lesson to learn there. Don't go in big on your first order. When you're doing the beach trade, go in small. Like I bought one at $3 and then I added 4 more at 170. It was like a $500 trade right there in minutes. Yabba dabba doo. Let's see what the guys got to say over here. $14 people listening today. Hello, everybody in the room, including Magnificent. And he's a little rusty this morning with his grading process.
The way we had originally planned.
He's probably upset because he didn't take it. Jim, I hate looking at that chart. Would you get it off there? I'm tired of looking at it. It's at 5:30 now. Hey, Bobby showed up. It's a fair grade? Okay, that'll pass. I don't know about horrific. I guess I could say that. I did do a double bottom, high or low. Okay, I agree. First entry was horrific. It's hard to say words that you don't pronounce very often.
Nothing for you.
Woo!
Count to 3 and trade with me, but count to 4 to make much more.
Exactly.
Bears, they're cutting their price target on the stock from $387 to $335 a share. Melius Research says the slowdown is due to higher interest rates, and that CAT, yes, is benefiting from the Infrastructure Act and all the government spending, but businesses are holding off on.
Goodbye.
I think we're looking for, but their target for CAPEX beefy, which I think is good for NVIDIA.
And to your point, though, if Amazon and Microsoft are competitors to Google Cloud, and that was a strength, they should be down because they're competitors. They're both higher, showing that we're seeing
nice little bounce back off NVIDIA.
Move in tandem.
Yeah, that's true. In fact, when you look at the charts, Alphabet and Microsoft have been kind of similar in terms of just sort of range bound since the summer. Okay, so the SMCI thing, how do you interpret it? Do you say, okay, this is a real issue because they do account for a chunk of NVIDIA's revenues, or do you go with the message from Jensen Huang, which has basically been there's endless demand, so that demand will just shift over somewhere else?
Probably somewhere in between. I mean, it's probably somewhat of an issue for NVIDIA, but I think it's obviously much more of an issue for SMCI, and there's investors who are in SMCI. And I guess, to me, the escalation of this, because, I mean, where we're at now, Ernst & Young, the accountant that was covering SMCI, essentially has resigned. They allegedly have flagged governance concerns back in July, which actually predated that breaking of the story from the short report, which I believe was Hindenburg.
Hindenburg, yeah.
They released a statement basically just saying we can't rely on management and the audit committee's representations, yada, 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 and we're not going to work with them anymore. So it's not like it was like, hey, you know, we just decided we're going to go our separate ways. They're basically saying, you know, we're not sure and we don't feel comfortable working with the company anymore. So to me, when we look back at how this developed, obviously it's escalated to where it is now, but it never really went away. And to me, this was something that if it just wasn't true, SMCI could have shown it wasn't true in some way by now. So the fact that it never really went away and it was just always hanging in the balance, the stock price repriced dramatically to the downside, to me said there was something here.
Yeah.
I didn't know how dramatic and what the impact beyond that was going to be with the ripple, and we still don't really know what those ripple effects are. But I don't think it's a good thing that one of the biggest growing names in the S&P 500 the last 2 years has accounting concerns. I mean, people want to make .com comparisons. I mean, this is the bubbly stuff that starts to get people a little bit, those antennas going up for fear.
What's amazing is still up on the year.
Yeah, it's still probably up just tremendously on the last 2 years.
Yeah, for sure. Okay, good point. Well said. Well argued. I have nothing to add to that logic. I think it's very sound. Pending home sales. You know, I don't know what's up with that figure. I mean, maybe some hurricane-related stuff. Bonds, which rallied since the SMCI story came out, are starting to come back.
6.30 now. Now I'm mad.
Month over month, really 7.5% for pending home sales, and the year
I could have really loaded up there.
Because the street was looking for a negative number on the year over year.
Yeah, so no doubt about it. These
Turned down for what?
Numbers.
Okay.
7.4 seems shocking because there's seasonally adjusted, formulas that go into those month over months. To your point, if there was some disruption in the marketplace due to natural disasters, you start doing some seasonally adjusted things in there. It's really gonna, adjust those numbers dramatically if you start having, added demand because some of it was pushed back. But when you look at year over year, that is not seasonally adjusted. So the fact that we're looking for a decline of 1.1% and it's actually a 2.2% increase, that goes to show that it was a strong month. Now we're coming off a 4.3% decrease last month, so again, there's some noise there. Of course, when you're talking pending home sales too, we're really talking, I'm a homeowner trying to sell my home. I've got a buyer. They've signed the contract, but we haven't closed yet. Yeah. So it is a leading indicator. It is an important thing, but this isn't the transaction actually taking place yet. It's just an agreement in place that it will.
Yeah, it's a pretty big number though, biggest since 2020. That bounce, and it also, I mean, look, we obviously had the drop in mortgage rates, but that might be going the other way if rates start going back up. So that might also argue that it's not super sustainable at these levels. But I mean, it definitely also fits the consumer sentiment, the confidence numbers, the overall beat rate for the economic figures. I mean, this economy is like it shocks, it regularly shocks to the upside still.
Yeah, it does, and I think one more thing to consider too, and we've talked about this, the real estate market's just a slower moving market. If you were waiting and waiting and waiting because you were hoping for rates, at some point life takes over. Perhaps you got relocated to a new city for work. Perhaps
pull the trigger.
You have a bigger family or a smaller family. Perhaps promotion or you lost a job. There's a lot of things that can impact why your life circumstance change, and you don't always have the luxury of waiting for an interest rate. And at some point, 3, 4, 5 years into rates being a little bit higher, you start saying, this is just the new normal of where rates are going to be. This is actually a reasonable rate.
Yeah, all right. Love it. Good analysis. Thank you very much, Alex Coffey. I wonder if one of those people looking for a new home after a job switch was Mr. Brian Nickel, who's now based in Seattle as the CEO of Starbucks. Jeff Pierce joins us to take a look at what to expect on earnings.
Yeah.
The last update we got from Starbucks was very full and comprehensive, was largely negative. Numerically and financially, all the updates they gave us for guidance. Jeff, it felt like a kitchen sink.
AMD held today.
CEO Brian Nickel, of course, from Chipotle, California-based.
The last 7 hours held support.
He did outlay a pretty good plan, though, I felt like, strategy-wise.
Man, I ain't messing around. Apple 1, 2, 3.
Right. Well, I think that's it, right? The plan going forward is what we're going to hear more about. To your point, the preliminary results were not good, right? Sales falling 3% year over year, earnings per share missing at 80 cents versus $1.03 expected. same-store sales were an absolute disappointment. Third quarter in a row where they fell. This time it was down 7%, worse than a 3% drop that was expected.
That ain't good.
Didn't see a lot of reaction from the stock. Now, part of that might have been the dividend. They did raise their dividend by 7%, now paying 61 cents versus the 57 it was paying previously. A lot of that was likely to enthuse investors about this long-term growth goal that they've got, and to understand that the free cash flow is still doing relatively well. The street expects about $3.5 billion in free cash flow for 2025. This new dividend will take up about 70% of that amount. But as we go through, if you look at the numbers in same-store sales in China, 6%, down 14%. Same-store sales in the U.S. down 6%. Driven by an 8% decline in average ticket charges. We saw volumes in the U.S. Same-store sale volumes down 10%. These numbers were not good. Now we've moved past that. We've got a company that is really trying to make change. The new CEO has laid out part of that plan, part of that shift. Includes simplifying the menu, tweaking the mobile ordering, adjusting their marketing, focusing on really just the coffee side of the business. A lot of people are looking for more detail, expecting to hear more of that during this report. The question is how much we're going to get. Some analysts think we're not going to hear the full plan until later. So that's the big question mark. We haven't seen a big reaction. I think investors are excited by the CEO, and that's really holding the price up the way it has, even after those terrible results.
Okay. So the hope then that they're going to have sort of a more holistic kind of approach, easier, simplified menu. I think that they're going to lean into the food because they already have been to a large degree, and I feel like they have a great spot in the market to address the all-day breakfast, which is I'm a single issue voter, and my issue is all-day breakfast. And right now, Starbucks leads the front.
Yeah, I can agree with you on that, and I think you're right. I mean, I think we're going to see some of that. I think we're going to see staffing levels change. That's been one of the bigger issues. There used to be this experience when you would go into Starbucks. A lot of consumers say they don't feel that anymore. Pricing is going to be an interesting one because we know that they've reduced pricing. They've offered promotions, buy one, get one, and so on to really fight the pressures of inflation. That inflation is still on demand, I should say, but also trying to compete with some of the other big names out there, especially in China. This is a company that's really avoided discounting and for a long time, really kind of painting their product as more premium product, offering experience, so on and so forth. I don't think we're going to see pricing be reduced necessarily because the CEO has largely been focusing on rolling that back. But we're going to see them make a lot of changes inside the store, cutting down that menu, making things look a little bit more to the Starbucks we know from years ago. One big question mark, which I think we are going to have to hear more about, is China. We've got a lot of competition in China coming from Luckin Coffee.
China.
Reportedly, they're planning to hit the U.S. market again. We've seen some advertising around that. And that's a big concern because pricing-wise, they're a big competitor. Starbucks has already had to change the pricing in China.
If you look at
them, so I would imagine
the SPY,
be a part of the story we're going to hear.
you will realize
Good stuff. Thanks, Jeff.
we're at the
Appreciate that.
200 SMA on the 5
CEO
minute.
of Prosper Trading Academy.
I was going to write it out.
Shares.
I was going to sing it out, but I'm not. We're definitely at some resistance levels.
Yeah, a lot of sideways movement, and typically, Oliver, when I would see that on a chart, especially going into a big event like an earnings event, I would play for a big move one way or the other. In Starbucks, though, I'm looking at it a little differently for all the reasons you and Jeff just discussed, especially because this announcement that came out a week or two ago, this pre-release, if you will, we had an effect from there. So what are they going to release in this report here? I don't think, regardless of what the numbers are, that's going to move the needle. What could move the needle is, as you guys talked about, is there anything significant that they discuss about any sort of changes? I don't see that happening here. So I'm playing this for that continuation of this consolidation, but with a slightly bearish tone, because Starbucks is really kind of at some lofty levels. You know, right up at that 100 area, 101 area, there's some significant resistance. So what I'm doing is I'm selling an iron condor, selling both a call spread and a put spread.
You can't do that.
I'm selling the 90 put spread on the downside. I'm selling the 98.102 call spread on the upside.
You cannot do that.
For about $2.25, which means all of that added up at the end of the week at Friday expiration, if we are anywhere between 91.75 and 100.25, I make money. Outside of that range, I lose a little bit, but my loss is limited.
I like it. Sideways momentum.
I do too.
And a good range too. I mean, down to 90 for $100 and through to $100 basically is.
Yeah, I got about a $9 range here that this can stay in, and again, that's a 10% range based on the stock basically, and if it does go outside of that range, I am protected. I know what my loss is, but I just don't see what sort of material impact this earnings release is going to make today, unless they totally look and say, "Oh my God, I can't believe that we let
one heck of a comeback
a couple weeks ago. We got to change things up."
Yeah, that's where it seems like a solid logic for the trade is because we got the
IWM masterful
us up to this range, and then a big dump of information last week that wasn't able to move us out of the range.
QQQ at the 200.
Greater revelation than either of those two events.
We could consolidate.
So I'm kind of with you on the range trade.
Jimmy is about to make an announcement. Announcement. The IWM is exhausted. The QQQ is at the 200 SMA. The SPY had broke resistance almost to a pre-market double top at 583 something. And then we got the SPX at a double top from yesterday's high. So we have 4 reasons to kind of relax right now and go in there and make a blueberry muffin. Blueberry muffin. I never thought about that. Why did Washboardjim say sell? Are you trying to screw me on my grade? Yes, I said sell. But another $600, $500 a contract would have been very nice. R is out of Google. Whoa. Extra butter, okay. That's the first thing that popped in my head too, was butter. And so I gotta go run a fast errand real fast. What time is it? 9:30. Still got time. Damn, I got sudden got a lot of follows. Hello, Nancy. Nice to meet you. But you have no messages. Nancy. See, when I said he's back, just looked at them 4 charts and they all kind of told me that we were at resistance levels. Hey, you got your mic on. Alex, I think Alex, right? It still can't get up off the canvas, you give it a chance. Maintains a buy and lowers price target to 205 VBS. AMD CEO Lisa Su is going to be in every aspect of computing. Okay. What she said. I've got my beach trade, both of them out of the way right now, so I'm done for the day. Trying to figure out what I'm going to have for lunch. I think I got it figured out. A hamburger patty and some broccoli. I'm surprised how empty my refrigerator looks now that I started this new diet.
Nothing for you.
Yeah. It's easier to maintain. Yes, Nancy, could I have me a shot of vodka and give me one of those volumes. Where was Nancy the night that her husband attacked that young man? She was with me.
One of us has made a gross error.
FBI, open up!
You thought that Diddy's parties were tough. You got to go to a Pelosi party. Where they serve ice cream laced with meth. Okay, well.
I think what we're waiting to see is growth acceleration in the business. And I don't think we're going to get that on the guide. I think we're set up for that going into the first half of next year. Once we start to see that, that will put upward pressure on valuations. But, when you look at historics, it's not overly stretched today.
All right. Great stuff. Thanks, Derek, for the perspective. Helpful for us.
Drop.
And a nice prep for
Thanks,
earnings.
Oliver.
After the bell, Derek Woods, anything else? At TV Cal. Coming up. More earnings. That's right. It just keeps going.
Yes.
Coinbase, Carvana, KLA 10 Core. Couple of fun ones with some potential for big moves like Coinbase and Carvana. Might be a little bit of a tougher gig for KLA 10 Core, but first two certainly are volatile stock, and Carvana's just been unstoppable.
Because people are getting killed on these used cars.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Okay.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Higgs. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way.
Take a left here, please.
But there's a...
Carl's way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
SPY just had a new high, it looked like.
Talk some charts. Let's get ready for earnings. Jenny Horn, Rick Ducat, the team here with a lot on our mind. Coinbase, Carvana, Kaylee, Tincor. Let's start with the coins, Jenny. Should be, I guess, a decent quarter given all the crypto prices running up.
I mean, you'd have to imagine, especially considering, I mean, the company derives, I mean, so much of its revenue from the crypto assets, which, okay, crypto assets other than Bitcoin and Ethereum still accounted for like 42% of their revenue, which was amazing to me, up from 39% a quarter ago. But they're trying to diversify, but still, I mean, this is still, I'd say, a good read on crypto. Correlation has actually gotten less and less, but I still see it as, yes, majorly a proxy into the crypto trade. I will say that this company tried to diversify its revenues beyond just trading with the goal of turning a profit, whether or not we see the same trading volume in the crypto market. So other revenue streams do include staking, where investors are able to utilize Coinbase to post their tokens in exchange for yield, which Coinbase then takes a cut of. I think that that's really interesting because then you look at the other areas like their sponsorship of the USDC stablecoin, which is a cryptocurrency, of course, pegged to the dollar, backed by reserves. Between the second quarter of 2023 and 2024, the company's subscription and services revenue, which includes that staking of the USDC, rose 79%. So we're expecting some sizable, I'd say, improvements. Lowered interest rates is another factor considered, but also I do think that more and more as we approach next week, this becomes a political play. I mean, it's something I try to avoid, but I mean, it's just something that is true, where Donald Trump has said that he's going to be a friend to the crypto market. I will say some of the remarks out of Vice President Kamala Harris is saying that she's less likely to perhaps remove the SEC chair, but I still think that there could be implications in the crypto market depending on whoever takes office.
Yeah, no, that's definitely the
Oh,
reality.
yeah, honey, you're a little on the liberal side.
There is some political implications. Seems like the regulatory side in particular of cryptos. So, all right, Coinbase.
Starting to lose respect for you, Jenny.
Not quite at the highs like Bitcoin prices are, but it's trying to get out of this downtrend, Rick.
Yeah, Bitcoin not really doing a lot either today. It's down less than 0.5% today,
quiet, yeah.
Based on the futures. But when we look at this chart, we can see that it's kind of having a bit of a turnaround here. You can see that although the prevailing trend starting over here at our highs near 283, connecting here, the prevailing trend by this measure is more toward the downside here. But you can see we had more of a steeper downtrend that we've broken. We bottomed out in this area, right around 148 or so, and then we started to progress upward. We had a little bit of a resistance situation here, low point, then high point, and then breakout. We crossed above all our moving averages. The slower move or the faster moving averages are crossing above the slower ones, suggesting the trend is improving to the upside. This dark green line here also stood out, repeated low point, then high point, and now we're kind of looking like we're perhaps managing to stay above it here. But we also have this light blue trend line going upward. We're kind of right on the nose of it right now here, with the volume profile point of control just up ahead as well. By this measure on momentum, the RSI, we are trending upward. We've also broken a long-term downward trend line in red there, so momentum more geared toward the bulls heading into earnings as we hold on this supportive area. Resistance, red line, repeated stopping point for price, 235 around that area, and then here a ceiling that we were not able to crack after a few separate attempts near 264. To the downside, around 200 or so, 191, would be another low point, then high point here, but around 200 would be our 21-day EMA, 199, 200, around that point.
All right, so it's lifting off from the moving averages, but still very much in this downtrend price-wise. It's quite a different chart than the crypto stuff right now because of the lack of kind of meaningful higher highs. I guess this does count as sort of a higher high, but kind of bare minimum, to some extent.
Yeah, and it's still we're still kind of in the middle of this big distribution of volume.
Yeah.
Distribution is maybe not the right word. Big cluster of volume node here, whatever.
Potential distribution.
Yeah, but like we just kind of have there's a lot working against things right now for the upside here, but earnings could change that. We'll see.
Yeah, for sure. All right. Definitely one that's volatile in earnings, but a few things more volatile in Carvana. I'm like, this is one of those situations where the stock market is informing my view of the actual business instead of like the other way around. And
don't
further
get
the
too
stock
caught
rises,
up
the
in
more
this.
I want to embrace car vending machines, Jenny.
Yeah, see, that's funny.
Could
because
have a
the
sharp
more, I think the
pullback
more
here
this
in a
stuff runs,
second.
the less I want to embrace car vending machines. I
I'll
think
be
that
back.
we're in a risky position here. I will say that there's actually a lot of fundamental improvements behind the recent run-up. It's not just like this has been a short squeeze. I mean, that wouldn't have lasted, obviously, the duration.
Maybe that's what got it off the ground.
Yeah, for sure, because this thing it does have sizable short interest, but I mean, it's actually come down quite considerably, and I follow those metrics because I always believe in the short squeeze. But up 1.5% today, up 300% on the year, up 744%, now almost 745% off of its 52-week lows at $25 a share, and just pretty much right around now its 52-week high here. So mind you, this stock did trade significantly above these current levels. I think that the longer term, the 5-year weekly chart illustrates that. We traded as high as 376.83 a share. So again, I think that puts the rally into context, but at least there's been fundamental improvement. We are expecting now it's guided for EBITDA to more than triple what we saw from the midpoint a year ago. Used vehicle retail units sold by Carvana also returned to growth for the first time in the first quarter of 2024 since back in 2022. In the second quarter of this year, though, they also sold more than 100,000 cars, which does make them then the second largest used car retailer in the United States. So encouragingly, they do expect this sequential increase in their year-over-year growth rates in terms of their retail unit sales now in the to-be-reported quarter. And we're expecting the retail units sold to increase, 30% year-over-year. And they've also been trying to control some of their costs. There was the concern that this company's balance sheet was deeply flawed. They were taking on way too much debt. They've done a great job improving that. We're forecasting EBITDA to surge 115% year-over-year. So also reducing its SG&A expenses. There's a lot to like here, but also the risk that we're sitting at 52-week highs is, I think, that then right now that maybe cause for some pause because, again, this name has risen 300% this year.
Wow. To your point, though, good financial improvements have definitely helped, not just narrative and speculation. There's definitely some of that in there too. Certainly high beta. But Rick, what does there say? Is there anything negative about this? It's like picking up momentum into the earnings.
By conventional measures, I can't really find a lot to pick apart in this one here. A 663% move off of those lows that were almost a year ago is really just staggering. That's really incredible. And we just keep kind of moving up higher here. You can see that the broader trend for quite a while here, for much of the year, was this blue channel here, kind of put this line across the highs. They kind of matched up here, just trying to describe the price action. But now you can see more recently we had a big breakout. We broke above that level here around the point where we were in this phase of the rally. We also started to break above that longer term red trend line going downward in the RSI. Now we're in the overbought area, trending upward, making new relative highs with price in tandem here. So here we are. Now that we do have this kind of crazy situation here, standard deviation channel, we have our linear regression line, one standard deviation to the upside. 232 gives us a potential resistance target to the upside here if we keep moving up on earnings. But we've also got this area right here, the upper part of our channel, our yellow 21-day EMA, a series of lows, and a volume node all around 188 or so. So that could be a level that we could see a retest of in the coming days if things don't go quite as well.
All right. Gap 2 earnings ago, but the last one was kind of muted by Carvana standards. It definitely had some volatility, some chop, but then recovered, found support, and then the 2 before that were both positive gaps. So I mean, the thing has done really well on earnings, to Jenny's point, in terms of there actually being a fundamental, underpinning to this. Obviously, there's a lot of momentum and a lot of valuation run up in between each earnings report, but the fact that it has found support for those earnings at the moving averages basically every time maybe gives you something to think about in case it does pull back.
Yeah, support during uptrends, resistance during downtrends. That's the basic thought behind them here. And you can see that, you could take a chance at the 21-day, the 63-day. So far this year has had a better track record, but, it all depends on your risk tolerance. It all depends on how you set up the trade here. There's a lot of different ways to do something like that.
That's one thing I would say is that given the momentum run-up, if there's any disappointment, it obviously can drop. The thing has pretty extreme moves, and last few times it did, it came down to test the deeper one, which would be pretty nasty, but that has held really well. So, all right, last one, Kaylee, 10 core, pretty weak as far as semiconductor charts go, Jenny, but it seems like some of the other indications have been that these fabrication and providers of the semiconductor parts might be seeing the so-called bottom of the cycle.
I mean, you'd have to hope, because again, we talk about this demand and how we're in the early innings of the demand story. So I have a hard time then seeing a company that is not growing at the clip that you'd think it would be, considering, I mean, this is like one of the largest semiconductor equipment companies. But this name did suffer a pretty substantial sell-off on the back of ASML, which I keep mentioning. I think that was the most overblown event we've seen that weighed on semis in a while. But this name was, I mean, them and Lam Research were 2 of the steepest declines on the session. And you could see that actually from the chart, the daily sell-off we saw there, which was brutal, and we've yet to really fully recover. So for this quarter, we're expecting, revenue to rise 15% year over year. A reversal, though, from the 12% decline we saw in the same period a year ago on adjusted earnings of $7.03 a share. Now, with that 20% pullback we saw on the back of ASML earnings on October 14th, there has been these fears of weaker leading-edge wafer fab equipment environments, as well as China risks, which I was reading this note out of Deutsche Bank that said that their China risk is more substantial. So they do say that there's still expected this slowdown in spending, while overall the number 2 and 3 foundry players are seeing some negative trends across the industry, but they do not believe that the downside is as high as some of the right now skepticism would imply. So basically they're saying, yeah, sure, China's a degree of risk. I think it's always been, but right now we've perhaps corrected too much in this name, which I again, it's fared actually pretty well on a 12-month basis. It's up 18% on the year. It's not like this name is drastically underperformed. It just hasn't been caught up in at all the AI hype, and especially not helping that it was dragged down by ASML.
All right, good assessment and a good recap of how we got here in the stock. A big red candle, basically, and 2 of them really.
This one, right?
Yeah.
That we also had another big drop here. This was, a similar, the August 5th, that was another significant drop here. Both of these are important for our analysis here. August 5th was the day Japanese stock market had a bunch of problems. The yen, kind of exploded.
Yes.
Yeah, a lot of stuff happened. But anyway, so when we look at this chart here, we can see that, kind of backtracking to start at the beginning, this was an important area between our light green and dark green lines. This is kind of a supportive zone. This is where we've held the line multiple times here, and most recently during this downswing. So 652 being the upper boundary, 626 being the lower boundary. Kind of a big range, I know, but this is just kind of what the how things are playing out right now. So we can also see that from this point here, which was also the site of the purple 252-day exponential moving average, blue trend line here connecting the lows, counteracted by this downward sloping trend line. It looked like we had a nice breakout to the upside there, but take a look. You can see we had this, the high point we reached after our gap down, persistent ceiling once again near about 829. Big rejection then, big, blowout downside move, took us through our moving averages and our trend lines. Once again, back within the lower downward sloping trend lines, starting with those highs. Right now, hanging out near the volume profile point of control, the 252-day EMA, and this red line here, which represents our low points. This was like our worst close, even though we did have those crazy intraday lows. This was our worst close, this red line here. And that's about where we're stuck right now. So 696 to the upside, then our moving averages and trend line. So maybe once we start getting around 740, that would be kind of a breakout situation. To the downside, our range right here that I mentioned before, 626 to 652, RSI bearish, by the way, sloping downward still.
Boy, tough chart right now for bulls in the stock. Seems like it's got a lot working against it more than it does working for it, other than the tick up here. But that just did some basic, seems like mean reversion stuff back towards a resistance area, and then moving average resistance, down trend line resistance. Like there is, it seems to your point, some support at around that 650 or so, a little bit, maybe even a little bit above it, but a lot of resistance to where you'd think, you know, it's going to be tough to get through all that in one number.
Yeah, at best we were range bound. We were stuck at this pink line here.
Yeah.
We just couldn't break above 829, 830 with any kind of strength or anything. So, you know, that's really the mark to beat to the upside. Even if we do get our act together, you know, we're still stuck until that's we get a breakout.
Okay. Yeah, really good look at that chart. Very helpful. Thanks, Rick. Thanks, Jenny. Market meetup when we come back. The session has been interesting so far with tech lagging, but solid, not too far off neutral. The Russell picked up the pace after being the early underperformer. Small caps are now leading. We'll take you through the session when we come back with our team. Stick around on Morning Trade Live.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Stocks kind of swinging around today. Early weakness in big tech has been resolved somewhat with NVIDIA stable and Alphabet up big. Russell 2000 has stolen some of the spotlight with small caps up. George Tilts and Caroline Woods with me this morning for a check-in on the session here. Things could be worse considering Supermicro's dive. Caroline, it seems like there's been a little dip buying in some of the related names.
Hey there, Oliver. Yes, the S&P is higher, but overall tech is lower. And you mentioned Google's sharp increases. I would say, despite the fact that the S&P is higher, there's bigger movers to the downside to talk about. So let's focus on, yes, the worst performer on the S&P is Supermicro. Shares absolutely tumbling more than 30% right now after, you mentioned this morning, EY resigned as its auditor, saying we're resigning due to information that has recently come to our attention, which has led us to no longer be able to rely on management's and the audit committee's representations. Supermicro has come out in an 8-K filing saying that although the company recognizes EY's decision as final, it disagrees with the decision to resign as the company's independent registered public accounting firm, basically saying they're taking those seriously, but they don't have all the information that they need yet. So worst performer on the S&P by far. Second worst performer, and actually you mentioned others on the rise because of it. Dell, actually a big mover to the upside, likely in response to Supermicro's declines. But the second worst performer on the S&P today, Qorvo, makes radio frequency chips for several Apple products and other wireless devices, also getting hit hard after earnings actually beat, but the guidance disappointed, and that seems to be really disappointing investors. The CFO said, looking forward, the flagship and premium tiers in the smartphone market are holding up well. However, content and ramp profiles vary by model, and we are experiencing an unfavorable mix that should continue into the second half of fiscal 2025. So got a few downgrades, several price target cuts after that news. So that's really getting a hit as well, down about 25% right now. AMD also lower because of earnings. Bringing several of the other chip makers with it as well. You mentioned NVIDIA stabilizing. It's still lower today. And then ARM, Lam, TSM, Micron, all lower as well. There are some winners. Garmin, actually, the name we don't talk about often, one of the best performers on the S&P after earnings. We see Reddit and Snap also big winners today, which should bode well for Meta. But yeah, definitely more outsized moves to the downside today.
Yeah, the swing in Corvo lower seems like it's weighing on Apple down 1%. SMCI and Corvo, George, not the major players, but linked to the major players. So how much weight should we put in the downside for either of these? In the case of SMCI, as a buyer of NVIDIA chips, and for Corvo, a supplier of Apple chips.
Yeah. Well, I think I'm not going to place too much emphasis on the majors. Obviously, there's some spillover effects with Apple down, NVIDIA is also down, and that's to be expected, but I think it'll abate. I mean, if you look at Supermicro, and I talked about this stock often in the last year and a half, and one of the things I noticed, going back just about 6 to 9 months ago, was a lot of short interest in the stock and a low float stock, so it was easy to push it around both to the upside and downside. Anytime there's accounting irregularities, you just sell, and that occurred many months ago, and obviously there's still some problems. Dell was higher earlier today as a contrarian trade against semiconductor, or Supermicro, forgive me, because of their server markets. But nonetheless, I think it's idiosyncratic to Supermicro, not necessarily indicative of a major sell-off in some of the majors like NVIDIA and so forth. Corvo, on the other hand, if you look at the business itself, really struggling from a profitability standpoint. So it was already, trading at low levels, and of course the miss and the revenue and earnings guidance down obviously creates another problem for the stock. So there is a spillover effect. It's affecting Apple, it's affecting NVIDIA, but I think that it'll pass, and I think they're more idiosyncratic to the businesses themselves than to any of the external context, if you will, to the AI markets, and of course to Apple.
All right, fair enough. Then I guess we focus on Microsoft this afternoon. It seems like Caroline will be getting even more direct reads and less triangulation once we actually get a few of these names that are coming out today.
Yeah, and Microsoft shares are higher heading into that report, up about 1% right now, up on the month as well. And Meta, of course, will come today as well. Shares of Meta up today as well, and up about 4% month to day heading into that report. And I think what we heard from Alphabet, but also from Reddit and Snap, which both managed to beat expectations and post gains in daily active users and advertising, I think that should bode well for Meta, which is likely why we're seeing shares higher heading into that report. So I think the big thing with Meta, though, is the fact that it's, 1% away from the highs. It's up 68%, 69% year to date. So far outperforming the broader market. The bar is high, but there's some optimism heading into the report.
Yeah, definitely. As seems like the market's not afraid to show some confidence. Microsoft and Meta going into the numbers. Thanks, Caroline. Thanks, GT. Thank you for joining Morning Trade Live. Trading 360 with Nicole Petalides is coming up next. Have a great day. This election season, stay out of the muck and the mudslinging with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed. Stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Didn't do much, huh?
Good morning. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Nicole Penelides, live on the floor of the New York Stock Exchange. We have lots of economic news and lots of earnings that we're digesting this morning. Coming up on today's show, our 360 Spotlight, we'll take a look at the earnings from Visa after the report yesterday. Take a look at the health of the U.S. consumer. The disruptor today, those will be AMD shares. They're under some pressure after the earnings. We'll break that down and even have an example trade for you. In our 360 round, we'll take a look at the earnings and dive into the earnings from Alphabet, formerly Google, right? So we'll look at that. In the meantime, let's check it out because we've had such a nice run for the NASDAQ, which the composite, which hit a new high. Right now it's pulling back. It's down 0.25%. The S&P's at 58.42, up 0.2%. The Dow's at 42,378, up 1/3 of 1%. The Russell more than 0.5%. Oil and gold are both higher. Oil right now up $1.27 at 68.48. 27.91 a troy ounce for gold. That's up over $10. The VIX is at 1966. The U.S. dollar still at that 104 level, 104.01. And right now we see Bitcoin futures 73,140, down 1%. So there you have it. That's the big picture.
There you have it.
Watching specific names, and we want to take a look at Eli Lilly. Jenny Horn, markets correspondent here on Schwab Network, taking a look at Eli Lilly this morning after its quarterly report. It is to the downside, some things that stood out to folks.
Yeah, Nicole, I will say this is a different tone from what has been one of our leaders of the healthcare space for quite some time, really on a lot of this GLP-1 and various diabetes treatment success. But that was actually somewhat of their weakness in this quarter. So we did see they fell short of profit and revenue expectations, weighed down by actually disappointing sales of its blockbuster weight loss drugs Zepbound and diabetes treatment Mounjaro, which then also led to them to slash their full-year adjusted profit guidance. They now expect that adjusted earnings to fall between around $13.02 to $13.52 a share, well below the previous expectation for $16.10 to $16.60 a share. They did also cite a $2.8 billion charge in the third quarter related to its acquisition of bowel disease drug maker Morphic Holding as potentially denting its overall results and lower the high end of its revenue outlook for the year, expecting sales to fall between $45.4 to $46 billion. So there's a lot to, I think, that explain why we saw shares down about 5.4% here. As right now, Mounjaro did post $3.1 billion in revenue for the third quarter. That was more than double what we saw a year ago. However, there's such high expectations when it comes to these drugs now, given their success. Demand in the U.S. has far outpaced supply for Lilly's various drugs like Zepbound and Mounjaro over the last year. Both treatments do help reduce appetite as well as, of course, improve blood sugar. So the popularity of these drugs have forced Eli Lilly as well as Novo Nordisk to invest billions in scaling out their various treatments. For that reason, this cost right now associated with ramping up is right now weighing. So I think that this is actually a good problem, the fact that they're hindered by their own success because they have seen such phenomenal interest in these various GLP-1 drugs. However, right now it's going to be, we're seeing that it's not going to necessarily lead to just clear upside. I mean, some of these growing pains are going to weigh on profitability, and that's exactly, I think, what we heard from Eli Lilly.
Whoa. Right, understood. All right, so it's down about 5% right now on the heels of those earnings. Jenny Horn, thank you so much. Markets correspondent, good look there at Eli Lilly. The group is mixed overall. Let's get some insights in the news shaping the markets. For that, we welcome in Alonso Munoz is with us, CIO at Hamilton Capital Partners. Good to see you.
Good
Thanks
morning.
for being here.
Great to see
How
you.
about the fact that we were running so hot on the NASDAQ? We hit new highs yesterday. We've gotten in sort of, you get one positive thing and one maybe a little softer. How do you feel about the market these days?
Well, let's start with the economic data. We got GDP this morning, which was pretty good. Core PCE, which is one of the main gauges that the Fed uses in terms of interest rate policy or thinking through interest rate policy. And we've got jobs on Friday. So there is a ton of economic data. JOLTS data was a little bit lower than expected, but we're seeing a strong jobs market as well. And so as we look to next week, the big things are going to be the election, the Fed decision, and that's a lot of what's moving markets. I think investors are defensive and they're being tactical as we look to next week.
So GDP comes in at 2.8%. That's pretty much in line. ADP saw stronger jobs than expected. We have the monthly jobs report on Friday, so that will be key. You noted the PCE, the Fed's favorite gauge of inflation. The dual mandate of the Fed is jobs and inflation.
That's right.
Do you see a cut? You see two cuts coming November, December, the next two meetings?
Well, we think that they should, and they probably will next Thursday. They opened the door to cuts when they did 50 basis points, and at this point it's unlikely, Nicole, that the Fed starts and stops. So they'll want to keep that continuation. We saw from the Beige Book data that there are pockets of weakness, and so although GDP was good, consumer spending was excellent, business investments were really, really strong, there's still some pockets where the Fed is likely going to want to cut at least by 25 basis points, so they don't risk doing damage to the labor market or to the economy.
So also the jobs picture, do you feel confident in the jobs picture, or are you worried?
Well, it's a bit of a mixed bag. We're seeing low jobless claims, but we're also seeing low quits rates, meaning people are holding on to their jobs. And so the job market is still strong. We're going to see on Friday, where all eyes are on this Friday's report to see if unemployment rate stays the same or ticks higher.
Yeah, and look, we also had the JOLTS report yesterday, showed fewer job openings. It seemed like things were calming down. People weren't quitting as much because they didn't have the wage growth to, quit job A to run to job B because job B pays so much more. Wage growth has come down a bit. but for the most part, it seems to be in line or okay with that. So what do you tell investors? What are some of the questions that people are calling with now?
Well, they want to know what's going to happen next week. And we're going to leave that up, obviously, to the pollsters, but we're very close. We've got 5 days, then a major Fed decision. As we look further out into the fourth quarter, we have some seasonal tailwinds behind us. Maybe a Santa Claus rally as we go to the end of the year. And earnings have been, although there's some pockets of weakness, earnings have been okay. We saw Google yesterday. We get Microsoft and Meta tonight. And so we're going to be watching out for earnings on the back of a strong economy and strong data.
Yeah, we had Google. Google is up 5% today on the heels of its earnings. You know, Dan Ives from Wedbush was saying it's going to be a big tech week. He's big on tech. He's been bullish on tech. How do you feel on tech?
Well, we own a lot of these major mega cap 7. We are the mega cap tech companies. 5 of the 7 reporting this week. What we saw yesterday from Google was really, really good growth in their cloud services, 35% growth. They're spending a lot of money on building out their AI infrastructure, but they're also delivering on some of those key business pillars that analysts in Wall Street are looking out for to justify some of these valuations. A lot of clients call and say, hey, tech seems to be at all-time high. You noted the S&P, the Dow, and the NASDAQ near or at all-time highs, and so that's something that we're watching out for going into next quarter.
I saw Tesla and NVIDIA in your notes as well. Tell me any thoughts on those particular names for investors who may be either holding those or interested in buying them?
Yeah, well, I'll start with Tesla. I think we spoke right before the robo-taxi event. The stock sold off right after that, and then post-earnings had a really nice pop. And I think investors got what they wanted, which is some reassurance from Elon Musk and the executive team that they were going to roll out lower cost models, that they were going to deliver on autonomous driving, but also their margins were excellent, a lot better than expected. If we shift over to NVIDIA, we got AMD earnings. They put out relatively negative forward guidance, and the stock is selling off today. And so we're going to look out for NVIDIA. They're the major player. A lot of the Mag 7 buy from them, or a lot of the big cap tech companies buy chips from them. And so that demand should stay there over the coming quarters.
There were concerns about Tesla. I mean, so a lot of good numbers from Tesla. I understand what you're saying. They are going to deliver full self-driving, but the timeline, there wasn't really a timeline for the Cybercab. There wasn't really the timeline on the full self-driving was at the end of 2026, which people sort of took with a grain of salt. Like, is that really when it's going to be? Is it going to be beginning of 2027? You know, that kind of stuff. So they, and also no low price vehicle. There seemed to be some folks who were hoping for more. I mean, we saw the stock bumping around. This week it's down 2.25%. It's but did hit a recent high of 273. It's at 263 right now. Do you think it has upside potential?
I think it does. I think Tesla's delivering. We were very reassured to see margins starting to move back higher. They're spending a lot of money on building out these AI infrastructures for autonomous driving, but they have competitors. Obviously, we got Google yesterday in terms of earnings. Google owns Waymo, and Waymo just raised $5.6 billion to continue to develop.
Which some of these kids are starting young. Mike, Spy trying to make a statement. Let me get my coffee. It's written out 11:11. Gasoline inventory draw build of 6.66 million. 666 million. How in the hell, how did they come up with that? 666 of all numbers.
That does not compute.
I will not trade it. But I will go into the kitchen and get my coffee going. There's something else in there cooking. That's strange. Jim with his teapot. We're at the 200 SMA. It's kind of bearish, but I think we can bounce here a little bit. And then have an overhead resistance. Joshua fought the battle at Jericho. How come no noise?
Interesting chart because it kind of depends on how you look at it from the perspective of trend lines and support and resistance. So if we were to start here, start with these lows, you can see that we have kind of a triangular shape between our two blue trend lines here that was broken. We had a big downside breakout, then a very sharp reversal, big upside breakout. Now we're kind of in the middle of the two broken trend lines here. So by that measure, you know, they aren't a ton of help. They could still prove to be resistance and support. So they can be worth watching. But for, you know, maybe a more accurate way to look at this is that we're mostly range bound here between our dark red and our light green lines between about 108 and 120, save for this upside breakout that we had. Now we had a bit of a drop off here. We are hanging out near the 63-day exponential moving average in orange, right around 118 or so. RSI trending downward, momentum shifting more to the bearish side. Below the 50 midline, sharper green trend line broken. Shallow, sloping, upward green trend line still in play, but a more bearish lean now. In terms of support and resistance, red line here, repeated ceiling, the top of our range I was mentioning, near about 120, happens to line up with our old blue trend line and very close to our 21-day EMA as well. Don, his trade would be looking for a break above these old highs. Where I circled is roughly 126 or so, so looking for a very bullish move. To the downside, green line here, frequent stopping point for price. You can see many times we stopped around there. Also a volume node, so around 114, 252 EMA just below 113.
Okay, let's see what Don has to say about that. Some of your thoughts on that chart, Don?
Yeah, so my trade is a little bit less about the technicals in this particular case and much more about the outcome ultimately of the election. You know, one thing, people are having a tough time actually wrapping themselves around, like removing themselves from politics and wrapping themselves around trade specifically for the election. Regardless of who you want to win or who you think to win, there's actually some great trades out there. Everything from healthcare to the energy complex to even the U.S. dollar that's wide open right now. And again, they are absolutely leaning towards a Republican, president, but we actually have some turmoil that can be in the midst dependent upon the House. So as I was saying, like ExxonMobil specifically is right in the crosshairs of this trade. And, ironically, I could probably make an argument that they could be an upward momentum inside of ExxonMobil, regardless of which presidential candidate gets in, so long as the House actually remains Democrat.
Now you got me thinking about the VIX and the election, and I hadn't been thinking about it because I was thinking to myself, well, it's been sitting at 19 for so long, not much has been happening, went above 20 a bit, but the VIX could really spike next week. Is that what that's about?
So this trade is about repricing markets after the election. There's so many people that are like, finally the election. In terms of traders, finally the election. It's here. The volatility will subside to some degree as we get clarity. I take a whole different approach in there. I would actually look for,
uncertainty.
A couple of races that are, first of all, too close to call. Secondly, we're actually going to get some upsets. That's, without an equivocation, you're going to get some upsets. Things are going to get wild.
I think it's too close to call. Plus, I think it's
for you. Obvious.
Too close to call. Plus, I think it's too close to. They say it every election. I don't. But they'll say that this could be the most important election ever. This could be the most important election ever. And I'm actually thinking it could be the most important election ever, which I don't think it really matters anymore after what we've been through with COVID and the open border crisis. So I don't know. I think we live in a new country and we got to get used to it. That's my opinion.
We choose
the market ain't going to matter.
Facts.
If you trade like I do, or start to learn in a way, trade on both sides. Someone in here says we needed a sweep. I don't know if that's. I wouldn't want a sweep. What happened there? What the heck? Interesting. Jimmy likes SPX now. We're above the 200. So let the squeeze begin. Right now it's at 10, the time is 11:23. Fat cats are at lunch. I just now got my coffee and waiting for my broccoli to get done in there, and going to have broccoli and hamburger patty steak. And I'll be back to make some more trades. But I think we're going to break to 63, and then we'll be up till 1, 2, 3. So if you can count to 3, you can trade with me. Boom. Say what? Yeah. If you can count to 3, and we break to 63, you can trade with me. What do you mean by count to 3? Well, that's what we call here in trading world triple top. Wubbits, tubus, and then the free makes it freebie. If you can count to 3. Break it. Now, if I was going to use proper grammar, if you may count to 3, you can trade with me. If you can count to 3, you can trade with me. If you may count to 3, you may trade with me. Uh-oh.
You're pushing your luck, little man.
Uh-oh, 380. James, that thing just jumped a buck off that air option call you just called out there earlier this morning there on that there bottom. And you said we were positive above the 200 SMA. Now you just got through saying count to 3, you can trade with me. What happened? We broke resistance. We broke resistance. Man, I wish I could have told Sally about this back in 3rd grade. $3.90, folks. Magnificent. Would you like to go ahead and do what you do best when it comes time? I think Jamie's gave him plenty of warning on this breakout. Unless someone else wants to take the credit for it. This one actually is, well, like I said, it's a shame for the younger generation right now, but if I was in younger generation, I'd be looking good, I know that, so I'd probably be on YouTube. Be up there fighting Mayweather or somebody. Yeah, come on, you little punk. You gonna get your ass in the ring with me? You bob and weave and that shoulder roll you got. Bring it on, brother. That shoulder roll won't last three rounds. I dare you. Uh-oh, Mike here. Yep. SPX overhead resistance is 58.45. Now what is it? Do you see what it is now? It would have to be a double top. To the penny. Not a penny less, not a penny more. 58.46.75. It was a penny more. Just 20 pennies more. What it was. Oh well. You tried, Jim. Very interesting. That ain't supposed to do that, huh?
Overall, you're waiting on the New York Fed and other numbers. MasterCard will be coming out. What themes are you watching for? I mean, what do you sort of predict or surmise could happen here?
Yeah.
Well, I think that we're going to see consumers spend a little bit during the holidays. And part of that will simply be that in order to get the same stuff they got during the holiday shopping season last year, they'll have to spend a little bit more. But I also think that a little bit lower interest rates will help. And I think that there's still going to be that desire to go out and spend during the holidays. I think what happens next week with the election is going to have an impact, and how long that lasts. If we see it drag out forever like we did 4 years ago, that can have an impact on how people are feeling. But overall, I would expect consumers to go out and spend this holiday season.
Yeah, understood. When you think about
Don't tell a woman that.
and the flow of business and the economy, how do you feel about the economy? Are you worried about a slowdown in the economy?
I am. I think that there are just a ton of X factors out there, obviously one big one being the election. But I do think that generally the consumer has been pretty resilient. And even though debt is rising, delinquencies aren't going crazy. Even though interest rates are at record highs, people have generally had things under control. And even in terms of their overall income, their debt as a percentage of that income is relatively low. So,
correct.
All in all, barring a change in the job market, which would obviously change everything, I think generally the economy is pretty good, although there's no question that there are a lot of people who are just a job loss or a medical emergency away from being in some trouble.
Yeah, and that's the whole thing. They don't have a lot of savings. To your point, you were writing about credit cards, and a credit card may run 24% or higher. A store retailer card, which people may get over the holidays, could be 30% or higher. Do you see those coming down? How quickly can those come down for folks? Because those are high.
Yeah, they're high, and they're gonna be high through the holiday shopping season. Even if the Fed cuts rates a time or two the rest of the way, those things take time to get baked in.
We could drop one more candle.
I think that we should expect credit card rates to fall over the next 6 months.
I'm just going to be a little bit more
but
patient.
I don't think anybody should expect them to fall off a cliff. They're going to be high for a while.
Yeah, I mean, I like to use American Express and pay it off at the end of the month. I'm done. I don't like to hold a balance. But I have a few cards from stores or another one. I mean, it has, they've incredible, like 28%, 30-something%, and they don't come down. I mean, they seem to have only gone up.
You could have got that at $4 right there.
I'll really be scratching my head. I'll be really surprised if they come
The
down.
58
I
50s,
just don't see it happening. Only
they
because
bounced off the 21.
these cards for 20 years and nothing changes. They just have these astronomical rates on them.
4 to 460.
No question. And the rates that we've seen as the Fed continued to raise rates over time, we saw more and more cards go over that 30% threshold that used to be something that you would only get hit with if it was a penalty rate or if you had badly damaged credit. But now most retail credit cards out there come with a potential interest rate of 30% or higher, and some of them are 34, 35%. And what that says is that if you carry a balance, you just shouldn't get one of those cards, because any discount, any reward that you would get would just be swallowed up and outweighed by those high interest rates.
Matt Schultz, Chief Credit Analyst at LendingTree. Thank you so much. Great to see you. Appreciate it. Coming up next, the disruptors. George Sillis is standing by. He'll take a look at AMD after their earnings. The shares are selling off in a reaction. He'll break that down. He will also have an example trade on AMD for us right here on Trading 360. We'll be right back.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by,
Wow,
Carl.
9:40 already.
What are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Ooh.
So many choices.
Yeah, like Schwab.
Huh.
You can get full service wealth management, advice, invest on
Well.
my own, and trade on Thinkorswim.
Too bad,
Carl is
Jimmy.
the only front man you need.
That'd have been a nice trade right there. $4 to 6.
Have a choice in how you invest.
$6.50.
With Schwab.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to Trading 360. I'm Nicole Penelides, live on the floor of the New York Stock Exchange. A look at developing stories this morning. We've seen some huge moves on the heels of earnings. Qorvo is right in there. It is down over 25%. Caroline Woods is with us, senior markets correspondent here on Schwab Network, taking a look at this Apple supplier, Qorvo. It is selling off big time. What are people focusing on?
Well, it was actually an earnings beat, but yeah, you take a look. Shares down 26.5%. It's the second worst performer on the S&P
Nice
500
pop.
after Supermicro today. It makes radio frequency chips for Apple, as you said, for some of the wireless products. It was an earnings beat. If you take a look, adjusted EPS of $1.88 was 3 cents higher than estimates. Revenue fell 5% to $1.05 billion. It still managed to beat the 1.03 that Wall Street was looking for, but here's the kicker. That's all being overshadowed by weak guidance for the current quarter. If you take a look at the guidance forecast, third quarter adjusted EPS of between $1.10 and $1.30. Well, analysts were looking for $1.39, so that's pretty disappointing. The CFO said, looking forward, the flagship and premium tiers in the smartphone market are holding up well. However, content and ramp profiles vary by model, and we are experiencing unfavorable mix. We expect that to continue in the second half of fiscal 2025. So shares very much under pressure. Apple shares actually also under pressure today ahead of earnings tomorrow. In response
Apple
to
earnings
Qorvo's
tomorrow.
report, it got a couple downgrades from Raymond James and from Benchmark, both to the hold.
Before
or
earnings?
no price targets from them, but did get several price target cuts as well. Needham cut to 100, UBS to 90, TD Cowen to 85. City to 72, which actually implies a little bit of downside from here.
Bet
so those
that.
are just to name a few. There are several
That's
others.
the way they
But
were
shares
pumping
down
it.
26.5% right now down almost 35% year to date.
Yeah, it's all about the guidance, and that really tells the story there, down 26%. Okay, Caroline Woods, thank you so much. It's time now for our disruptors, and George Sillis is with us, senior markets correspondent here, taking a look at AMD. Now, those shares are
George!
what stood out in this report, because they're down not 10%, but 9.5%?
Yeah, I think one of the things that stands out for AMD is what a lot of folks maybe not expecting. If you consider AMD's growth story, it's all about their MI300 chipsets, which are essentially competitors to NVIDIA's data inference chips. Now, AMD also has GPU technologies, but they're still way behind when it comes down to the technological innovation that NVIDIA has, in which NVIDIA still has about 90% of the data center market as well. And so if you compare the numbers for AMD, they actually came in with really good numbers. They met the estimates for earnings at 92 cents. That was 31% higher than for the same quarter last year. Then their sales were higher by 18%, but they came in essentially at 6.8 billion versus the 6.71. So they fractionally missed the revenue, as well as if you look at the guidance, albeit again they came in pretty much in line with guidance, but essentially everyone was looking for something more promising when it comes down to the data center market. Quarter over quarter, the data center revenues for the business was higher sequentially, 25% year over year, 122%. But the challenge is that AMD is still relying on its traditional embedded CPU markets, as well as its gaming chips, which both of those markets were down. Versus gaming was down about 69% year over year, and their embedded segments were down 25%. So it was really a mixed report for AMD, but nonetheless, because the company didn't actually raise their guidance and, of course, beat the revenue estimates for the quarter they just reported, they're coming out and selling the stock. So this is essentially a situation where there was sort of an overpromise, but they underdelivered. But nonetheless, a lot of the analysts are still bullish on the name. If you look at UBS, they still maintain an outperform rating, but they did reduce their target just fractionally from 210 to 205. Barclays is still bullish, but they actually lowered their price target to $170. So I think the situation for AMD is, if you look at their industrial automation and, of course, their field programmable chipsets, of which they purchased Xilinx a couple of years back, those were areas that were weak, and it might have been because of the automotive areas of the industrial space that was been relatively weak. But they are growing their data center business, but essentially they still have a fraction of the market share that NVIDIA has, and that's, I think, why the stock hasn't performed well overall in the last year, but also has been significantly underperforming NVIDIA.
All right, and also, I know Lisa Su sees lots of growth opportunities, has been happy with a lot of things pertaining to AMD, but shareholders must be extremely frustrated.
Right back.
The stock is up just
Get my lunch ready.
this year when the NASDAQ composite's hitting new highs. The SPX year to date is up 22%. It certainly has been an underperformer in the group. Let's talk about an example trade.
It has. Sure, it has. And overall, what's happening with AMD is they're becoming, I would say, one of the most complete semiconductor companies out there. Everything from CPUs and GPUs and embedded markets in the industrial space. So with that said, it's going to take some time for all those divisions to manifest, especially the data center market, which they still lack market share power in. So ideally, I don't think the stock is going to do much, to be honest with you, between now and maybe the next earnings announcement. I think it'll be maybe a market performer. So what I'm going to do is I'm going to structure a December bear call spread. In other words, I don't think the stock is going to move past intraday highs of yesterday, which the stock was trading near $167. So I'm going to go out to December. I'm going to sell the 165 call, and then I'm going to buy the 170 call above it. And altogether, you could harvest or earn about $1.50 a share, $150 contracting credit. So the whole objective of the trade is for the stock to stay contained below 165. And the delta on that 165 call is about 33, so that implies there's a 2/3 probability that the stock will stay below that level between now and 52 days till expiration. So you also have to consider break even. It's at 166.50, and then your max loss potential is $3.50 if the stock hits 170 or higher by expiration. So it's a trade that allows us to harvest some yield. The stock can also continue moving higher up to the 165, but that's essentially your barrier for max profit.
Yeah. George Sillis, great to see you. Thank you for the disruptor today. We appreciate it. George Sillis with AMD today, our disruptor. Coming up next, our 360 round. We'll dive right into those earnings from Alphabet. So we're seeing the stock here on the move up 5.7%. We'll break it all down. Our panel is ready. We'll be right back on Trading 360 here on Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Trading 360. It's time for our 360 round. We're talking all about Alphabet after the quarterly report, where the stock is higher by 5.8% as we speak, moving to 3-month highs. Year to date, it's up almost 30%, 1 year 45%. Joining me now, Andrew Wong is with us, managing partner at Runnymede Capital Management, and Ahmed Khan, equity analyst technology at Morningstar. Thank you both for being with us. I mean, some of the takeaways, some of the things I read said the earnings crushed it. The investments they've made in AI and such have really helped to lead to strong growth overall. AI investments boosts cloud sales, lift the maturing ad business. What say you here, Ahmed?
Yeah, exactly as you said. We were really impressed by the company's AI strategy. We've highlighted that in previous notes as well. We don't agree with this perception that had been built up that Alphabet or Google is an AI laggard, and we saw evidence of the fact that the company's AI strategy is sound in this quarter. One thing that I'll particularly highlight is the profitability for Google Cloud, with operating margins from Google Cloud jumping to 17% from 3% a year ago. And we think that there's plenty of room to run in this AI story as we think about Google Cloud, but also advertising more broadly.
Yeah, the maturing ad business, that's a part of the whole story too. Andrew, what stood out to you?
I think it was a good report. I mean, revenue hit $88.3 billion. That's up 15% year over year. And what's notable is that Google's search and ad business were stable. The ad business decelerated in Q3 70 basis points to 10.4% year over year. Search slowed 150 basis points to 12.2%. The big focus for investors is Google Cloud revenue, surging 35% to $11.4 billion. This result indicates that the cloud segment fueled by AI-driven applications is scaling profitably, and with its operating income exceeding estimates by over 70%. I think the key is that over 30% of all earnings growth in Google's model in the next couple of years is driven from the cloud business, and Google is very well positioned to take share because of competitive advantage in AI. So it should have legs.
Yeah, cloud 35% growth, Google services 15% or 13% growth, so that's good news there overall. So you're certainly seeing the growth there. I know you have a fair value estimate that you raised, Ahmed, to 220 from 209 and a 4-star rating. We are just at 179. So you're certainly feeling pretty optimistic on this name. I mean, it sounds like you really like it a lot.
Yeah, so we think that some of the market concerns about antitrust are overblown as well. So if you think about the price dislocation or decompose the difference between our estimate and where the stock is trading, we think that there's a continuing perception about a weakness in AI perhaps, and the second component is antitrust. And we feel pretty good, as you said, we feel pretty good about the company, we feel pretty good about their strategy. And with regard to antitrust, it's a long drawn-out process, which is going to take years to resolve, whilst Alphabet is investing in all these other areas, such as Google Cloud, which should be a much larger part of the growth story for the company as a whole.
Yeah, yeah. I was also, sorry if I interrupted you, I was thinking about YouTube also and how the elections and a lot of people were investing in advertising and things like that. That helped to boost YouTube, I believe, or at least it was a concept that I read about. What are your thoughts on YouTube's and other parts of this, Andrew? It sounds like Ahmed has a price target of 220. Would you be buying this stock at 179 today?
Yep.
I think it looks good here. I mean, if you compare Google's valuation to the rest of the Magnificent Seven, those antitrust issues have been an overhang, so the multiple is not as high. And the other part of the story, in addition to Google Cloud, is YouTube's subscription services. It's TV services as well as YouTube Music, also growing quite nicely. And just a little bit of anecdotal evidence. I have an Inspired Money podcast YouTube channel. About 30% of viewership comes from people watching TVs. So I think that it's impressive that Google as a TV source of content is growing and increasingly becoming important media source.
Yeah, a good point. And Ahmed, where do you have some other 4-star ratings? Maybe similar in the group or tech?
So right now, so my primary area of coverage, as we've talked about on this show before as well, is cybersecurity. Within cybersecurity, while they're not trading in the 4-star range, we continue to like Palo Alto, Fortinet, Educator, and CrowdStrike as high-quality companies. Meta, which is a peer to Alphabet, is also trading in the 3-star range. But yeah, not any other than Google, not any other 4-star picks in my coverage right now.
Yeah, so it really shows the standard that this is. Andrew, what else are you buying these days or like to buy?
Yeah, just 2 points to leave everybody with. I think that the AI story with Google is really interesting. I did want to mention that it's not only the growth story, they're also using AI to be more efficient and cut costs. And I think it'll be interesting to see if that has implications on the rest of the S&P 500. Can companies use AI to reduce costs? Meta is reporting tonight. I like Meta a lot, but I think it's worth noting that the expectations are high. It's trading at a pretty big multiple, and it does not have the cloud or subscription services that YouTube has, that Google has.
Okay. So we'll watch for that as well. Thank you both, Andrew Wong at Runnymede Capital Management and Ahmed Khan of Morningstar. Thank you both. Good to see you. That's going to do it. Thanks for joining us here on Trading 360. I'm Nicole Petalides. Download our free Schwab Network app. It's available in the Apple App Store. Tune in 24/7, schwabnetwork.com. I will see you at 2 p.m. Eastern Time for the watch list. Please join me then. Keep it right here. Fast Markets is next.
This election season, stay out of the muck and the mudsling with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
What does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today. We're talking big tech earnings again. We'll have some discussions on the markets, option strategies. We're going to lead off with Meta Platforms, which is up over 65% so far this year into their earnings, and Microsoft, which has been consolidating recently into their quarterly report after the close. And like Foley will break down consumer sentiment data in DoorDash. The delivery company stock is up nearly 60% so far this year into their earnings. Now, let's take a look at major indices, which continue to gyrate around the flat line. We get the S&P 500 up over 0.25%. The Dow rebounding despite those losses in Caterpillar, up nearly 200 points or 0.5%. NASDAQ leading to the downside, off 0.1%, and the Russell 2000 small caps turned around. It was negative earlier this morning, but now up 0.6%. To help me break down this market action, let's bring in my co-host. That's Kevin Hinks. Kevin, maybe some consolidation, maybe warranted at this point, but you got to remember all four of the major indices are in positive territory this week, just off all-time highs here for a few of them. But it still seems like I don't know if the market knows which way it wants to go at this point.
Well, there's a lot going on.
Right.
Whatever part of the market that you focus on, be it corporate earnings, be it data, be it bond market, be it currencies. There's something in there for you. I mean, it's just a lot. It's a lot to manage. So what you got to do is you got to stay with the trade right in front of you, and try not to look out on the calendar because it's intimidating. So you stay right here, and a couple of the big things. I thought the GDP data was strong, but there were some worries in some of the income data that was sharply lower than Q2. I thought yesterday's bond auction was interesting. Note auction, I guess it is, in the 7-year. It kind of turned the market around in yields. And I think that's important. I think the data this morning and the earnings this morning were important. I think Google Alphabet killed it, and it posed the question, how big is this cloud? This cloud is massive.
Yeah. And they're growing at, Google Alphabet grew at a 35% clip year over year
What
on
is
their
Amazon
cloud.
doing? Well,
There's still the.
What is Azure doing?
Right.
I mean, the cloud looks like it's going.
Yeah, where it's lifting, that tide is lifting all boats at this point.
It's not Amazon, Microsoft, or Google gaining market share on the other. It's the whole thing is exploding.
Yeah.
So
I actually posed that question to our guest this morning.
Oh, really? Yeah.
I was like, it's just exploding.
It's kind of undefined.
Right.
So I think there's a lot of things going on, and then there's doubts on a couple firms.
Right.
And what is Supermicro doing to NVIDIA? Is it right? Can you connect the dots? I don't think you can.
Right.
But it's not like it doesn't affect it.
Right.
There's a connection.
Right.
But accounting, you can't really take accounting problems over to NVIDIA. But doesn't mean the stock's going to be up today.
It's
That's for sure.
Supermicro's competitor Dell up pretty significantly on this news. Maybe causing some headwinds for the company at this point, Supermicro. We're going to hit on that, but let's expand this market conversation. Bring in Kevin Green, Senior Markets Contributor here on the network. KG, what's sticking out to you? Because I looked at that ADP report you and I were on together when that came out, and more than double what the expectations were. So that's kind of signaling that the economy's healthy, job market's healthy, right?
It does. Look, I'm kind of there with Kev. The market's kind of all over the place. If you're kind of looking at the advancing stocks in the S&P 500, we're sitting at around 66%, but you have some of the major industries or sectors kind of weighing us down. Obviously, semiconductors with the SMCI news, along with some of the news that we saw from Qorvo yesterday evening, kind of putting a little bit of pressure to the downside when it comes to the semi space. And NVIDIA is getting hit with that. We have the SOX, the semiconductor index, down about 2% here. That's really not helping, but we are trying to maintain, and we're hitting a key area of resistance right now at the 5850. The biggest question that I have, though, with the economic data that came out today, for the most part, all of it was relatively strong. Even if you're looking at the GDP number, 2.8%, we're looking at 3%. Yes, it came in a little bit light. But you're talking about 2.8% in an environment where 6 months ago, we were thinking that we might be in contractionary territory, fairly close. How does the Fed actually cut in November, given the data that we have today, and if this data for ADP is going to match the jobs report on Friday? I find it very, very difficult. I think the market is really trying to navigate that too. The equity market seems to be holding up there, but I think the Treasury market's just trying to find its equilibrium. Until we get that jobs report on Friday, I think we are going to still continue to gyrate around this 4% to 4.25% in the 10-year, and these wild swings on an intraday basis is really putting a lot of volatility in to a lot of these fixed income products, as well as the sectors related to them. If you're looking at utilities, which is actually kind of green on the session last time that I checked, but down around 4% over the last 2 to 3 trading sessions here. You can say the same thing for real estate. So I think there's something in here for everybody, but we just haven't had that data set yet to really kind of thrust us above some of these key areas of resistance for the S&P 500.
Yeah,
that's almost
definitely
perfect.
A lot to digest here. GDP, Kev, if you take a look at it, personal consumption expenditures
surged real hard resistance.
3.7%, fastest since Q1 of 2023. So people are still out there spending. Government spending was just insane. 9.7% surged to 9.7% rate. So consumption's still doing well on that side of maybe some of the data.
Americans with jobs and government officials with money in their account and their.
And Randy, we are at number 4. Honey, would you please bring my plate of food to my desk today? Jimmy's calling my name. He says if you want to count to 4, you might want to make a little bit more. If you count to 5, we might just take a nosedive. If you can count to 3, you can trade with me. We have a couple ideas here. Jimmy's pulling them on out right now. He's going to draw in another shoulder line. From right there to right there. Okay, that's a double-edged sword right there at 58.46.14. Booyah. So we'll see if we hold. If we don't hold, we could get a pretty good knife. Would you put that on 1 minute? It is, you dingbat. Yeah, Jim, this is, need to make an appointment to get your nails done. Oh shit, my nails? Wasn't that supposed to happen 2 weeks before Thanksgiving? No, we got you down for tonight. Okay, I'll be there. Jim, we just failed to support the 63 EMA. If we don't hold this, are you telling me that we're going to drop a lot more? Yes. I'm going to make sure I'm looking at the right one here. This will be the SPX. So we're going to go over here to the SPY. And we're going to look at... Ooh. Okay. SPY says we're bearish now. We could drop more. So Jimmy waits. We could drop another 6 points. That's something I miss. I've sat here and watched this 370 to 430, 440, the October 30th SPX put.
Yeah.
Rebounded from losses earlier. It was down over 4%. But Reddit, Kev, real quick before we leave and take a break. Reddit up 39.5% today. They were profitable last quarter. 47% daily active user growth. I mean, these were probably some of the best numbers. And to turn profitable that quickly, this was only their third report as a public company.
Because that was the first question everyone asked when they went public was, are they ever going to be able to become profitable? And they did it very quickly.
Yeah.
So yeah, it's impressive, and everyone knows what Reddit is. Everyone just doubted that they could monetize it enough to make money, and boom, there it is.
Yep, definitely. Average revenue per user came in above expectations. Also, advertising. There's a lot of advertising money out there because you can't turn on your TV or listen to anything without getting hit with some election advertisement there. So we'll see if that lasts because election's next week. All right, let's take a quick break here, guys. When we come back, take a look at Meta Platforms, social media stocks up nearly 70% so far this year. They report earnings after the close. Bar really high on this one, so we'll continue to talk big tech when we come back.
Dow Jones 174, S&P 1160, so not much. Are we dropping to 58, 39, 73? Are we going to do that?
Every morning, every trade, always live. Expert earnings analysis.
Or will we stop at the 200 EMA?
Changing trend in markets. Available anytime, anywhere.
That's the real question.
Any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Hello, Oliver.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Fast Market here on the Schwab Network. We're talking big tech earnings this week. Meta Platforms reports after the close. Shares are up, as I mentioned, nearly 70% so far this year. Let's bring in Caroline Woods, senior markets correspondent here on the network, to help us break this down. What are the expectations, Caroline? Because we've been talking high bar, low bar, and this has definitely got a high bar.
Yeah, high bar. You said 68% year-to-date gains. Take a look at the one-year chart, up about 100% over the past 1 year. So the bar is high, but analysts are bullish. Almost 90% still have a buy rating on shares heading into this report.
Oh, we have a
this,
knife
of course,
here.
is going to be all about digital ad spend, and then, of course, how much Meta is spending on AI to
There's your
boost
200.
that digital ad spend as well. We already heard from Reddit and Snap. Both managed to beat expectations.
520.
And posted gains in daily active users
The
and advertising.
5840s.
So that should bode well for Meta heading into this report. Wedbush was also out with
Beautiful.
a note with its survey results saying that 43% of advertisers expected to increase their digital ad spending by more than 10% versus the prior year's fourth quarter. So that should bode Meta.
Sorry, but you're in my way. We just now hit the 200 EMA, and we could hit the 200 SMA for the shoulder line, which I think we could easily do. So I wouldn't jump right into calls yet unless you see something different. I mean, we can. If we go in, go small, but Jimmy will have the patience to wait for the 200. Do you understand me? God, you're scary, Jim. I'm sorry, but that's just the way I am. $19.56. You know what I mean, man. I need to go for a little walk. Crowd's going wild here. Looking at calls, calling all calls. Let's just all get along. I'm going to go into the kitchen. I want to turn the microwave on to 20 seconds and see if I can get it at the perfect temperature for the cup of coffee that I'm about to finish. And I'll be right back. We are approaching the 9 EMA right now in the 1 minute. It's trying to make a business decision. We'll see where I am when I do get back. Oh, you're not in the... You're not in it. No, I'm not. Well, you can't make money like that, Jimmy. Okay, we're going to drop us down to the 5850s. 330. Pick one up there at 330. Excuse me, this is Jack. Washboardjim is now watching the SPX. This is called Lotto Play. No, I used to sit up by the pool and I'd be sitting up on my chair and the children would come up around me and all of a sudden the hair on my legs, they'd start standing up. What the fuck going on here, man? So we're at 310. We got the 200 SMA right here. We don't hold the 200, EMA. So if we don't hold this 200 EMA, we can simply jump in the calls at the SMA. We have two reasons. We have what you call inverse head and shoulders. They can easily drop down to the 5836, which, 5836. 5836. We might be looking at a different call instead of the 5850s. Now these are at 320, 330. If I was to jump into this, I would wait. Yeah. Jack around. Yeah, he's out here talking to the people about this next trade we're getting ready to jump in. Okay. Tell him we need him back here at the office. $58.50s. I didn't get in there and get my coffee warmed up. Damn it. This could be a problem. We really don't want it to break. We want it to drop one more big candle. We get one more big candle. So I'll be right back. I'll go put this in for 25 seconds. I think that's what I said, 20. Is that a pubic hair in my coffee? Better not be a pubic hair in my coffee. Okay, we're getting ready to squeeze, magnificent. I'm calling it. Okay, calm down. Jim, will you put in a 9 EMA right there? Yes, I sure will. How do you spell that? 9, the number 9, in small parentheses there, whatever you call it, EMA. I did it. Woo! People there does not understand how important that was. Some things are just more important than others, you know it. And not to mix the 9 and the 8 is very important. Mr. Hickey's on.
Forum's example trade. Thanks to Kevin Green, senior markets contributor here, breaking down markets and meta with us. But coming up after the break, Andy Swan from Mike Folio. He's going to join us to take a look at sentiment data in DoorDash ahead of their earnings. Delivery stock is up nearly 60% so far this year into earnings after the closing bell. Stick around.
Wrap up the trading day with me, Oliver Rennick, for the biggest
Oliver!
3 p.m. Eastern. It's Market on Close.
Fat Cats will be back in another hour.
Network.
Trading at Schwab is now powered by...
Fat Cats will be back in another hour. We're trying to squeeze out of this here snake. I don't know if it's either an up... If we knife down to the 5840.17, I think that'll be a very strong buy. If you go in small now, that's what I would do. 1 or 2 contracts and stretch my legs. Oh, Mr. Prison Guy's up.
Gorilla.
Oh,
As far as
nice.
Food and everything delivery now at this point. The stock's had a spectacular run up 57% so far this year. Do you have the data that backs this up going into earnings, or is the bar too high here?
Yeah, probably both. I think, we have the data to back up the fact that DoorDash is absolutely the dominant leader in food delivery.
Like at 58.40.
Really just kind of taking over the entire field, 55% plus of the market share. And that seems pretty stable right now. So really, if you're talking about DoorDash, the market
Okay, get ready.
is so stable. You have to think, where's the growth come from? It comes from either a tailwind of just delivery in general
58.50.
growing, or can they expand their
Calls.
offerings? And they're trying to expand their offerings.
255.
That's, on the grocery side, which I think is a little bit of a different animal,
Okay, these are the 58.50s. 58.50 calls at 255 off the 200 SMA. We're at 3:30 now. Could get out here, be done with it. 3:40. I mean, easy sell. Boom. Now it's 3:20. Okay, now I'm going to go get my temperature, coffee right temperature. I want to be back, and I want this thing to be at 5846.23. Okay, where are we? We're $3. It'd be nice to see a nice little breakout here, please. Just a little boom. You easily come down and hit the 63 or the 200. Back at 260. That's the hold here. I'm in trouble. This ain't looking too good. Back to my first entry. Break it. Oh. 310. Now we're talking. Can we get a big rush? Come on, prison guy.
That's Andy Swan, co-founder at Like Folio, breaking down DoorDash data, RSI, Kev, 73.
Blanket.
Yeah.
Overbought territory, but who cares, right?
There's a
Stay
difference
overbought.
between how much we like the company, all the good things they're doing, and making money.
That's the hard part.
Sometimes you have to divide the two.
Right.
And so
It's not funny, old man.
You know, as popular as this company is, as good a job they're doing, the paper money trade I'm looking at is on the short side, Tom.
Okay.
It's actually
Just an example.
put diagonal.
Yeah.
Right, exactly. Buying next week's 155 put, selling this week's 145 put. Paying about 450. I think it might be even a little higher than that now, but 450 debit is what we put in. And like I said, this is in the calendar spread family with an embedded put vertical in there, and yeah, playing the downside short about 22 deltas, collecting a nice amount of theta because vols are high. The dispersion is a healthy one at 141 and 76.
Right.
Are the corresponding implied volatilities. So there's a little dispersion there, and yeah, just a little bit bearish, Tom.
Yeah, and it makes sense if that's the assumption that you have. This is just an example trade. If you want to take that bearish tint to this earnings report where it's going to maybe fall over the next week, this is a strategy that may take advantage of that. So let's break it down. Kevin mentioned to 1 week wide put diagonal to the downside, buying the November 8th weekly 155 strike put. That's basically at the money at this point, and then selling the November 1st weekly, the 145 put, so $10 wide bearish, put diagonal to the downside. You're paying less than half the width of it, Kevin, by paying a 450 debit. Might be a dime higher than that right now, but 450 debit, $450 in risk. You can see there at Apex is out at or near that short strike on the 145 strike. But Kevin, if you look at it, you mentioned that dispersion, selling on aggregate about 141% implied vol in that November 1st weekly cycle on the 145 put that you're selling, and then buying about a 76% implied volatility on the November 8th 155 strike put. So when you look at this, yeah, you have that opportunity to roll that short option if the stock does fall. Your break even's about 152 because there's so much option premium in that short option. You do have some assignment risk on that. But when you look at this type of trade, if say the stock goes down to 147 and this thing expands in price, do you close it? Do you roll that short option? Because you're going to get more value for that short option because there's only 2 days to expiration on that.
Yeah, the answer is, if this is an earnings play, if you're playing it like a short-term trade and like it's set up, the long as 8 days, the short is basically 1 day. Yeah, I think you close it. I think you figure out whenever you get the move on the downside, you put in a fair limit order and you sell it.
Right.
I mean, can you? If you're really bearish, if this is a core position that you want to put on, maybe you roll that November 1st expiration and make it a vertical spread. You can do that if you wanted to, and collect more premium on that. But if you're going to move to 147, you'll probably have a nice winner on your hands.
Yeah.
I would probably just put in an offer and get out.
Yep. It depends on what you think the stock's going to do after. If it stays around 145, the price of that roll is going to expand as you get closer to expiration. So you have to start making some decisions. Does it rebound after the initial sell-off? But the idea is that the stock will go down for you to be profitable. Otherwise, you've got all your risk is to the upside above that break even. All right, let's take a quick break. When we come back, we're going to extend this tech earnings conversation. Take a look at Microsoft, tech giant stock. It's been consolidating recently. Maybe the bar is a little bit low in this one into their quarterly report after the close. Stick around. We'll talk about it when we come back here on Fast Market.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Microsoft, let's get a quick market update as stocks continue to gyrate around the flat line. We get the benchmark S&P 500 up just fractionally, up about 0.1%. Dow Jones Industrial Average pushing back. We got some nice gains in Visa and some other names in the staples in there, pushing back against Caterpillar, which rebounded up about 123 points. NASDAQ down about 0.2%. The Russell 2000. The small caps up nearly 0.5%, leading to the upside. We're seeing a fall in the 10-year yield under 4.25% at this point, lending some support to the small caps, and also dollar's a little bit weaker. Also, look at some of the asset classes. Crude oil up about 2%, back near 68.60 a barrel. Gold off those all-time highs that we hit overnight, above 2,800. VIX near that 1950, continuing to consolidate, and I mentioned that dollar a little bit weaker, but still above that 104 level. So keep an eye on that. But now let's get into a discussion about Microsoft. Had earnings after the close. The stocks kind of underperformed maybe some of the other Mag 7 names recently after hitting all-time highs in midsummer. Let's bring in George Tillis, senior market contributor here. George, give me your take here on Microsoft. A bunch of different silos of revenue generation. Is the market discounting Microsoft going into earnings?
It could be. I mean, I heard you mention, the bar is set quite low for Microsoft for the quarter, and I think about, the enterprise and personal computing business or software. I mean, these are areas that are not necessarily cyclical, but the stock, as you mentioned, has pulled back since the summer. But if you consider, the growth areas of the business, obviously Azure, which is the enterprise cloud with 20% market share behind AWS, doesn't have too much market share, so there isn't sort of a risk, if you will, of some DOJ or Department of Justice inquiries into, market share leadership or essentially, exorbitant, if you will, profit making like Google. But at the same time, their personal cloud business has actually been growing, and artificial intelligence, they've been investing quite a bit. And I think that's particularly the reason why, in terms of hardware and software, their earnings per share estimates are quite low. Like you mentioned, they're expected to earn $3.10, which is just only 3.5% higher than the same quarter last year, where they earned about $2.99. But sales are expected to be quite robust at $64.5 billion, higher by 14% on a year-over-year basis. So I think, ideally speaking, this is going to be a quarter where the company's probably going to talk about their investments in hardware for artificial intelligence. So one of the nice things about Microsoft that a lot of folks may not realize is they were one of the largest and earliest investors in OpenAI's ChatGPT. So they're integrating that technology extremely well in their business. There's also the other, core businesses or non-core businesses that might demonstrate some growth, and that includes display ads. That also includes their social media platform, which is LinkedIn. So I think these are other areas to maybe focus on for their growth. But nonetheless, I do think that their productivity and business process software systems business, which is their core, that includes their Windows operating system, as well as the suite of productivity tools with Office. They've done an exceptional job maintaining market share in that technology, both at the household level for personal computing, but also at the enterprise level.
George, early is such a key word when we talk about Microsoft, right? They were early into ChatGPT and AI. Now they're early getting into energy and nuclear energy to actually give energy to all this AI. They seem to be ahead of everyone in all these key areas. And the ecosystem that they're building, it's comparable to all the best ecosystems out there like Apple and all these other firms. All the things that they can do, the massive amounts of companies. That doesn't mean the stock can't sell off. If you look at the earnings release last quarter, they were in the middle of a pretty harsh sell-off there, which brings us to the conclusion that Tom talked about the bar being a little bit low. They're going to have growth, you know it. They're going to talk about a wide breadth of companies that they control. What should we look for? What's the key of all this should we look forward to? Is it CapEx?
Well, I think so, and I think that's the culprit, if you will, in terms of why the earnings per share growth compared to last year is expected to be low. But see, it's not a bad reason, ideally speaking. So I think that's, again, going to be a situation where perhaps they're under-promising on earnings, maybe over-deliver. Maybe they're starting to generate a better return on investment on that CapEx. And so that will be indicative of the guidance the company provides. But the other thing is, you have to consider, obviously, fundamentals, growth rates, valuation. Right now, if you just look at the earnings estimates in terms of growth now for EBITDA going forward, 18% is the number, and that's about 3% higher than their average. And sales growth estimates are expected to continue to be robust, albeit a little bit lower going forward at 15% versus 16%. But still about 2 percentage points higher than their average. And so you want to see EBITDA growth faster than sales growth. If that's, for a long-term trend, this quarter, if you just compare the numbers, the earnings growth is actually going to be less than sales growth. But it looks like the manifestation of that CapEx might be something to look forward to in the future on a forward basis, and that's how the stock retrends to the upside. The other thing I'll mention, just quickly on a technical basis, around $440. If you look on the daily chart, looks like there's a cup and handle formation. If you like those kinds of things from a tech standpoint. And the other thing is, it's bounced 3 times off that 200-day moving average. So it looks like it's setting up potentially to break out, but it also could disappoint. So you have to keep that in mind.
Yeah, it's been hugging that 50 and 200-day moving average, which are basically right in line with each other. They've been hugging that, acting a little bit like support over the last week or two.
It's $50 off its highs.
Yep, 468.35 was the all-time high, and that was in early July. All right, great backdrop for us. Appreciate it. That's George Tillis, Senior Markets Contributor here on the network. You know what, Kev? The thing that stuck out to me while looking at this stock, and typically we talk about implied volatility levels, that what the option market's pricing for the stock to move. This is a $436 stock. The anticipated market maker move, according to the option pricing in there and supply and demand, plus or minus $17.25 either way. That's a little less than 4% move either way. So implied volatility levels are elevated, but not that much. We're seeing 6, 7, 10% moves anticipated in a lot of tech companies. But Microsoft with 7 billion share float, it seems like it doesn't seem like it has a lot of volatility in it right now.
It's harder to move something that has 7 billion shares.
Sure does.
Some of the other ones that we talk about doesn't mean it can't. Right. But it's a little harder. And you're right. That move, the eyeball test, seems a little low.
Yeah. Yep. So that's the way that I looked at it. So implied volatility level is not expanding as much. If you look at the IV percentile rank, it's still up near 70%. So it's in the top maybe third that we've seen of implied volatility levels over the last 52 weeks. So keep that in mind. So I looked at a strategy that takes advantage of a move. Maybe you think that implied volatility levels aren't high enough going into this. If you think this thing's going to move, whether it's to the upside or the downside, you don't have to choose. You just think it's going to move more than that one standard deviation that they're pricing in. This type of strategy takes advantage of it. We're buying an iron condor in here, really short-term positioning in the November 1st weekly cycle, where we're going to buy the 455 strike call to the upside, sell the 460 call. You're buying that call vertical. Then on the put side, you're going to buy the 425 put, sell the 420 put. Four-legged long iron condor, you're paying roughly about a $2.60 debit on that. There's your risk, $260. With, if it goes below 420 on the downside or above 460 on the upside, your potential reward's about $240. So the debit you pay is going to be your risk on it. You can see from the risk profile, your break evens, 422.40 on the downside, 457.60 on the upside, Kev. It doesn't seem out of the realm of possibility that the stock can move up or down past either 420 on the downside or 460 on the upside.
Your put vertical is right on the spot of the expected move, down to 420. The call vertical, a little further out of the money. So that brings down the net debit that you have to pay. So all these things combined, but you're playing for a move, Tom, right? You've got a short window, but you need a move. And there's been some moves, the good news is. And if you think the move is low, you're playing for that being wrong. You're playing for $17.
Things are going to get close here.
And I think the way that you look at it, if you're doing a trade like this, and we talk about it, this is just an example. If you think it's going to move more than one standard deviation, this might work out for you. But then you've got to take into context, it's a short-term trade. You don't have a lot of time in it, right? So you need that move. Typically, we sell iron condors when we look at examples where you want it to remain neutral. This is the opposite. You don't want a neutral move. You want it to move quickly and rapidly away from the current share price of about $436 also. So good look at a long iron condor if you think this thing's going to move more than expected. But that's going to wrap it up for Kevin and I today here on Fast Market. But stick around right here on the Schwab Network. Next Gen Investing is coming up.
This election season, stay out of the muck and the mudsling with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial.
The old guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy. So
what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, we are seeing 3 of the 4 major averages
Alex
here
Coffey.
higher. Actually, some weakness led by the NASDAQ, which is down just shy of 0.2%. But all things considered, where I was looking at markets this morning before we actually opened, I think that this has been actually a pretty moderate session, especially when you consider that NVIDIA, which is, I mean, like the behemoth of our market, it's down about 0.8%.
Yeah, this is a day where we talked about this actually, Jenny. We talked about the fact that there are so many things on the calendar. Unless you line them all up in one direction, it was going to create a choppy, tug-of-war-like market. So what do you have? You have Eli Lilly and AMD getting crushed on earnings. You have SMCI come out with this story. Ernst & Young is, ditching them in terms of covering them from accounting. Then you look at Alphabet, blowout quarter. I saw, other names like Visa, blowout quarter. And so it's like there's good and then there's bad. Pending home sales is strong. GDP was strong enough. The ADP job growth was good. You have a market that, depending on what you're looking at, you're going to see different messages. And so what happens? A little bit of a push-pull, a little bit of a tug-of-war, where you have names like NVIDIA, names like Apple, AMD weighing down the market, but you got names like Amazon, Alphabet, and Microsoft equal and opposite force in the other direction. You look at the S&Ps, basically flat on the session.
I don't know, it's kind of also themeless. I know I've been joking that we need a theme with these earnings because Supermicro, Qorvo, and AMD and Skyworks Solutions are some of the worst performers in the S&P 500 today. But then you also have weakness with Chipotle, Eli Lilly, with some weakening demand for those GLP-1 drugs that has been such a good story for that stock this year. So it's pretty mixed across the board, to Alex's point, but we will break down more of those earnings reactions, of course, when we kick off our show here with upvote and downvote. We will be charting and trading our upvoted names. FOMO, we're breaking down one other of these mega cap names that is set to report this afternoon. That is Microsoft, which I think is positioned very interestingly after we got Alphabet having more favorable reaction to its quarterly update. I tend to think the two of them are comparable, although all of these companies are so huge. It's sort of like they're their own beasts. But we'll also be, of course, diving more into that Supermicro story. The stock's down 32% on the session and some change, so it's a pretty blistering move to the downside today. And we'll close things out with Peloton, which used to be an old reliable of mine. It's since traded around $6 for a good part of the year, but has earnings out tomorrow morning.
Yeah, earnings, and more earnings as we go through the show here today, Jenny. So exciting stuff. Some are post reports, some earnings previews as well. Big moves abound and big moves perhaps in store for some of these. Let's do upvote, downvote, not endorsements, not recommendations as always. Starting out with one of those big moves. New all-time highs in Reddit as this social media theme dominates upvote, downvote. Reddit, the newest in terms of its life as a publicly traded company of our group of 4 here, but a massive, monstrous-like rally of up over almost 40%.
I know, so I just said how Supermicro is down 32%. This name is rising by that degree and then some. I mean, I guess right now relatively like different prices, but still up $38, shooting well over $100 a share. I mean, a really phenomenal reaction, obviously, to its earnings, where there was positive commentary out of management. There was overall, like, really strong fundamentals. I think that the key numbers, the fact they were able to earn 16 cents a share, Street was expecting a loss of around 8 cents per share. So that was a huge beat. Revenue also topped around 348 million, that exceeded estimates of around 311 million. That also marked
about 66% growth on a year-over-year basis. Adjusted EBITDA did turn positive, 94 million roughly, compared to a loss of almost 7 million a year ago. I mean, all of this favorability as far as its profitability, you can see why the street really liked this report. Most of their revenue does stem from advertising, as well as their various segments related to advertising. That totaled 315 million. Well, they do continue to see this additional income of around 33 million generated through data licensing deals with, of course, Alphabet and OpenAI utilizing Reddit's content now for AI model trading. So they have been able to continue to license a lot of their data to these various companies. I just didn't even know it was doing that. Of course, if the platform is free, what they're selling is your data, and that's sort of the gimmick, I guess. But as a frequent Reddit user, I love to see this, because this name's been around forever. I never felt like it got the same love. It's one of the best social media platforms out there, though, in my opinion. If you ever need to do anything and you don't know how, you just search on Reddit.
See, I just go to YouTube, which I know is
That's smart.
on our list as well later on when we talk Alphabet. I'm not a Redditor, never have been, don't desire to be, but I know it's got a lot of users, and actually more than expected. When you look at that total daily active user base of near 100 million, slightly above the estimates at 97.2, beat the 96.4 estimated. To me, this came down to net income being positive when it was expected to be a loss, and really, really nice guidance when they go forward for revenue, leading to this massive, massive jump. The next one on our list is Snap, the one that typically delivers volatility, not in the same way that Reddit did, but still delivering quite a big move. Actually small for Snap standards, but up a nice near 15%.
Gosh, and I think I'm going to be like 100 years old. I'll still remember the day that Snap brought down the whole market with its earnings, and we were like, what is going on? So it's nice to see a favorable reaction today, up almost 15% on total revenue rising 15% year over year. Daily active users also rose 9% to 443 million. Their CEO mentioned that they are continuing to invest in AI and AR, powering this new creative experience for their community and driving innovation across their advertising platform, which underpins the long-term growth opportunity. On this conference call, management did say the company is focused very much on continuing to leverage that business. We'll also see now a meaningful improvement in their adjusted EBITDA and eventually their GAAP profitability over time. They did also announce their board authorized a buyback of $500 million. The repurchase is set to offset a portion of the dilution related to the issuance of restricted stock units to employees as part of their compensation package. So all in all, they gave guidance that was pretty much, I'd say, at the lower end of the spectrum. It still fell in line with consensus. So no disappointment as far as they're concerned. And hey, yeah, name it's up now 17% for the month.
What is it, DJ Khaled that has that song that says up, down, up, down? I mean, this is the up, down earnings stock of the year, no doubt. Look at all those gaps around those events. So Snap delivering volatility once again. Like you said, I would say mediocre numbers, but maybe it was just a lower bar risk around this name, because it has disappointed so much in the past that even just kind of meeting that expectation in some ways is enough for this company. I don't know that'll be the case for our next one, which is Meta. I think the bar is set pretty high. It has delivered really nice numbers the last year and a half, 2 years, really going back to the layout of that plan for the year of efficiency. The stock has gone over 6 times in value since Zuckerberg uttered those words and basically made the stock make a U-turn. So really impressive from Meta, but we're no longer beaten down like we were and they were spending all the money on the metaverse. There's actually results expected to be delivered now.
Yeah, and there's a lot riding on advertising revenue. I will say that Alphabet didn't exactly set the most positive stage for ad rev, but that's also, like one company, they're not comparable. As we know, actually Alphabet has traded lower consistently on its earnings this year, whereas Meta has been the darling of the market as far as earnings are concerned. But with that in mind, there's also then obviously a higher expectation for Meta as we close in on this third quarter. So CEO Mark Zuckerberg did say back in July they're on track to be the most used AI assistant in the world by the end of this year. Earlier in September, they released their Llama 3.2, which is basically an open source AI model, while overall is trying to compete with Microsoft-backed OpenAI, Alphabet's Google, Amazon's Anthropic. So ahead of this earnings call, we have seen I mean, a lot of narrative around this being a favorite AI pick among analysts. I mean, we've seen strong core ad growth, growing core app usage among that younger demographic, as well as this growing interest in their large language model. So all but two of the analysts I saw cover this name have a buy or buy equal. There's a few neutrals, but there is no analyst that recommends, I mean, underperforming or selling your shares at this point. So that just goes to show this year of efficiency is translated into like the new era of efficiency, frankly, for Meta.
Yeah, and really since that moment, which goes back to like that first quarter of 2023, the average beat, so estimated EPS is one number, what they actually show, that average beat has been over 10% since that moment. Every single quarter since, has not missed. And again, like I said, an average beat of 10%. Has had 2 quarters, though, where the stock went down, 4 that have went higher. So we'll see, ultimately, when they do release their results, does it hit that kind of higher bar that the street has for it? And is it enough to send the stock higher? Meta, right around $600 a share. It was up there earlier, turning around a little bit as the market, I would say, sort of spins into the final turn here these last 3 hours, a little bit off of its highs. Last one on our list is Alphabet, another name that has given back some intraday gains. But if you're an Alphabet shareholder today, I think you're pretty happy with this near 177.5 mark. And actually, what we looked at yesterday, Jenny, I know you weren't here, but we talked about a 177.5 call calendar yesterday, so we're right on that sweet spot.
And you know what's amazing is we talk about these mega cap names, but the fact that Alphabet is right now like roughly $700 billion bigger than Meta Platforms. I mean, these companies have just become so massive. Market cap right now is around $2.2 trillion, which puts it well off of, I mean, like the Microsoft 3.2 trillion, Apple 3.5 trillion. It's just like astounding to me still. I know we've been at these basically lofty levels for quite some time, but Alphabet did report some accelerated revenue growth thanks to its strong results in cloud computing, which boosted the company's fortunes during a costly push into AI. I mean, this company did see revenue rise 15% a year ago. It's amazing that it's still able to grow at a healthy double-digit percentage pace. However, search engine and YouTube, those video platforms both reported slowing revenue growth for the second straight quarter, indicating perhaps some losing right now momentum in their advertising business. I think there's still a lot to like about that business. It did also report operating income of almost $31 billion. That was 9% ahead of expectations, and it produced an operating margin of 40%, which was the highest Alphabet has seen since they began reporting data for their core business. So what we've seen is the fact that this name's search ads business is expected to fall below 50% on market share. I thought that was wild due to the growing competition, as well as they've unfortunately been plagued with some antitrust and regulatory concerns. But we haven't seen that actually weigh on the company. We don't actually know the action of a lot of this legal trouble that's pending Alphabet. And I think today is showing a sigh of relief because frankly, over the last month, we've been underperforming a lot of these Mag 7 names, and also
Scuppy.
the cheapest as far as its forward PE into its earnings.
High margin cloud business really was the bright spot for this report, Jenny, and we'll see if that flows over into the AWSs and the Azures of the world as we hear from those companies later on this week. Impressive report from Alphabet, and I think, maybe easing some of those concerns, those regulatory, antitrust overhangs will continue to cloud these mega cap companies. But for now, a nice day in Alphabet as it builds on some recent success coming off those lows that we saw back at the early parts of September below 150. We're talking about a stock that was trading over 180 earlier today. So it's been a nice comeback quietly in the background.
It has, and I would say it's definitely one of the headline positive stories of the overall AI trade. We've seen some mixed feedback from the other players like AMD.
One more knife.
We will leave it there. We'll be diving more into our upvoted names today. We will be looking at Meta Platforms as well as Reddit. Of course, Meta ahead of those key earnings out later today. Stick around, Next Gen Investing will be right back.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Schwab.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support.
UAL.
Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time for our Chartmaster segment. So joining me today to help us break down the technicals is Rick Ducat. And we're having a social media theme today. We have Reddit, obviously post earnings with a phenomenal move here to the upside. And Meta, one of the key Mag 7 that's reporting today after the close. So we'll start off with Reddit. I mean, I know that doesn't have the same amount of historical data as, say, Meta, because it's newer to the public markets, but I'm a fan. I love to talk about Reddit on a good day when we're seeing some nice earnings to match.
AMA, Jenny, ask me anything about this upvoted stock here. Stupid puns aside here. We had a ceiling right here around this area, light green line here. Then we, crossed above it here. We made some new highs. Mostly the shape was this kind of triangular shape, 2 white lines parallel to each other. That's about where we topped out before earnings, right around 83 bucks. So 74.90, let's call it 75 and 83. Those were some key areas on this chart here. You can see very large gap up. What is that? 39%, almost 40% up on the day, and down a little bit off those highs. Very heavy volume here. We can see volume at about 27 million versus the average, which is about 4.7 million per the past 50 days here. So a very big day for this social media stock here.
I mean, no kidding. So are we seeing momentum match? Because, this isn't just a rally. This is, one of the biggest moves that we've talked about to the upside, it feels like, in quite some time.
Right. And, when we look at momentum here, a very strong push to the upside. But it was looking pretty good even heading into the earnings. You can see that we did have this very brief dip into the oversold area on the back of that last earnings.
So earnings, that's what's coming
really
up.
Didn't register the needle too much. Not really that much of a move at all. Kind of just sideways transitional phase here before RSI started grinding upward. We took out that 50 midline,
114 now.
making higher and higher highs into that overbought area. Barely giving up any of the ground during the downturn.
Oh, yeah.
New highs, we are at 87.58. Remember, RSI only goes from 0 to 100. So a reading that high, it's very high for, anything. Like that's an extreme move, to be sure.
Okay, so I think that a 38% movement checks out while you're seeing some extreme nature to this move. So now we have earnings behind us. Positive sentiment going forward. Guidance was objectively strong, so we're expecting a lot of the same from a fundamental standpoint. But what are you watching here as far as some key levels?
Sure, moving averages, not a ton of help here during a move like this. You could use a very short-term moving average like the 9-day EMA, something like that. I think probably the gap level here will be an important downside level to keep an eye on. That's the low point we had after the gap up, 104.11. Now you might see as well all these parallel lines on the chart here, standard deviation channels. We take our
we see all right, buddy. Yes, we do.
Best fit here, and we don't even have a full year of data. This just uses everything we have. Usually you would use the yearly data here, but we can see 1, 2, 3 standard deviations is about where we opened up.
Breakout
4 is about where we topped out today. 5, if we kept going up, currently would be around 127. So between like 104, 105, and 116, those are the obvious boundaries that are formed based on this study today. But this is a huge gap up, to be sure.
Yeah, massive gap up and not really showing up any signs of letting up in that momentum to the upside. So Reddit, our outperformer, I would have never thought this would be so interesting when I looked at this at about 6:55 this morning. But nonetheless, when we think about trading this name for example purposes, how do you think about trading it? Because I think it's difficult when you look at a stock that's up almost 40%.
Yeah, I think that not only understates it, I think it also highlights it, though, which is there is no more difficult situation than a stock that's making a massive move, all-time highs, already doesn't have a ton of price history, and the fact that it moved so far, there's actually not even enough options in the options chain to keep up with it. If you were to look at the options at the moment, all the calls are in the money for shorter dated options because it ran so far so quickly. And so you're kind of limited at the moment until more strikes are added tomorrow as to what strategies you could even think about doing, particularly if you wanted to do something in a bullish camp. And so I looked at a neutral to bullish strategy, maybe one of the only current option strategies available that would be in that kind of neutral to bullish camp,
170.
that would be risk defined at the moment in Reddit. Selling a put vertical below the market. Now, it's not a ton below the market, and quite frankly, I mean, Rick showed those standard deviation channels. There's some extrapolation that can be done statistically to maybe find some levels.
Oh, okay, hold on.
It's hard to say that there's support anywhere when you got one candle hanging out on its own. And so, for me, this was more of a function of pricing of the spread. And what I mean by that was, we always talk about loose guidelines for these credit spreads being somewhere between 1/4 and 1/3 the width of the strikes. Well, 1/3 the width of the strikes is around $1.70, and that's what this one looks to collect. And so with this, the November 15th 110-105 put vertical is the exact strategy we're looking at. For a $1.70 credit, creates about a 2-to-1 risk reward. You risk 330 with a chance to make 170, and that break even is down at 108.30 to the downside. So when you're looking at this particular spread, you're really just asking for Reddit to hold on to these gains today, stay above 110 over the next few weeks going out to November 15th. Because it was such a big rally, if there is a turnaround, it's very possible that it could go all the way through, so it's risk defined to protect against that snapback. If that were to happen, you're limited to the width of the spread down to the credit, which in this case is 330, Jenny.
Okay, now I'm looking at a
I'm
name
short,
that
buddy.
is a peer to Reddit. I don't know if they're necessarily competitors because Meta is, of course, so much larger, but both actually two of my favorite social media companies. I think Instagram and Reddit are up there. So when we look at Meta now, there's obviously earnings out today, Rick. I was saying to Oliver Rennick this morning, I think this is my most interested one for the week because I think we could see either a really great move or frankly maybe a really bad move. That's just sort of my guess here. I guess my guess is of course as good as anyone's, but what are you watching now as far as this chart? Of course we are up modestly on the session here, 0.6% higher today.
Yeah, that's what makes earnings so engaging, is it can really rewrite the story of a stock. Also a good reminder why it's important to stay risk defined. Anyway, so we look at our recent price action here. We can see that in a lot of ways our most recent leg of everything begins at our last earnings event. You can see like around that area or so is when we pretty much when we started this more recent channel to the upside, connecting these lows there. You can see low points here and then matching high points about where we topped out during that leg of the run as well. You can see that we oscillated around our two moving averages, yellow 21-day and orange 63-day. We are still pretty nicely above both of them at this point. But so far, we haven't really been able to crack above these old highs. 602.95 was the intraday.
Way overbought.
Pretty close, here at the open. And we couldn't quite make it yet. We did break out to the upside from this very short-term blue channel there, kind of like a bull flag type situation here, where you have a sharp rally to the upside, a brief period of consolidation, maybe even downward price action, then a push back to the upside. It didn't quite play out the way you'd want it to exactly, but earnings could really, blow the roof off if it does go that way.
Yes, and I mean, we say this has been one of the most, best performers of the Mag 7, one of the best just behind NVIDIA, I believe, up now 68.5% on the year, but also making a pretty decent move this week, up 4%. So with this, pretty strong week-to-date performance here, which always makes me a bit nervous going into earnings. How is momentum faring, or are we seeing some degree of waiting right now for the dust to settle? Of course, investors waiting for that earnings event.
Right, so we can see that the price action kind of moderated recently. We still have a longer-term green trend line in play on the RSI. We dipped below it and very briefly dipped below that 50 midline, but we recovered. Now we've also pretty convincingly broken beyond this red trend line here that was going downward here. We had the RSI behaving like you'd want it to, leading up into that making new highs as price made new closing highs as well here. And you know what I said a minute ago about kind of it could really blow up once you start taking out those high points here. I'm not expressing an outlook or anything. I'm just saying that the high points tend to be a lot less orderly and have more extreme prices than the low points. So when you do find yourself in a position where there could be some major catalyst, it could get really crazy. You know, you could see some very extreme prices before things kind of calm down a little bit. So watch for RSI to cross into that overbought area if things start moving to the upside strongly.
So now when we look here at some key levels, obviously, I think that the bulls would hope for pretty much a continuation of this uptrend. We are trading now nice and above our 50 and 200-day moving average here. So where do we look for some support and resistance? Again, I want to reiterate your earlier message, which is this is one of those names where I say the importance of being risk-defined.
Of course, yeah, absolutely. And you don't really get it until it happens to you. Just food for thought there. But anyway, so the old highs right here, 602.95. That's the most obvious near-term point. And then beyond that here, we have a cousin to our study we talked about earlier, the standard deviation channels. This is the linear regression 50% channel. So it uses the same linear regression line, that same line of best fit.
Linear regression.
The most extreme closing price away from that point, and then it draws a line halfway in that distance. This is something other traders use. I wanted to throw it on there because our standard deviation channel is very far away. It's all the way up at 664. That would be quite a stretch here. So I thought this would be one area to keep in mind. It also happens to line up with the upper edge of our channel as well. So that area around 627 could be worth watching here. If we were to move to the downside, linear regression line and old blue trend line from our short-term channel right around 586, and then these low points right here, our green line 561. That would be where things really could start to drop off.
Yeah, that could.
Yeah, and I will say that there will be a lot of attention paid on this one and the post-earnings call, of course, because I mean this is one of the biggest names in the market and for good reason. So appreciate it, Rick Ducat, our chart master. And now when we think about trading this name, Alex, very, very different company than Reddit, but I will say that with AI, the thing about Meta that I think is so beneficial is they already have it unveiled. It's already on the various platforms. It's here. So I guess actually perhaps some weekend guide would say that maybe it's not sitting well with investors, but we'll get more clarity on that later on today.
Yeah, we're basically at all-time highs. Rick talked about how price can act explosively around those highs,
58,
especially
50s
around
are
a
a
catalyst
buck.
like earnings. Meta's certainly done that in the past. We also have a little bit of a theme that's developing here within social media. Huge move higher.
Oh, here we go, shoulder line.
Pretty nice move higher in Snap. Now, that doesn't mean that you're going to see it in Meta, but if you went along those logic, technicals supported as well.
Should I give it a shot?
Perhaps you do see an upside move in reaction to earnings, and perhaps you want to look at a bullish example trade that would benefit from it. Now, the market maker move is pretty large in this particular name, $44 a share. So what I looked at here was actually an outperformance of that and a look to test this $650 level in Meta. If you do get excitement once again around this particular earnings release, what you'll notice is even making this as short dated as possible, which is selling this Friday's expiration and buying next Friday. So selling Nove 1, buying Nove 8, it still costs $330 in debit for this particular spread. So what you're looking at here is the same amount of risk that we looked at in our last strategy for Reddit, but in the case of Reddit, your break-even was below the current share price. You didn't need anything to happen. You needed the stock to hold on. In this case, you actually need to move higher. You need to move towards 650 in response to this. Otherwise, this one risks full max loss. Really, apex of profitability is a move right to 650 by the end of this week. That would be best case scenario. But more than likely, if you get some move towards 650, maybe even in that 630 to 640 range, this one would have a chance. An aim small, miss small, super customizable, Jenny. But you also notice one thing. This is the last thing I'll preface when talking Meta, and it's nothing to do or against Meta as a company, but just the matter that it's a $600 stock price. This is a product that might just be too big for some traders' accounts. It's a big strategy when you're looking at options. Every option potentially could turn into 100 shares of stock. Well, 100 shares of stock on a $595 stock is $59,500, Jenny. So it's just a bigger product than Reddit, way bigger than Snap, and even bigger than names that we talk about
what do you think
like
about
Amazon,
it here?
Alphabet, and Apple. So keep that in mind. Big.
$0.75. That was it. That was a lower one. That had to hold right there, and it didn't. That lowest one. Oh, yeah. $58, what, 32? My contract, 58.40. Caroline.
We're cautious on this name. There is some concern about adoption of the pace of adoption of its Gen AI chatbot Copilot. There's also, of course, a lot of competition that's really heating up in the AI space. So while analysts are still very bullish on this name, it seems like investors have turned a bit more cautious. It's underperforming the broader market with its 16%
225,
year-to-date gain.
230.
We mentioned the cloud business. Investors will be looking for impressive growth there. That's usually a bright spot in terms of, or the key spot, the focal point, I should say. In terms of the actual numbers, we're looking for adjusted EPS $3.08 on revenue of $64.41 billion. That represents about 14% year-over-year growth. In terms of the segment, Intelligent Cloud, which includes Azure, is expected to come in at $24.04 billion. Azure and other cloud services revenue was up 29% last quarter. This quarter, Wall Street's looking for like 33% growth there. Keep in mind, Google, Alphabet saw 35% growth, so I think its ability to meet Wall Street's expectations there is going to be very key. And then there's the productivity and business unit that includes Microsoft Office software. Revenue there is expected to come in at $27.9 billion. And then the more personal computing segment is supposed to see revenue of $12.56 billion. Microsoft's investment in AI, of course, is going to be very key as well. It's building out infrastructure and, of course, buying more chips. Reported something like $19 billion in capital expenditures in the June quarter. Said expenses will continue to go up in the coming years. The estimate for CapEx for this quarter is around $14.74 billion, so we'll be keeping a close eye on that. Microsoft shares up about 1.2% today, heading into that report, up about a little less than 2% this month. But as I said, in terms of 16% year-to-date gains, almost 30% over the past 1 year. It's nothing to ignore. It's just not quite as impressive as the broader market.
A couple things that stuck out to me going back to 2013. I'm only seeing three
black crows
where
right there.
Microsoft missed on earnings, so we have a baseline that
160.
positivity is expected for this company. It explains why, if you look at it over time, it goes up and to the right. But a little bit too close for comfort, I think, last quarter, Caroline. It only beat by about 1/3%. So investors may be a little bit more on edge on this. And then finally, I would say, while less volatility is typically associated with this name, it only moves about 3.5% on average around earnings. It does have the ability to provide a head fake where it drops the numbers, and then there's like an hour gap till the conference call starts where they provide the guidance and things. And we've seen a lot of times where that first move isn't ultimately where we end up. So I always provide that caveat on Microsoft. Wait till we get through the conference call before you run your victory lap if you picked a direction on this one. How are analysts setting up, though, for this? This feels like one of those names that, like, you're going to be really contrarian if you even say that you should just hold it.
Yes, and that's why there are very few hold ratings. There are no bears out there. There are 60 analysts that cover the company. 58. 54 of them have buy ratings, and there are 4 hold ratings. So yeah, the majority very much bullish. Median price target is $500 a share. Microsoft currently trading just below $437. So on the whole, quite a bit of upside from current.
Got a nice little hammer.
Some analyst notes heading into this. Of course, Dan Ives is a bull. He's a bull on all the tech names that he covers, but he has an outperform rating and a $550 price target.
Yes, he does.
This is a
Dan Ives.
quarter for Microsoft. He said, with many on the street starting to grow skeptical of the pace of this AI cloud growth story in Redmond, his checks for Microsoft have been solid this quarter. He continues to believe Redmond is in the driver's seat in accelerating cloud deal flow for Azure with strong momentum. They'll expect to see that with strong momentum into 2025 and beyond. So, a bullish note out of Dan Ives, not a huge surprise there. I have seen other analysts say, though, that the setup is pretty good for Microsoft heading into this. I do think, though, once again, keep a close eye on that Azure revenue growth. Dan Ives had said he expects that 33% year-over-year growth is beatable, given the high level of deal activity seen this quarter from core Microsoft enterprise customers and partners in the field. But also keep in mind that Google saw 35% growth. So, just if there's any disappointment around that number, we could potentially see it show up in shares. But we won't make any final calls until, as you said, Alex, after the earnings call, once they give all the guidance and such.
I know, I do agree. Sometimes feels like that double event. And I also think then, basically their spending for this year is also one of those things we'll be listening for on that call. But great breakdown and insight, Caroline, with, as always, senior markets correspondent for the network. And so now when we look at this name, Alex, we think about trading it, obviously. And just like Meta, I do think that there's a big bar to be set forth. I think that there's right now a critical street that's looking for things, frankly.
Come on, now you got Kent.
Even Alphabet today not really rallying as much as I would have thought. I guess a win is a win. So now as we go into Microsoft again, we're at a very high level of standard, I think, for these earnings.
No doubt about it. Stock right now trading just over $436 a share. Say you think that it could get to somewhere around $450 by the end of the week. This is FOMO after all. Optimism abound in the markets despite a little bit of red that has crept onto the screen over the last half hour. If you believe that that's possible, I looked at a strategy that looks to take advantage of that. And so what I looked at was buying an out-of-the-money call vertical expiring at the end of the week. So it is risk-defined, but albeit a little bit lower probability. In fact, you'll see it's actually kind of the inverse of what we looked at in Reddit. In this case, the 445, 450 expiring Friday is a $1.70 debit. So we bought the spread in this case, and we spent the same amount that we collected in Reddit. And so the reward is equal to what the risk was in Reddit. In this case, that's 330. And the max loss is equal to what the max reward was. So it's the opposite. It's almost like a mirror image. And so in this case, you're risking 170 with a chance to make 330 break. Even though 446.70, you're going to need a move for this one to break even, and it's going to need to be a move to the upside. So you wouldn't look at this unless you thought that
120.
Microsoft had a chance to get to 450 and do it in a hurry,
Randy.
hoping that perhaps earnings could be that catalyst to make that happen. Like we said, earnings call oftentimes is the ultimate.
Okay, I'm going to give it a shot here for a fast scalp. At least we're down to my number. But that's the only thing I got. Yeah, I can drop more. And 15. Now, reverse. Buck. Go, baby, go. $120. 130, yeah. Oh, 145. I like you, 160. $45, 150. Rodney. Randy. I'm going to miss that one day when I get up and I can't say Randy. I know we can do it, Randy. We just got to get above the 9. We can do it. Jim, you better. Might be a good idea to cash in. You know, he'd say 135. Oh, 145. There's a wild crowd at sports arena today. Let's bring it. I think you know how to do it, don't you? We're at 130. Ooh, 125. Snake. There's Mr. Green.
Biggest customer for NVIDIA right now when it comes to chips, chips and things of that nature. But I think the market also does understand that there's such a high demand for these chips that they will be able to, find others that want to be able to buy from NVIDIA. I don't think that's going to be a big concern over the long term. But right now, you're seeing the semi space really kind of move to the downside. The semiconductor index, the SOX, is down over 2% in the session, and you're seeing kind of a risk-off turn happening because of some of this fallout. And I don't know if we're done here. This is something to kind of keep on your radar. Once again, we had the initial story about 2 months ago, and we've been seeing the stock getting a little bit more of a pressure to the downside ever since. And it probably does have a little bit more room to run if we continue to see some of this negative news coming from the company and or from regulators.
So Kevin, do you think that this poses then a risk for, I mean, I guess the risk would already be existing, frankly, but for a lot of these semiconductor names that have yet to report, because, I mean, we're really just at the tip of the iceberg of semiconductor earnings. So this is not exactly the tone that you want to set in, like, the first week of major tech earnings.
I would say this is more company specific, right? If
I don't see nothing wrong with the tone.
Allegations. This is just what's being reported. If there is misrepresentation when it comes to the financials that were being
Miss
reported,
Prissy,
or if there were a lack of internal controls and there were maybe some executives trading the stock or selling the stock during that ramp up because of some of these auditing issues, then that could be a problem. Just the company specifically, but when you're looking at the AI trend, this is the secular shift that will continue to go forward. And
Mr. Green.
When you have these new boom industries, you do have casualties like this one that may fall out of favor for some, but the core thesis for AI is still going to be intact, and you will find others to be able to replace what SMCI has been able to do over the long term. So I don't think this puts the bigger picture of AI in jeopardy, but may cause a little bit of intraday vol, or maybe
don't get too carried away with it.
Over the next couple of days as we try to suss this thing out.
Is it safe to just completely attribute this weakness broadly in semiconductors to this story, or is it even perhaps more explanatory to point to AMD, one of the biggest players in the space, one of the growth engines of the space, having disappointing numbers?
AMD is going to have a little bit to do with this. There's always this comparison between AMD and NVIDIA, but when you're looking at the product and revenue,
that's where I heard
it's completely different.
Squeak.
AMD still has a fair amount of exposure to the gaming and embedded systems, and those two areas of their business came
stand
up
up for a second.
Yesterday, when you're looking at the earnings announcement, is probably the biggest catalyst and reason why they dampened down the expectations compared to what the street wanted to see. So I think AMD, yes, is going to have.
Well, I'm going to have some tea.
Once again, they're actually still seeing some positives when it comes to the AI space. They got to also figure out what their niche is going to be. Is it going to be performance, or is it going to be cost? And they can actually address the market in two different ways here. They've been trying to keep up with NVIDIA, but at some point, maybe some major investors are going to ask, can you just provide a good product to the market at a cheaper price? Is that going to be enough to suffice for some of these major players?
Yeah, and I think that's a great point here. And of course, looking at AMD, also not on its most optimistic day, but we will leave it there. I also agree that Supermicro, I think, is a very Supermicro specific story, but super negative today, obviously. Still taking on the chin, down over 33%, but appreciate it. Kevin Green, Senior Markets Correspondent for the network. Now, coming up, last but not least, it's time for Under 30. We are previewing Peloton ahead of their earnings due out tomorrow morning, a company you may have forgotten about that's actually been in a pretty decent uptrend into this report.
Yeah.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Welcome back to Next Gen Investing. It's now time for Under 30. Today discussing Peloton, and joining us now is George Tillis, Senior Markets Correspondent for the Schwab Network. And George, as mentioned, discussing Peloton here. Talk to me about what to look for into this particular names report, given the kind of dramatic fall from grace that we have seen, but it's sort of leveled off over the last year and a half or so.
Well, I think actually the one thing that I think the analysts and investors will be looking for is going to be cost reductions. Selling general and administrative expenses are still quite high, and they've been high for a couple of years, with sales actually down. So I think that's going to be the key point for Peloton. We talked about this company before. I mean, it's obviously a very popular interactive fitness brand. They are generating, of course, recurring revenue from a subscription basis, but the subscription base and their paid app installs are actually down, as well as their hardware. But it's actually higher as a stock. If you look at the last 6 months, so it's more than double. It was around $3, and now it's around $6. It's still down tremendously off of its 5-year high, which peaked around the pandemic, but nonetheless, you have to expect still some challenges for Peloton. And so if you look at the earnings per share estimates, they're expected to lose 15 cents per share. Now that's a lot better than losing 32 cents for the same quarter last year. And sales are expected to be down on a year-to-year basis about 4% to 574 million. So I think you have to consider, obviously, the trend in the longer term, or in the context of 3 or even 5-year trends. It's still down. It's up nicely over the last 6 months. I suggest that perhaps there's an element of 2 things: cost reduction expectations, as well as lower interest rates. That is going to help some of these growthier areas of the stock market, particularly those that are still not profitable, which Peloton is not. But things are improving slowly. I mean, if you look at last quarter, losses on an annualized basis were over 800 million. Just inclusive of last quarter, it's now down to 550 million, with sales that are down to 2.7 billion. So in essence, on a trailing basis, the earnings yield is still negative. It's around 21% negative earnings yield. But they do have, some new partnerships with companies like Costco. I think that's important because Costco is a very popular general merchandise and online retailer. And I think what's going on with Peloton is, irrespective of the losses and some of the challenges they faced, they may have found an inflection point in terms of stemming the tide of losses, as well as the decline in sales. So that's important. If they can demonstrate better than expected sales, I suggest that's probably more important than the earnings profile, because you have to have the top line moving in the right direction in terms of growth, which it's still not, but it's getting closer and closer towards, at the very least, break even on growth for sales.
So, George, when we look at this company, because obviously I don't know if we'll ever see the really unprecedented and just wild demand we saw for Peloton like we did during the pandemic, because frankly that was just an unusual time, and thankfully they were able to benefit from that. But keeping these costs lower, and I know that they've been trying to focus on regaining that consumer interest, but are we just going to have to accept that we're seeing a different day and age for Peloton, and we're now competing with fitness classes? In-person fitness is just never going to be the same day, the heyday of the pandemic, frankly.
Yeah, that's the thing. So what happened during the pandemic, it was a remarkably quick bubble. And you have to consider growth stocks, especially stocks that were stay-at-home themes. This was essentially the 2 categories that Peloton fit in with. as well as extremely low interest rates. That really buoyed the nonprofit-based companies that weren't profitable. So, all those three variables did extremely cause Peloton and a lot of these other growth stocks like Teladoc to do extremely well. Now things have normalized. Now it really comes down to what is the prospect of your business, what is your growth trajectory, what's your brand and marketing strategy, and then also, what is your financial, backing. And so if you look at the amount of debt Peloton has, it's about $2 billion, but they do have, close to $700 million in cash. They're still losing about $550 million. This is based on a trailing basis, so they do have enough cash at the very least for the next year. I think dilution risk is probably slowing down, and that's why the stock is also higher in the past 6 months or so. So I think this is a brand that still is going to exist. They don't have a balance sheet issue. They still have market cap of equity close to $3 billion. And I just think that they need to stem the tide of declining sales and then do things to improve costs. And you might see the trend continue. And the trend I'm talking about is in the last 6 months.
Yeah, and I think a good point there, and we'll leave it there for Peloton, which will report tomorrow morning. Is it always a volatile player? So it'll be interesting to see how they fare this quarter, but we'll leave it there also for Next Gen Investing for this Wednesday. Busy week for the rest of this week, but coming up next, we have the watch list.
This election season, stay out of the muck and the mudslinging with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
First, I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange. We have lots of economic data and a slew of earnings, including Meta and Microsoft coming up. We're going to be watching for those as well. So a very busy week, a jobs report, PCE, you get ready right here on Schwab Network, and we have you covered. In the meantime, the election is only 6 days away. We'll discuss the potential impact that decision will have on the markets and the economy. We'll focus on Reddit after posting impressive earnings that sent those shares soaring. And our panel standing by to break down the earnings from First Solar. Let's take a quick look here at the markets. 2 hours left in the trading day. We've already had some back and forth action, and you can see a mixed bag even on the board. The S&P is down, the Dow's up, right? So the S&P is down 8 points at 58.24, down 0.1%. The NASDAQ, after a nice run and new highs, is now pulling back. It's down 0.5% at 20,441. The Dow is up 24 points at 42,257, and the Russell up 1/3 of 1%. Gold sitting at 2,800 on the nose. A troy ounce up $19.50. New highs for gold. Very impressive run for the precious metal. 68.43 the barrel for oil. That's up $1.22. The VIX creeping higher above 20. It's at 2019. The dollar lower. Now it's at 103.89. Broke that 104 line. And Bitcoin has had an incredible run, though pulling back 1% today. It's at 72,635. There you have it. That is the big picture. In the meantime, for some of the big stories in the markets, we welcome in Kevin Hinks, host of Fast Market here on Schwab Network. And of course, we'll start with AMD. Lisa sues AMD, and there are a lot of things to love, but not necessarily the outlook, some concerns, and the sell-off that we're seeing in a big way. It's down 10%. Want to hear more about the report?
Yeah, hi, Nicole. AMD, you're right, down 10% as we get to midday. Earnings per share, 92 cents, beat estimates nicely. But revenue, $6.82 billion, beat $6.71 billion estimates. The data segment revenue up 122%, $3.5 billion. Also, client, $1.9 billion in revenue, up 29%. But here's where it gets a little
SPX, a buck from 120.
$462 million, down 69% in terms of the revenues, and embedded $927 million, down 25%. Now, if you think of AMD, they made a name for themselves beating Intel in CPUs and PC and server business, right? And them dominating Intel and gaining market share. Well, the opposite's sort of happening when it comes to NVIDIA. They can't seem to make up ground in the GPU segment, and NVIDIA continues to advance. And with some of the comments from Jensen Huang, as you know, that Blackwell is sold out, and Blackwell is the demand is insane. They just can't seem to make up ground where it comes to the GPUs, Nicole. So the battle continues. Still, the market's still waiting for some competition, someone to come and compete with NVIDIA. We thought it was AMD. It still may be, but not yet.
Yeah, and pretty amazing because AMD year to date is up 1.5%.
Yes.
While the major averages are up 20%. NVIDIA's at new highs. You can imagine the disappointment.
You got the 58, 31, 18.
In the meantime, we continue to follow the big tech names. We have Meta, right? And there's a lot of talk about Meta.
Yeah. Meta Platforms, the old Facebook, they're going to rely on digital advertising. And good news for them, digital advertising is very strong. Look at the earnings from Reddit. Look at the earnings from Snap. If those two secondary level advertisers can do well, think what Meta Platforms can do. Their Llama AI systems have allowed them to target audiences with advertising.
Oh yeah.
And social media, and they do such a good job of linking the advertisers and getting direct hits on advertisers. Now, they're going to come up with big numbers. They're looking for $5.19 in earnings per share on $40.2 billion in revenue. But how are they going to spend? Are they going to spend on CapEx? Are they going to spend on R&D? There's a lot going on here. Can they monetize the glasses and the metaverse? And is there really going to have adoption of the glasses and the metaverse? Are they going to do more layoffs? You know, they were doing big layoffs. Now they're doing very small layoffs. There's a lot to go through here. And the stock sitting now over $600, near all-time highs. The bar is very high for Meta Platforms, Nicole.
Yeah, that's what I was thinking when I said, you know, we're waiting on Meta, because that's what I'm hearing, is that the bar is very high for today. So and we are seeing sometimes a double beat and raised guidance, and the stocks still will sell off.
Right.
Let's see what happens here. Maybe we'll get some nice surprises within the report. Meta's had also an incredible run. In 3 months, it's up 20%. In 1 year, it's up almost 100%. So will people take profits, or will they hang on for more of a ride? So we'll have to wait and see. Microsoft, another name. What are you expecting there?
Microsoft, they're looking for $3.08 in earnings per share on revenues of $64.4 billion. Now, this is another incredible. The question's going to be about R&D and CapEx and how much money they're spending, and we're going to try and get our hands around exactly how
much
powerful and big their Azure cloud business is. You know, I think this week we already got Google
something moving.
We're going to get Amazon tomorrow. We're going to get Microsoft Azure, and we're going to get a real idea for how
145.
big
I'll be right back.
because it's not about the market share of these three. It's about the fact that the whole
5840s
is growing so exponentially.
Oh
in the
my
cloud.
gosh.
Not to mention the suite of businesses that Microsoft has. All the things that they offer to customers is just, you know, it's unprecedented what they can do. That doesn't mean the stock can't sell off, because you look at the last earnings report, they were in the middle of a pretty deep sell-off at the time. So we'll see if they recover. I mean, they already did recover in terms of the stock price, but we'll see what they put out for earnings. Like I said,
it's going to get serious.
Microsoft after the bell today should be a good one, Nicole.
Yeah, look, is this the week for tech? Is it? We already saw at least one high on the NASDAQ. We could see more.
210.
Hard to say, so we'll have to wait and get some more of these after the bell today. Thank you. Kevin Hinks, great to see you. Let's take a look at the bigger picture. Luke Lloyd is with us, Senior Wealth Advisor, Strategic Wealth Partners. Thank you for being here. Some of your thoughts, big picture.
Oh my God.
Yeah, I'm glad you're here. Tell me
290.
what you're thinking about the markets these days and where we could be headed.
So it feels like we're at this point where there's this like invincibility syndrome to where it's
290.
like everything's making money again. It feels like
We'll be back.
Growth stocks are making money, even value stocks. You know, the equal weight's doing well. It's like, you know, stocks seem to be hitting new highs every day, especially as the election's right around the corner. So it's like climbing this wall of worry. And it's interesting. It's what people don't understand is over the past couple of decades, you know, the markets have gotten very, very efficiently. So I remember Dave Portnoy, like 4 years ago during the pandemic, when he was trading stocks, was always saying stocks only go up. And that mentality actually is somewhat true, because the system is designed for the wealthy to get wealthier. You look back to the Great Depression. Since then, every recession has been essentially shorter and shorter and shorter. It's because whenever there is a bad time or there is weaker economic data, the Federal Reserve does cut rates or the government does print more money. So I'm not saying there's risks. There's not risks out there. There's definitely some risks as we enter kind of into this weakening economic data, the election uncertainty. There definitely are risks out there. But I think there's a lot of people out there that are kind of content. And that actually is somewhat concerning to how content the markets are. But overall, there's a lot of areas right now that are making money. I just think there's certain areas you want to focus on. I'm sure we'll talk about that.
Last time we spoke, I feel like, and correct me if I'm wrong, but I feel like you were a little cautious and worried. And is that where you are now, too, despite the fact that the market climbs the wall of worry and hits new highs over time? Are you still in this worried camp?
Being a money manager and helping clients, you know, of all kind of different backgrounds and different goals, I mean, I have to always be cautious. That's what they pay me to do, is be aware, at least, of the risks that are out there. So, yeah, I'm absolutely still cautious. What I am more cautious about right now, and it's interesting talking about the markets, you know, the top 7 stocks make up like 35% of the market. So I hate even talking about the indices. What I'm concerned about are the growth stocks that have carried this market for essentially 2 years. I would be more cautious about growth stocks than I would be about value stocks. And the reason being is we're entering into this new cycle. Everything moves in cycles, right? You had the baby boomers that made a lot of money in growth stocks for decades. You know, this whole new world of technology, the internet boom. You had a lot of people making a lot of money very quickly in a couple of decades, obviously with you know, many ups and downs, like 08, but we made it back pretty quickly. But the baby boomers now are retiring, so they need income. And a lot of this money that's out there in this world, instead of that's been in growth names, it's going to transition over to value names. So where I think you want to really pay attention to, I'm not talking even short term, I'm talking the next couple of years, 5 years, even 10 years, those value-oriented names, I think, are actually going to get a multiple boost and expansion because of the money flowing from growth into value. And that's actually going to be a pretty good trade I think people got to partake in.
Yeah, and some of your picks here, you have Nextera, Digital Realty, and Aspen Aerogels. But before I get to those, so you're a little tepid on some of these mega names and Mag 7. And so today, for example, if Meta or Microsoft are to pull back, because we're seeing moves, double-digit percentage moves a lot of times on earnings. If there's a big pullback today, you wouldn't be buying Microsoft or Meta today?
Well, first of all, I don't think there's going to be a big pullback. I don't think there's.
Yeah, I was about to say, if there's a sell, because I don't know if there is.
Right. I don't think there's going to be. I think Google actually shed some light onto what's the narrative still being played, and that's essentially that AI is starting to finally add some value and profitability. So I don't think we're there yet to where we're going to see a sell-off. I just don't know how much more there is to essentially gain. Like, from a risk-reward standpoint, you have to look at what's the risk to the upside, more upside, what's the risk more to the downside. And right now, when I look at those mega-cap tech names, they have got the multiple expansion because of the AI profitability, because of the AI investing. So I think we're now at the point where you're not necessarily going to lose a lot of money maybe in the mega cap names, but what I think is going to happen is you take a look at where Google's investing, you take a look at where Microsoft is investing, you take a look at the areas these big tech names are putting the money where their mouth is. That's going to be the new area to make money, which so you already hit on a couple of my stocks, but things like, you know, Google and Microsoft both are talking about investing in nuclear energy because they have to fund this AI stuff, right? So that's an interesting area you want to
get to your stocks. Yeah, I want to go over your stocks. You have Nextera Energy. Let's you know, give me a sentence on each one. Nextera Energy.
So yeah, utilities. So that just hits on the point I was just alluding to. There's Nextera specifically, actually, I think it was yesterday. They just announced $1.5 billion fundraise, essentially to fund more plants to open up for electricity needs because of this AI demand that they're seeing. So what's interesting, the utility sector in general, and specifically Nextera being a little bit more of that renewable side, so you're playing actually from a political side, both sides, but utilities in general, they have a lot of good things going for them. One is the AI demand that is increasing electricity demand. So higher prices from the demand standpoint increase the earnings for utilities. The second thing is if rates are going lower, you have a call option on the amazing dividend that a lot of these utility companies offer. So if rates do go lower the next year, you have a call option essentially on that. And the third thing is, you know, if we do hit tough times, a hard landing or weakening economic data, the first place people are going to be going is into utilities because it's more of a defensive sector. So it's almost, and there's no such thing as a win-win in investing because there's always risks out there. But utilities right now, in my eyes, are a really great spot. Even though they've had a great run this year, I think that is still a great spot to be, and they will have another great run next year. And next year is one of the stocks that we own that we are believing in within the utilities that we think can actually do really well.
And then the others, how about Digital Realty and Aspen Aerogels?
Yep, goes right along with essentially what we've been talking about 2 minutes. So, you know, when it comes to Digital Realty, data centers. I mean, Nextera said it yesterday with $1.5 billion raise at AI demand because of data centers for electricity needs. You're seeing Google, Microsoft, big tech talk about all the demand for you know, more need for space, real estate, essentially for data centers. So this is not just a quick trend that's going to happen. This is a multi-decade trend as we move into this even more technological world that's going to be needed. So Digital Realty, it's just one of those other REITs out there that essentially does very well because of the whole AI kind of demand and the AI cycle that we're going through. So that's a stock where we own that we continue to like. The third one you mentioned is Aspen Aerogels. That stock's actually sold off a lot. I've talked with Aspen Aerogels with you actually a lot, I believe. I've probably talked to you about it maybe 5 or 6 times. I think I talked to you about it when it was $6 a share. I talked to you about it when it was $25 a share. We've made money on Aspen a couple different times. It's sold off a lot. The key there is electric vehicles. You know, we don't know if Ford, Tesla, who's going to be the winner in electric vehicle space, but what we do know is the technology is here to stay, and Aspen Aerogels has a great first mover advantage around the battery technology and essentially the aerogel, the gel that goes around batteries to make it more efficient, so that saves companies money, it saves people money driving the cars, to not have to recharge as often. It's safer. It's one of the safety things to not let the batteries catch on fire, essentially. So this is a stock that's going to be around for the future, be around for a long time, especially as electric vehicles do get adopted. Even though electric vehicles might not be there right now, it will be 10 years down the road.
Retrace. Oh.
Okay, Luke Lloyd, great to see you, Senior Wealth Advisor, Strategic Wealth Partners. Thank you, Luke.
Get rid of him.
Coming up next, Options Corner, Tom White standing by. He will highlight unusual options activity from the day, how investors are looking to trade on recent news of NVIDIA, MGM, and Supermicro. We'll be right back.
Time to go back up, retrace, retest. It's time to go back up. Can we break the 200 set? May break it.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
To a buck.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. Time for Options Corner, where we analyze unusual options trades we're seeing throughout the day. For that, we bring in Tom White, host of Fast Market here on Schwab Network, finding real trades and showing those to us.
Come on, Tom.
And in the meantime, NVIDIA is front and center. We know AMD has been under pressure. NVIDIA, though, has been a completely different story. A stellar performer, up 182% this year, hitting new highs recently.
That's right.
Some of your thoughts on what you're finding here. The high is 144. It's at 139 now. You found a neutral to bearish trade, Tom. We're interested to hear more.
Yeah, I think if you take a look at the price action in NVIDIA, maybe it's starting to consolidate here just below those all-time highs. But I think it's all going to be, based on the fact of CapEx spend by some of these big tech companies. Most of the big 4 or 5 names that we always talk about, whether it's Google, Alphabet, Amazon, Meta Platforms, and others, they account for over 40% of NVIDIA's business, right? Who's buying all these AI chips? Well, it's the big tech firms, and they've got earnings, right? We've got Meta after the close today, Microsoft after the close, we got Amazon tomorrow, and Apple. So I think maybe some traders maybe either taking off some positions, maybe hedging long stock positions. You've seen a lot of call activity in there today. Over 1 million calls have traded on the day. But one that stuck out to me as far as unusual option activity goes, Nicole, is a call sale here in NVIDIA. Really short-term positioning out in the November 1st weekly cycle. So just a couple days till expiration, you're going to get some more information on how much capex these big tech firms are putting out there, because that's going to move NVIDIA shares. You should continue to watch that capex spend from the big names over the next couple days. And this trader went out to the November 1st weekly cycle, just 2 days to expiration, sold over 12,000 of the 141 strike calls, right? Just below those all-time highs that you mentioned. They collected a credit of about $1.65 on these, so that takes their break even up to 142.65 over the next 2 days. And that's only about 2.5% above the current share price. Now, I don't know if this is a speculative trade, if it's a turning a long stock position into a covered call, or maybe just maybe taking some profits on the stock moves that they've seen. You mentioned the shares are up over 180%, but it's pretty interesting. If we start seeing some deceleration in capex spend from some of these big tech companies, what happens to NVIDIA? We saw the reaction today in an AMD where, hey, they've got a couple new chips out, sales are going well, but it's not meeting the guidance and expectations moving forward. So I think that's what this trader's maybe setting up for. So maybe some further weakness here in NVIDIA, with the shares almost down 1% today. So yeah, call seller in here, but just a little bit of a push to the upside. So this is pretty aggressive call sale.
Yeah, understood. All right. I mean, I can't wait for all these tech names to pour in. Google has done pretty well. We know all the AI investments that are being made, and we're seeing more and more. And, you know, there's a lot of speculation that all this AI investing will be great. It'll be fabulous for NVIDIA. So, you know, that's what I'm hearing on this floor. People love it. But in the meantime, it has run up, and you found this neutral to bearish trade. I'm typing in MGM now. This name right now is down about 0.5%. So some of your thoughts on what's going on here. We saw Morgan Stanley adjusting the price target. They have an equal weight rating. They have a $44 price target. Truist has a $56 price target. It's at 41 bucks. Some of your thoughts on MGM right now as we see Caesars on the move today?
Yeah, this is definitely about earnings. It's not just big tech reporting after the close today. MGM is also, and if you look at last quarter, the stock fell 14% post results, and it wasn't actually a bad result. They just gave some lower than anticipated guidance moving forward. Now, we just saw out of Las Vegas and Nevada, they just came out with gaming results and win rates for Las Vegas and that area in the whole state. They were actually up pretty significantly, 3.34%. The gaming win rate by the casinos, but the Las Vegas Strip, where MGM has a huge presence, that was down 1.83% versus a year ago level. So maybe that's coming into context here, but this is all about earnings. They report after the close. Option market pricing in about a plus or minus 5.5% move either way, or just about $2.25 each way. I mentioned that the stock fell pretty sharply. The investment in BetMGM, that's their online gaming that competes with DraftKings, Flutter Entertainment, and some of the others, has been under pressure just due to the amount of costs that MGM's having to put into that entity, and it's not making them any money right now, so it's just kind of money tossed away. That's been a headwind for this company. They're losing out to some of those other players in there, including Penn Gaming also. They do buy back a lot of stock. It's a shareholder-friendly company, but at the same time, I think going into earnings, somebody out there in the option market's playing this for, hey, maybe we're going to see some more weakness, because I saw a big put buyer in here, and we typically don't see big outsized trades in this name, so this kind of stuck out to me. And this was out in the November 1st weekly cycle, so really short-term earnings positioning here. Trader bought 10,000 of those November 1st weekly, the 40.5 puts. They paid an average debit of 60 cents on those, so you're not outlaying a bunch of capital because of the duration so short. But that break even of $39.90 over the next 2 days, that's 4% below the current share price.
Squeezing
within
again.
that one standard deviation range that the option market's priced in at this point. And like I said, we typically don't see
We're
big,
squeezing again.
positions of this size in MGM. Put volume is about 9 times normal daily average volume that we've seen over the last week of trading. So yeah, somebody's positioning for some weakness, and you know, like I said, Nicole, this might be somebody that has a lot of stock position and they want to kind of hedge it to the downside, or it might be some speculator out there thinking, hey, if we see another massive drop in MGM post earnings, this takes advantage of that.
Yeah.
Yeah, and that caught your eye when you see a big trade like that. I mean, Caesars came out. I'm not saying that they're one and the same, but Caesars came out, had a revenue miss, and that's down 6-7% today. Though I've been hearing good things about Macau, so we'll see what happens there. And then when I plug in I know, Supermicro, it's been down like 30%. You had the resignation of a key person there in accounting, I believe. So the accountant resigns. I saw that early this morning, and that just comes on the heels of, worse PR after worse PR in the accounting. And that first Hindenburg report that we talked about in August, late August. I mean, this thing is down, let's see, over 50% in a few months. So, did you find a bullish trade or maybe a bearish one? Let's see.
Yeah, unfortunately, bad news as far as option positioning today on Options Corner here, Nicole. Because, you mentioned the stock's down over 30% today, and this is on the back of that report that Ernst & Young, their auditor, their accountant, basically is leaving the firm. They don't believe in management at this point. They don't believe in the board at this point. And this isn't the first time this has happened. This happened back in 2018 to Supermicro. So accounting issues abound, and that's why they're pulling away from this company. What does it do? It raises considerable questions about the validity of their current and past financial statements. Also raises questions about their corporate governance, the management's commitment to integrity, ethical values. A lot on the plate here, but this is definitely not good for headline risk. Now, what type of effect does it have on their business? Well, data center build out, that's what Supermicro does, is ramping up, right? They've got a huge backlog of orders, but you've seen the reaction in Dell, which competes with them in this space. That stock's rocketing to the upside on this bad news for Supermicro, but not surprising when you see over a 30% drop. We've got some put buyers out in here, and one that stuck out to me was out in the November 15th monthly cycle, so just 2.5 weeks till expiration. Trader bought over 12,000 of the 30 strike puts, paid an average debit of about $2.20 on average. It was interspersed with small lots in there, but that break even of 27.80 over the next 16 days, that's about 15% below the current share price in there. So with the moves that we've seen in there, that's not out of the realm of possibility over the next 16 days. Put volume in there, about 11 times normal daily average volume. Puts are out trading calls. Over 800,000 puts have traded on the day. So massive volumes on the put side, but that's not surprising with this kind of news and this reaction in the stock, Nicole.
And of course, Supermicro disagrees with Ernst & Young's accountant pulling off this particular, client. But, we're seeing the story. And this was a name that people on Wall Street loved. Do you remember 6 months, 8 months? No, maybe not 6 months. But, 10 months ago, it was a name people loved. And they really got walloped. Okay. Tom every day has Options Corner for us here on the watch list. Tom White with Options Corner. Thank you very much. A good look there at NVIDIA, MGM, and SMCI trades. Coming up, we'll focus on Reddit after the blowout earnings that we saw last night. That sent those shares soaring. We'll find out what's behind that move. Much more coming up here on the watch list. We're up 60 on the Dow. We'll be right back.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Schwab!
This election season, stay out of the
Okay, we're back to the pivot point.
Schwab Network's
Of right now, a new one.
Of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, Stay ahead. Tune in to our election coverage on Schwab Network.
Knock, knock. #1 broker here for the #1 hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar,
5840s.
So many choices.
Yeah, like Schwab.
Right around
I can get full service wealth
95,
management,
90.
advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on
Kevin
Fast Market,
Hickey.
weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. I'm Nicole Pedalides, live on the floor of the New York Stock
80
Exchange. We have
cents.
a lot of earnings that we're focusing on. How about
Damn, I got the
Reddit?
itchies.
Did you check that one out? Because after the blowout quarter, it sent the shares higher. We want to discuss what's going on with Reddit and the outlook as well. Seema Shah is with us, VP of Insights at Sensor Tower, and we see this stock up nearly 40% as we speak.
Yep.
Surprised? I guess everybody must have been a little surprised.
They beat their expectations on the top line. They guided a little bit better, so full year revenue is better than expected, which everybody's very happy about. So I think, and what I thought was the tone on the call was pretty positive, and it sort of corroborates Sensor Tower's data of what we're seeing for them. Now, they are, on an absolute basis, obviously significantly smaller than some of the other social media platforms, but they've seen significant growth both globally and the US, like around 22% globally in daily active users, compared to flat or slightly down to some of the larger ones. Like, for example, TikTok is down on a global basis, and a few other, Facebook is flat. So they are seeing momentum. It is off a smaller base, but I think they're definitely seeing that upside, and that was encouraging.
And it's so different in a way than some of the other social media. We had the opportunity to speak with the CEO not that long ago here on the network. I spoke with him, and one of the things as I was doing more and more research for that interview, I found were that people who were on some of the other platforms got off those platforms because they liked the community of Reddit. So it provided something that was different. Did you find like it's the innovation? What was bringing people maybe away from a more traditional social media platform
I think
to Reddit?
It's the conversations part. It's the different topics where you can also ask questions. You can be involved in communities. And I think there's probably something to be said about the opportunity to be anonymous on a platform nowadays where so much of what you do is tracked by a number of different people, and here's a chance for you to go ask questions, participate in a community with also, it's a community that is focused on usually one topic, right? So you're able to interact with people who are interested in the same thing as you, which is probably harder to find maybe in the digital world now, and particularly maybe even in the real everyday life. So I think that's very attractive to people. And the other thing that's really driving this growth is their international growth. They've improved the performance of their content. They've changed the language of their content in more countries. Philippines, for example, saw 40% year-over-year growth in active users, followed by France and India. So I think as they continue to translate their content, make the platform a little bit more user-friendly in these other geographies, that's also going to help them to continue to grow.
At this point now, when you think about, the international growth and the footprint, I mean, you go around the world and most people know what Facebook is, right?
Yes.
I don't know that most people know what Reddit is. Do you, based on some of the research you're doing, do they have a lot more room to grow?
Yes, absolutely. I think that they do, because majority of their, probably I think right now, maybe it's 50% or something, or a little bit more, is coming from the US. So in those other geographies, it's much smaller, and the fact that a lot of the content was predominantly in English before was probably a huge barrier for many people to join these communities. But now that they can get local language content, they can maybe respond in their local language, and if I read it here, it comes out in English, or however, that makes it a huge, it makes them feel more included in the community, right? If community is the driving factor, being able to do it in your native language just, I think, makes you feel more of a part of it.
When you think about advertising dollars, they're so fragmented. The battle is real.
Yes.
Where the advertising dollars go. Tell me about what we're seeing there and what could happen in the new year.
Yes. So advertising was very positive. Just some interesting stats that Sensor Tower and advertising data. So about 50% of Reddit's advertising, or advertisers I should say, are coming from financial services, media and telecom, shopping are some of the larger categories. And this is very much in line with the other social media platforms. So it shows you how critical these categories are. And as Reddit improves, I think, its experience for users, it has more opportunity to drive that revenue growth, right? And one of the things they spoke about a lot on the call was search, people using Reddit to search. And search is also something we're seeing pick up on some of the other social media platforms. And the interesting thing is Reddit is smaller, but it's like 140,000 hours per day are spent on search compared to 4.3 billion for Facebook. So obviously it's a huge delta, but there's a lot of upside because there's a lot of community knowledge there that people are probably going to be attracted to finding, and that's another opportunity, another surface they could potentially monetize. So I think there is a lot of upside. And they're seeing growth. 35% of their advertisers were new on a year-over-year basis this quarter, right?
Yeah.
That sort of concurs with what we saw. We saw penetration of auto advertisers up 2 percentage points. They also called that out. And I think that also shows it's becoming a more viable option for advertisers in general.
Yeah.
Right? So maybe a different crowd that you might get on Instagram and Facebook.
Yeah, well. I think that was part of the conversation I had with him, is that there are different crowds. People like different things. I mean, Snap would be a different crowd, maybe. Maybe those are younger folks. I don't know about the demographics, but Snap had some upbeat earnings. I mean, that Snap stock is up 20% now. So that's been a great move for Snap.
Yeah.
You know, how do you differentiate the strength and the leaders for 2025 in the world of social media? I mean, is there room for Facebook, Instagram, Twitter, Snap, Reddit? You tell me.
I think there is room, because if you just think about them as much isolation as you can, they do target slightly different audiences. There is overlap. And we still, you know, with TikTok potentially not being around in 2025, that's a lot of ad dollars and user time that could probably go to YouTube because of Shorts, Instagram, and now even Snapchat with Spotlight. So there's a lot of opportunities for the ad dollars and the time spent to be distributed on the remaining social media platforms, right? And they kind of each serve a different purpose. So I think there is room for them, and that's why they've been able to sustain themselves for so long when others have sort of come up and gone down, right?
Yeah.
There's many of them that have gone by the wayside because they couldn't get that stickiness and that momentum.
And there are others. I mean, I saw YouTube in your notes, another place people spend a lot of time. You mentioned TikTok already. But there's a lot of places that people go, but the advertisers have to spread out the dollars, and they're not doing too poorly. Do you expect that they'll get more advertising dollars next year and the year after that?
I think going forward, because it's still, again, a much smaller pie, there's a lot of opportunity for them to grow. And also, if we think about them going international, that's a whole other set of advertisers and users, right? That they can
All
grow.
right. Seema Shah, VP of Insights at Sensor Tower. Thank you so much for being with us and joining us on the show.
2:38 Eastern Time.
Coming up, the U.S. election just 6 days away. Our next guest joins us to break down the potential market impact of the election and shares why he thinks the potential impact may be overstated. We'll hear all about it next. We'll be right back.
I'm beginning to believe so too. It doesn't matter. Unless we get nuked.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennie.
Panic button.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
It is the best way.
At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Penelides. Time to dive into the presidential election. Everybody's chomping at the bit. It's 6 days away. Maybe you voted already. I know I did. David Burns is with us, CEO at Vitech. What could happen to our economy, our markets? What do we need to know? The elections and the markets. Good to see you.
Yeah,
Thank you
likewise. Thank you
for
for having
being here, David. So what's on your mind, big picture? We're 6 days away.
Yeah, certainly I'm looking forward to, one way or the other, having some clarity about where we are. I do think that the build-up, particularly over the last 6 months, and some of the drama, frankly, that we've seen over the summer period, has kind of escalated the level of fear. So I do look forward to getting clarity, some known pieces on the board. How does it shake out, not only with the president, but with Congress? Interestingly, I think there's an opportunity for the first time in over 230 years, potentially see the chambers of Congress switch, which will be very interesting. Personally, I think that where we're going to land after November 7th is going to be with more gridlock. I don't think we're going to end up with a unified government. So I think that, at least until the midterm elections, things will remain status quo. But from a business perspective, especially like you said, over the last 6+ months, just all the uncertainty, the escalation of fear, regardless of how folks are going to vote, has kind of escalated things, and it has had material impacts on businesses where we're seeing some things like extended sales cycles until, again, these pieces land on the board and we know what we're dealing with.
Look, if you're a CEO of a company, you want to wait and see what you may have to pay, what you may not have to pay, how your labor picture is going to look, how it may not look. Are they going to have to pay tariffs, things like that?
Exactly.
Where's the dollar? Where's the economy? Where's the consumer? All of these things will have to fall into place shortly after you see the makeup of Congress. To your point, we could even see the chambers switch. So there's a lot here that is happening. There are some folks who say, regardless of the candidate, the market may see volatility, but then be fine.
Yeah.
It's moved higher all these years.
Yeah.
And here we are at Dow, 42,000, right?
Yeah.
Are you a believer if we see some volatility that the market ends up higher in the end, or not necessarily? We could see a recession or depression or things like that.
I could be an optimist, but I really do think that we're in for a soft landing. I think it is critical that we just get some of the uncertainty in the election process known, declared. I think in a lot of ways the market's already kind of hedged in one way or the other, regardless of how the elections land. And I think overall, the U.S. economy is very, very strong, right? There's a lot of concern about inflation. And the reality is we've had, years of zero capital costs. And, I think we're going to end up with a soft landing. that over the next 12 to 18 months, that brings us down to a 3 to 4%. And, sure, that's still higher than zero cost of capital, but at the end of the day, that's a more than a manageable rate for us to work with.
Right. We just did notice some tweets from Elon Musk himself on Twitter where he talked about the economy, and there are a lot of folks who were commenting that he seemed to be on the Republican side with Donald Trump, but he also made the comments that the economy will crash if Donald Trump is to be elected, and and that the market, so the economy will crash. He also said something like the market will sell off. He's certainly not painting a good picture. Certainly seems different, doesn't it?
It certainly does. I'm not looking at the same data that Elon is, and it seems like he's deviating a bit from what he's been saying over the last couple of weeks, so perhaps he has some information. But I regardless of how it shakes out and which, who gets elected, I just don't see a significant consequence to it. As I said, I think the market's the government's gonna largely continue as is. The market's already hedged to a great extent on what's gonna happen. The reality is the dollar is now stronger than it has been in the last 30 years. And in a lot of ways, the U.S. has more influence and is driving the capital allocations across the globe more than we ever have. So I just don't see how the severity or level of consequences.
Right, because he said Americans will face hardship if Donald Trump institutes his plans. Whatever that may be exactly, maybe he knows more than we do. What about a Harris win? Do you feel the same? Do you feel that the economy is strong or can hold on? I mean, we're still in the administration of the Biden administration, of which she's a part. Maybe she doesn't change anything.
Yeah. And I think, again, we're dealing, at least until midterms, if I'm correct, and we do, we don't have a solid, government, a clean sweep, then I think we're going to remain kind of status quo.
Yeah.
Even if she doesn't change any policies, we remain status quo, at least until the next midterms.
I think the geopolitical picture is one that could really change the dynamic. You have what's going on in the Middle East. You have China, China, Taiwan. There's Russia, Ukraine. There's a lot going on, right? I guess any one of those can really sort of escalate.
Sure, and the tensions are increasingly escalating, and I think there is real risk that we could see some decoupling of some of the other global economies, and that would introduce further market liquidity and inflationary pressures on top of what we're already dealing with. So certainly some of those externalities are
There's a lot of concern
threat.
about the BRIC nations teaming up and being stronger than ever, but that it requires a lot more coordination for them to actually be formidable with a currency or anything else for that matter.
And if and when they can resolve some of those issues, I don't think that's a 3 years from now or a 5 year from now situation we need to consider from a business perspective.
All right, but you don't think one candidate over the other may do better for the economy and for the American
No, I think especially if we end up in a gridlock situation as we've been, I don't think there's anything material that's going to be that significant. Certainly on par with what Elon is suggesting.
David, a good conversation.
Yeah, likewise.
Thank you so much. David Burns, CEO at Vitech. Thanks for being here. Still ahead, we'll bring in our panel to discuss First Solar earnings from last night. We'll break it all down just after the break. We'll be right back.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to the watch list. Time to dive in the earnings from First Solar. Let's bring in our panel. Brett Castelli's with us, equity analyst, Clean Energy Morningstar, and Bob Buick is with us, senior portfolio manager, Pear Tree Essex Environmental Opportunities Fund. Thank you both for being here. Brett, you have fair value estimate of 190. It's at 199. Some of your thoughts.
Yeah, so the headline coming out of the quarter will be that the company reduced its full year guidance, but we think that was largely due to transitory issues. And so we look past that. And I think really what investors' focus is going to be in the coming days is going to be the upcoming U.S. election.
Yep. Finally.
Rob, what are your thoughts?
Yeah, I don't disagree. I think clearly the
Time to take a
entire
vacation.
solar sector and certainly First Solar have been negatively impacted by some of the political uncertainty. From a macro fundamental standpoint, solar has been a difficult area in general over the past 2 years. There's been a number of headwinds, and I think some of those are starting to dissipate. First Solar has been the best performer of just about the entire solar cohort. But even First Solar has been underperforming the market. It's down about 30% or so since the middle of June. So that reflects, I think, some of the political uncertainty in the air, but also some of the expected guide down that Brett spoke about in terms of some of the delays we're seeing in projects here in the United States, some of the pricing pressure in India, and then some of the warranty challenges that they had this quarter. But we think we'll have an answer, I think, to the political situation hopefully next week. And as your prior guest had mentioned, I'm fairly balanced, and I think we'll be okay regardless of the outcome next week.
Yeah, I'm glad you added that in. Listen, by the way, the fair value that we talked about was 199 or 190, I believe, and it's at 199. As I look through, Goldman Sachs has a buy 279, RBC 280, Evercore 278, Mizuho 257. So most of these, I even saw one, they came down from 311. But the point is, there's a lot of buy ratings and a lot of higher numbers where this stock is headed, Brett. What could bring us to some of those higher levels?
Yeah, news.
Yeah, it's really around U.S.
interest.
So First Solar sells about 95% of their solar panels into the U.S. market. They are the market share leader in terms of supplying panels in the market. And so, and they're undergoing a rapid capacity expansion here in the U.S. following the Inflation Reduction Act.
Oh, they are.
And so, long term for First
Did you
Solar
know
to
that?
continue to increase its share price, it really hinges on demand growth in the U.S. market so that they can continue to
That's interesting.
add capacity and take advantage of that.
Yeah, by the way, the fund, Rob, folks want to check it out, GEOSX. You know, how's the fund going? What have been some of the goals and agenda of the fund? What are some of the names in the fund that are leading the way? And do you think those are positioned well? I mean, are you seeing a lot of solar stocks right at the top?
Yeah, great questions, and thanks for asking. So our fund is focused on environmental solutions. So we invest in companies that are providing technologies and services to help us overcome some of the environmental challenges that we have. We're much more diversified than just renewable energy and solar, so that makes up about less than 10% of our portfolio currently, and it's usually, you know, between 5
I'm
and
confused.
10% of the portfolio. We're much more constructive on other areas that are tangential to solar and First Solar. So
like
we
what?
Some of the bigger challenges, and this gets to what Brett pointed to. We're a little more optimistic on demand growth here in the United States. We think, you know, after 2 decades of a flat electrical demand, we're going to reach an inflection point. We're at the point of an inflection point here, where you're going to see demand growth. You know, next era energy, the IEA are predicting almost 30% growth in energy demand here in the United States over the next 15 years until the year 2050. And that's driven by a number of factors. One, we have onshoring happening here in the United States. We have electrification of lots of things. Buildings are being electrified. Electric vehicles are going to be rolling out, even though there's a little bit of a pause in the growth there. And then finally, we're layering on the massive power consumption of AI and data centers. So we think you're going to have an unprecedented level of energy growth in the next few years. We spend a lot of our portfolio on power technology, construction of the grid, resilience of the grid, more efficient use of battery power, storage, etc. So solar is a small part, but we're warming up to it after a couple of years of underperformance, and we feel pretty optimistic moving forward than some of the names.
Yeah, we're going to have to leave it there. Thank you both.
4 more minutes power hour.
Kelly over at Morningstar and Rob Buick, Pear Tree Essex Environmental Opportunities Fund. Thank you. And thank you, friends, for being with me here on the watch list. I'm Nicole Petalides. The Dow's up 46. We want you to down.
This election season,
Ooh,
stay
cut
out
her
of the
off.
muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
She won't like that.
Impact your financial future.
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed. Stay ahead. Tune in to our election coverage on Schwab Network.
Be sure to miss it.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree,
You can do that, you do that good.
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
so how are you exploiting human weaknesses?
I don't get that one.
And trading is great, but it's not.
I mean, that's a tough question.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see pattern. Context is so important. I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outdated by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
It's more than that, baby.
Welcome to Market Overtime on the Schwab Network.
Chub chub.
Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
No, I have not.
The old guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
Do.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Well. When the knife
Good
comes.
afternoon. Welcome to Market on Close. Thanks for tuning into the Schwab Network. I'm Oliver Rennick. Today's going to be a busy one. Big earnings this afternoon. Really important stocks. Alphabet holding its own right now, but tech a little bit dicey today after Super Micro's accounting revelation. So market's been kind of divided, a little mixed. Russell caught an early bid instead of tech, but we're just not moving a whole lot in either direction, which probably is an okay thing right now, considering that we've been largely range bound and there's some major events lurking around every corner. Earnings today, data tomorrow, election next week, Fed right after. Are you kidding me? It's nuts. 6 trading days ahead of us. So all things considered, a flat session, probably not too bad considering we're still dealing with the same handles we're used to. 58 on the S&P's, 20 on the NASDAQ. Russell also hanging out near its highs too, even after getting hit fairly hard when bonds were selling off over the past week. Russell kind of stomped in its tracks, but bulls not giving up there. The big story today is from this morning that E&Y backed away from Super Micro as its accounting firm, and thus getting the rumor mill spinning. Less rumor, probably more getting close to some reality that something went wrong there, given the report, the short case from earlier this year. There are implications for the most important companies, given NVIDIA did get about 8% of its revenue from SMCI. We're going to find out just how insatiable demand is for those chips, apparently, if there's any wacky numbers that hurt that potential demand from SMCI's side. But NVIDIA's been hanging in there today, so that's kind of the overall important takeaways, that NVIDIA's been solid. The chips have also just generally been a little weaker. If you look at the chart for SMH versus the NASDAQ, it has been lagging because we're very close to the highs in the Qs, but the SMH ETF has been stuck. So all of this is basically to say that things are kind of continuing on par for the course right now, which has been a pretty big dispersion between the NVIDIA story and the rest of the semiconductors. Now, once we get into earnings, then we have seen some relief in some of the lagging semiconductor trades like Lam Research and Texas Instruments, Western Digital last week, but not for AMD. There's a big difference between first and the rest in terms of leadership for AI. And this afternoon, we'll also get an update from KLA Tencor, but kind of cut from the same cloth as AMAT and Lam Research. The big one this afternoon is going to be Meta, in my mind, for sure, given that that one should be fairly reliable, considering the major changes the company has made, the real AI developments they've been putting out across their apps. And we also saw that Alphabet, which needed to hold, did rally. Unfortunately, it gave back a decent amount of its early pop, but Google was one of the cheaper Mag 7 trades, just valuation-wise, coming into this. So the bias probably was for the stock to bounce. That's one that needs to work. A lot of these companies sitting near highs like Meta and Apple have a bigger weight on their shoulders right now. So Alphabet did kind of have an easier hill to climb. Looks like it's doing it.
Ooh, double bottom here.
Intact.
This looks nice.
Trade intact right now. As far as the economic situation goes, bonds have had a little bit of a choppy day. GDP maybe a little bit lower than expectations, but still a fine number. We did see private payrolls looking good, job situation looking good, pending home sales with a bit of a shocker. And once again, we saw selling pressure come into bonds even after a rally. This is the 20-day chart. You can see the bounce in the Treasury futures. The 10-year since yesterday's 7-year auction found good demand. But now in the afternoon, as we head towards the close, it's bond sellers that are back in control, with bonds coming off right in line with the overall trend. You can see over the last 3 roughly weeks, lower lows, lower highs. The bond bear market in the intermediate term looks very real right now, given the consistent pushback to every rally, yields creeping higher, prices dropping. Somewhat of like a free fall. The last 24 hours, the first real bid that came into bonds, and as it fades into the close right now, you definitely want to be aware of potential bond selling if the numbers tomorrow or Friday are warm at all, whether it's inflation or jobs. Hopefully the inflation print is not warm. We might be able to stomach a little bounce in inflation, considering the rest of the data have been better than expected, but look for employment on Friday to be a major player in this week's action as well. Crude oil, something to watch too, just in the background. WTI catching a little bit of a bounce. It seems to fail on every rally, but it also seems to find buyers pretty regularly down below 70 bucks. So essentially sort of a range-bound trade. Still a good message about inflation. Shouldn't get too out of control if WTI has plenty of supply and the price can't stay above 70. But just keep in mind it also doesn't really go down below 70 for too long, as we do have some higher lows in the crude oil chart, but it's probably like a weeks long thing to develop. We've got bigger fish to fry for sure right now with earnings ahead of us. Jenny Horning and Kevin Hinks with me here in the studio. Let's talk some winners, let's talk some action here. The 10-year price kind of fading, even with stocks down a little bit, Kev. To me, that's kind of one we should just get it out of the way. Economic data tomorrow and Friday still seem to have a role to play here.
Well, we get core PCE tomorrow and wages data and part of non-farm payrolls on Friday. You're going to get a big look at inflation in the next 48 hours, Oliver. And so don't sleep on the macro, I guess is what we're saying. In a world where, in a week where you're going to get, a big taste of large cap tech, you also got a bunch of macro coming out. And so I think you got to pay attention to both. Now, each stock is going to be its individual story, right? Micro will outdo the macro in the short term, but eventually the macro's got to come back.
The earnings this afternoon and tomorrow.
Yeah, exactly right. So I think there's a lot to, like I said, there's something for everybody here. There's politics, there's data, there's earnings. There's a lot of news going on out there right now. There's accounting scandals. Something for everybody.
Yeah, there's literally something for everyone here. Choose your adventure. You can go which way you want. Who of us this morning that made the joke from super to micro in one day?
Oh no, that wasn't me, but I wish it was.
I don't know who it was, but
from super to micro?
Yeah, I think
no, I did not make that.
Shoot, that is accurate though.
Yeah, okay, might have been just someone on Twitter commented that. Look, a few of the things are kind of moving around because of that still. Nvidia's down, but Dell's up. What's interesting about this, Jenny, is that the market's kind of saying maybe there's winners to capitalize on this.
Yeah, because there's this funding gap that now could be key to Dell as well as
Double bottom day.
Enterprise. So I think that this is actually becoming more of a story when you read some of the implications. I think this morning we were this is super micro specific, which sure it is, but I mean everything in right now the AI trade is connected. So there's a substantial amount of funding that these companies receiving from the AI research, and of course the CapEx we see spent that now could just be shifted to some of these other companies that frankly have a board that's in active disagreement with their auditors. I mean, what is concerning is the fact that there's an obvious unwillingness from the board to accommodate what was being asked of them with E&Y, and I think that's the problem. I mean, we don't even know what the broader implications are. The market's not going to know anytime soon, but what we know from the statement is baseline, there's been issues.
Yeah, there's been issues, and competitors now might be able to, have some edge. The fact that Nvidia held on today, to me, is a sign of confidence. The fact that Apple held on despite Corvo dropping 2, Kev, that seems like confidence as well.
Yeah. Yes. I'd like to be Jensen Huang sitting, or Michael Dell sitting in his office. Yeah, Jensen Huang on line 1. Oh, I knew that call was coming, didn't I?
Right, yeah.
How much can you handle?
Right.
One of those situations.
Gotta move some size.
Yeah, exactly. So, listen, I think there's a lot going on here that's going to fall out through this. I just think You know, I think that we live in pretty interesting times for some of these stocks, and this AI, you know, I compare it a lot, and people make fun of me because I compare it to streaming from 2 years ago, right? But if you look at streaming, Netflix is the only one standing in streaming now that's really made it through and been profitable. It's going to be interesting how, I don't think there's going to be one winner in AI. I think there's going to be several, but it's not going to be everybody.
Sure. Well, to your point, I mean, the chip chart versus NVIDIA, they're two wildly different things. So I think at some point there's a lot of important truth there, which is we're seeing the second place runner-ups. That podium is pretty low right now compared to NVIDIA. Here's what's interesting, though. The subject of choosing your own adventure today, actually kind of a low-key story that fits, I think, with consumer confidence, that fits with sentiment last week. The jobs data we're getting as well, Jenny, is that all the restaurant businesses, minus Chipotle after earnings, are going bananas here today. What is this? What's happening? Cheesecake Factory's up.
I know.
Like breaking out.
Brinker's up
Brinker.
like 8.5%.
Texas Instruments.
Shake Shack, I think, is also up. Yeah, I actually.
Shake Shack, yeah.
What's amazing is the interest in Chili's. I could knock it over this. And granted, I will dabble with the Chili's.
Yeah, don't hate on Chili's, right?
No, I would never. It's like the airport, like luxury. If you have a Chili's at your airport, you're set for hours.
Yeah,
But
you may just cancel your flight.
14% comp sales this quarter. Hey, that's awesome. That means
Yeah.
it's outshining like 4.2% for Maggiano's. It's like nothing. So Chili's is becoming Brinker's, I mean, bread and butter, no pun intended.
Right. Nice, okay. All right. Hey, they got the 3 for $10.99. But here's the thing. It's pretty much everything across the board. Chipotle was down on the earnings about 8%, but everything else, I mean, has been incredible. So the American Eater won't be defeated, Kevin.
People eat. Eating at home is just not as popular as eating out now.
Yeah.
I mean, that's the evolution since I was young to you being young.
The mini splurge.
Yeah, exactly.
I wonder if it's not going to be good for DoorDash this afternoon, which is reporting.
See, I think all of this entire space could benefit because I feel like what we've started to see is like more normalized labor conditions, more normalized commodity costs. Like beef prices were really elevated a year ago.
Great point.
So I feel like right now we're seeing like the rising tide lifting all boats in restaurant stocks because it's just cheaper to make the food than it was a year ago.
Fantastic point. Fits right into the economic discussion. Inflation cooling off while the economy stays strong. People go, they celebrate, they get some nice food, they sit down, and the prep costs less for the business.
DoorDash is like electric windows in your car. Once you do it, you can't go back.
Oh, so true. It's so true.
Right, not go back.
Electric windows. Oh, geez. All right, we're going way back here. All right, thanks, Kev. Thanks, Jenny. Let's talk some macro. Let's talk about the economy. We've got 2 important data points over the next 2 sessions. Campbell Harvey, professor of finance at Duke University and director of research affiliates, says they might get messy, though. Campbell, welcome back. How come these next 2 days information might be weirder than usual?
Well, it's not just the next couple of days. So we got a good GDP print today. It's good, though, as I've said before, I do think that it's disappointing. We are increasingly satisfied with growth that's less than 3%. And we should be focused on growth at 4%. And there's a number of reasons why growth has not picked up. So we're getting used to something that is low. The main confusion will play out in the next few CPI announcements. So this is how it works. That in October, November, and December of 2023, the monthly inflation numbers were actually negative.
Oh.
So when we look at year-over-year inflation, when you drop a negative number and replace it with something that's not negative, even if it's 0, then that will increase the year-over-year CPI. And we know that the Fed focuses on the personal consumption expenditure deflator, but it's highly correlated with CPI. So there will be some confusing information coming from the CPI and inflation more generally. And obviously, there'll be confusing information in terms of employment, given that we've had a couple of shocks in terms of hurricane and a strike at a major firm. So that will, I think, basically sow the seeds of uncertainty.
Okay. Campbell, then the Fed's expected to cut during all of this. Do you think any of that will throw off their willingness to continue loosening conditions?
This is what I'm afraid of, and we've talked about this many times, that the Fed appears to have a very cursory understanding of how inflation works. And what I'm talking about is the most basic thing, that when you drop a historical negative number and replace it with something that is not negative, then the rate will go up. And I certainly hope that they focus on the monthly reading rather than the year over year, because the year over year will be impacted. So it's also the case, and we talked about this last time, that almost all of the inflation is being driven by a single component, and that is shelter. So shelter is running at like 4.8%, which is disconnected from reality. And it's because this operates with a lag. And the Fed needs to put that aside and take a look at basic data in terms of real-time rental inflation, real-time house price inflation, and they will see that the rate is not 4.9%. So inflation, CPI inflation right now has got a one handle, and has had a one handle for a while.
Oh God, look at that, SMCI.
No excuse for not doing another cut. Below what it should be.
Campbell, so all right, I mean, look, all taken and understood, but they have been cutting. The market says they're going to keep cutting, so it seems like they're at least giving some sort of directional, credence to what you're saying. Obviously, they're not hiking anymore.
Oh, there she is.
Maybe they hiked too much or whatever it may be, but since they did that 50, the bond market has done something that it basically has never done when the Fed starts cutting, or at least not in like the last 6-7 cycles, I don't think. But you tell me, you're the expert on the matter. We've had yields going up, and we've had it mostly through bear steepening since they cut. Take me through that and why that's so different from the past.
Yeah, so to reduce the short-term rate is a good thing. So as I said, the short-term rate is far higher than it should be. So we should be in the 3% range right now. But instead, it's far higher. So on the long term, you're correct that many of the economic decisions that are made in the economy are made with a longer term interest rate. So think of a mortgage, that's a longer term interest rate. Or think of a company making a longer term investment in a factory or something like that. That's a longer term investment. So that long rate is really important. So why is that long rate going up? And I think it's fairly simple. And indeed, you could also explain why the price of gold has gone up so dramatically. That people have less confidence in the US dollar. It's that simple. So when you're running a $1.8 trillion deficit at a time where you've got decent economic growth, you've got a record high stock market, and you've got low unemployment, that makes no sense whatsoever. So when you rack up more than $7 trillion in extra debt over the last 4 years, that screams risk. And indeed, you've got two candidates running for the presidency who really have not articulated a plan to reduce what is obviously a structural deficit. So what does that mean? We need to borrow money to pay interest. That is risky in itself. And people are saying, well, I need to be compensated for this extra risk. And the yields go up on the long term. And this is very negative for economic growth, very negative, because companies will not invest as rates go up. They will wait to see what happens, and the hurdle for investment actually increases. So there's less investment, and that trickles all the way down.
That is nuts.
I'm listening and I hear the argument, but the problem I see with the Campbell is that since the question that I asked about yields going up for the first time since the Fed cut, and I just looked at the chart going back to the 80s, after the first cut, yields never go up like this. The dollar is up during that. Does that not invalidate what you're saying about this being a dollar problem? The dollar whipped right back around at the same time yields have gone up.
Yeah, so again, I think a more powerful signal is the bond yield. This is people are investing for the long term, and the price of those bonds is going down because the risk premium is increasing. The actual fluctuations, the day-to-day fluctuations in the dollar, well, they will happen for many reasons, and also it depends on what's happening in other countries. So I do think that people are looking for something safer, and that means that the risk premium on the Treasury bond has gone up.
130 from
And
a buck.
indeed, we just had this conference in Russia of the BRICS countries. They're looking to de-dollarize. They're looking to reduce their dependence on the dollar. It hasn't happened yet. Some small steps have been taken, but they're looking to reduce their dependence. And again, this is all consistent with a rising long-term yield.
We've also since then got PMIs for the first time going up since the Fed cut too. I mean, the argument some have made is that the cycle's simply not going to be like the past. To your point about term premium, I get that term premiums come up too, but people scooped up all the 7 years yesterday, Campbell. The auctions seem to be going well. If what you're saying is the case, wouldn't people be bailing out from the auctions? It seems like the market can't wait to get bonds at yields where they're at.
Yeah, well, again, you can have an auction that is totally filled, but in the end, you look at the market price of the most liquid bond in the world, the 10-year, and that price has decreased. Yields have gone up, and that is negative for economic growth.
Can't be.
It is kind of a signal to me that we need to put our house in order.
Oh.
Just look at it. It is shocking the amount of debt that we've racked up in good times. This is the time to replenish the powder. We have almost no dry powder right now if something bad happened. So this is the time to be running surpluses. No, we're far from that.
Campbell Harvey distinctly not an MM tier. Point taken.
Yeah.
Campbell, thanks for the chat.
No.
Thanks for your time.
Okay, good talking to you.
Likewise, Campbell Harvey, Professor of Finance at Duke University and Director of Research at Research Affiliates. All right, some big picture thoughts ahead of next week's election, too. And by the way, we're going to get a couple fresh tests of Treasury auctions as well, as we'll get some announcements on how much the Treasury plans
Let's
to sell
do
in the
that.
coming days.
Cheers.
When we come back, let's talk some AI, let's talk some tech, let's go through the credit side as well as we get ready for a lot of big reports that have a lot of implications for data centers and all the key themes that have been driving the NASDAQ. I'll be honest,
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. #1 broker here for the #1 hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
accelerate your market knowledge,
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Alphabet's cloud numbers posted big growth and investors have high expectations. The other Mag 7 will follow suit with things related to AI, data centers, and more. Anna Lai joins us, Managing Director of U.S. Real Estate, Sector Lead, S&P Global Ratings. Anna, thanks for being here on the Schwab Network. Let's kind of talk in the context of obviously this big earnings season. The message it seems we got from Alphabet was that the data center and cloud demand is still pretty huge. Is that what you guys are saying?
Yes, absolutely. Thanks, Oliver. Thanks for having me. We do see the data centers pretty favorably positioned within the commercial real estate sector. Has become the center.
Did you get froze up? How I unfreeze you?
I mean, of the data center, the large tech company actually owns about 50% of the data centers, but real estate companies such as the REITs are also participants in this build out of the hyperscale data centers build out. So I think in terms of the main tenants, the large tech company are certainly the main tenants for the hyperscale data centers.
What is sort of the process right now, like the timeline? Do we know what's been already leased out versus what's going to have to come down the pike? Like, for example, one of the things we think about this morning when Supermicro has this issue, the kind of knock-on effect is, all right, well then if any of those numbers are wrong, then what does that mean for the chip makers who were in their customer base, and then like that ripple effect? I guess at some point all that comes back also to the physical housing of these machines. So is there like a lot of leeway right now, or if something falls through, will someone be there to buy up that space?
Yeah, I think in terms of the capacity expansion, S&P forecasts that there will be about 50 gigawatts of growth in the next 5 years compared to just about 10 gigawatts of expansion for the last 5 years. So in terms of capacity, there will be a significant expansion. A lot of it will be funded by the tech companies who will be expanding their AI projects. And so, to build this out, we think that there could be some constraints, particularly in the access to power factor.
So from 2023 to 2028, 50 gigawatts of power capacity versus the previous 5-year trend of 10, so it's going to 5x basically?
Exactly. It's significant growth that is expected. Whether the U.S. energy system could support that growth, I think that's another question, because I think one of the key constraints we see is the access to power. And the power companies will need to make significant investment to accommodate this growth.
That's
Whether
right.
it happen, we'll see.
Okay. What's the best way then, equity-wise or particular issue-wise, to get exposure to that, Dan? Should one, are there ETFs? Are there baskets that people should kind of take a broad approach to? Or are there particular names in your coverage that look like they're going to give you the best bang for your buck?
Exactly.
Well, from our perspective, I think we cover data center rating across the several practices. We rate from the credit perspective a transaction in the structured market, in the corporate market, and also project finance market. We cover 2 data center REITs in our universe, namely Digital Realty and Equinix.
DLR just had a big pop on earnings. Does it seem like they are going to be able to handle the demand without sacrificing profitability? What type of trade-off between growth and profit are these names going to try and pursue, Anna?
Yeah, in terms of the cash flow growth, we do expect the leasing momentum that they've seen for the past 2 years to really support the cash flow. But on the flip side, there will be significant investment on the development of data centers that will require investment to support that. But in terms of credit metrics, we do expect Digital Realty to maintain solid metrics.
Okay. Love the unique take on all our tech conversation. Thanks, Ally, for your time and the analysis. Good perspective. And another knock-on effect of the AI build-out into the real estate world. Let's trade some options and look at flows. Some pressure on stocks today, but nothing unmanageable. S&Ps are still within range of a positive day. If we can just add on another 15 bips, it's not too much to ask. The Russell's doing it.
Trading at Schwab is powered by Ameritrade, bringing you futures and Forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes. 40 customized
Kevin Hickey.
Up to 25 stocks in just a few clicks.
All right, let's look at some options flows. Kevin Green.
Looks to me like we want a
couple days pointing out some resistance.
little bounce here at the end of the day.
That still is the case. KG
On the
range
SPY.
bound, but so much on the calendar. Are we still going to get that break in the range? You think this week?
Bounce on the
I hope
SPY.
so, Oliver, but we have seen a little bit of progress. If we kind of look at the last, 5 or even 10 trading sessions here, we are actually making higher lows each and every session, actually since Wednesday of last week. So if you're a bull, you have to kind of say that's a win for you. You really don't want to break that streak. And if we are going to break that streak, we'd have to break through 58.14 on today's session, close below that to create a new low for the S&P 500. So I think that's a win. Now, on the upside here, when you're looking at the resistance, 58.50, we were able to reject that today. Earlier this morning, we were
Time to go to SPY.
$25 billion to $30 billion worth of gamma exposure there, and rightfully so. We started seeing some sellers kind of stepping in.
Don't follow. Well, I'm saying getting ready to squeeze.
Place there, and then we started to fade to the downside. Now we're really trying to hold these levels.
Jimmy says we're getting ready to squeeze. Mr. Green is talking about it right now, the SPX.
Hold if you are a bull in this game, a bull in the market. Not even if we end negative on the session, just from a technical standpoint, you want to be able to hold it. If we were able to flush here, Oliver, we could see 5,800 today. That is one thing that I'm just keeping my eye out on. The put flows have been a little bit more elevated over the last hour, hour and a half. But if you're looking at the longer time frame, 4, 5, 6 trading sessions, it's still bullish. And I hope that we do get out of this consolidation. I think we're going to have enough earnings as well as macroeconomic data in order to do so.
Think so, huh?
Sitting at 20 while we are range bound. Talk to me about that, KG, because it looks like vol ain't budging.
It's not. And actually today's session, what I found very interesting is we had one of those VIX up, vol up type of sessions. When you look at the earlier gains that we were seeing, the VIX was still elevated relative to the closing price of yesterday, and the trend line continued to move to the upside. And I have it highlighted in purple. That VIX up, vol up scenario.
VIX up, stocks up.
VIX up, stocks up, I'm sorry, yeah, was actually taking place earlier in the trading session. That was one thing to kind of keep on your radar. Maybe we were going to see a pullback, and rightfully so. We are seeing that right now. The VIX is not at the highs of the session, so I think that's once again kind of
2, 3, triple bottoms, descending triangle.
About 2 days ago on Monday, we actually talked about this VIX versus VIX future spread and how that was actually elevating. That was kind of your first or the precursor to volatility start.
Most cases, this is a bearish flag right here. Well, actually, it could be a falling wedge. Could be a little more bullish than bearish, but I mean, it's definitely could be a reversible flag because these are lower lows. If that was straight across, I'd call it descending. But this is a little bit bullish bearish. It's a 1, 2, 3, baby. Would I play it? I don't know. I don't want to screw my day up. I don't want to screw it up. No. Now that he had to say 5,800, how dare you, Mr. Green? Why would you say that? You will not talk.
To be the key indicator leading into the close here today. If we can see semiconductors try to catch a little bit of a bid, we might be able to reverse some of these losses that we've seen over the last 10 to 20 minutes. And if not, and semis actually do break,
dropping more.
SOX does break, which is the Philly Semiconductor Index. I feel like that's where you can kind of get that flush and maybe that test or get close to that 5,800.
Pretty good flush right there.
All right, let's look at that real quick because you got another ratio S&Ps to the SOX to visualize that point there. Take me through it because it looks like there too we should be hoping for some support.
Yes.
Don't hope for nothing when this guy talks.
Testing that negative gamma area, so you want to see some buyers stepping in here right now. This is kind of what I was fearing. You have the semiconductor index, the SOX, and the SPX ratio chart. SPX is on top. SOX is on the bottom. If that blue line is moving to the upside, that means the S&P is actually doing better on a relative basis compared to the SOX index here. So you actually want to see that go down. You want to see the SOX actually really outperforming the S&P 500 because the weighting of the semiconductor index would actually probably push the S&P 500 up a little bit higher. So that's what I'm actually focusing on during the close here. But once again, we're kind of failing that level. We're going into negative gamma territory right now. You don't want to see these dealers starting to sell more futures contracts going into the close here. You don't want to really close at the lows of the session. We may get another bounce at that 58.10 level, which we talked about earlier this morning.
You don't?
Earlier that, though, I think that would be a pretty ugly close for today, even though the size or the magnitude of today's session might be minuscule for somebody that's looking at it from a 20,000 foot level.
Okay, good stuff like that, and a good context stuff and into the earnings themes. Thanks, KG. All right, we're gonna come back. We're gonna talk dollar, slipping a little bit today, but trying to firm as bonds sell off and yields do rise. We also got an under the radar earnings.
I've tried to say stuff like that a few times.
Be right back.
Look, we're going to be bullish if we hold this number here. But not all doom and gloom. Right now we're flat. The NASDAQ is down 125. Today's upgrades, Google's on there, Boot Barn, Boeing downgrade, there's a nice little bounce, 50 cents to 90 on the SPX just now. The one I was looking at, 58.30.
Carl's way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
That's a new one.
Boom! Dollar slipping today after a big run, but yields popping in the second half of the session is helping support the greenback. Dan Deming joins us, managing partner at KKM Financial. Dan, today looked like maybe it was going to be a reversal of the trend and maybe some more bond buying, but bears are just sort of coming for treasuries again today.
They are, especially on the short end of the curve, Oliver. When you look at the twos, the threes, and the fives is where your heaviest selling pressure is. And I guess, analyzing the data as well as the expectations for the data tomorrow, I think, and that we're seeing, as well as Friday, that, we're seeing the market just continuing to expect that yields are going to maintain here and possibly move higher. The data points continue to come in pretty strong across the board. Certainly GDP a little lower today, but still at 2.8 relative to where it was. The expectations were just a couple months ago. It's still pretty good. And, the jobs market certainly showing indications that it's still pretty strong.
Yeah, jobs, private payrolls are pretty good. What's kind of your thought on that as an indicator for employment on Friday? And combined with JOLTS too, we got a little extra info this week.
We did, yeah, especially with the declining openings. So that was viewed as a positive. And now, as far as just balancing the market. And then today we're seeing pretty strong data in the private sector. I suspect that we'll probably have a pretty decent number on Friday. Now, not every month do we see the non-farm payrolls follow the ADP, the public versus private sector type of scenario. But it does feel like, just the weekly jobless claims, Oliver, and we're going to get those once again tomorrow, but they have been trending slightly lower. And, it does appear that overall that after that big blowout number last month, of course, a lot of those were government jobs, but nonetheless, it does appear that, you're continuing to see pretty strong labor market overall. And so I would expect that it's going to meet the expectations, possibly even beat it a little bit. And I think maybe the bonds are sensing that as well.
How about that pending home sales print? It looked like a bit of a typo earlier this morning. It seems that period we did have of yields coming down and mortgage rates declining maybe sent the market a little wild. A lot of people waiting in line.
Yeah, exactly. Yeah, this reversal in the mortgage market is going to have an impact. It definitely will, we'll see if it's going to be short term or if it's something longer in duration. But yeah, that's another factor that's impacting the market. And as you pointed out, we're seeing the dollar come under a little bit of selling pressure today. Now, it's a mixed bag when you look at the price action across the FX quadrant. The euro showing the significant strength today, and of course that makes up a majority of the dollar index, and that's I think reacting to some stronger than expected data points out of the EU. And now you got the British pound under some pressure because of some, budget release, I guess, and discussions as far as how they're going to manage the spending moving forward, and quite an inflection point there for the euro versus the British pound, and then seeing, also the Canadian dollar benefiting from oil probably moving higher today, and also the Australian dollar bouncing a little bit after some selling pressure yesterday. So really the big dispersion day really is between the British pound and the euro being impacting the dollar.
Yeah, good point on the euro, as the dollar seems to generally catch most bids right now. That bounce there is definitely thrown it a little bit.
Yeah, for sure.
Okay, thinking about maybe the Japanese yen too, as that was once a big deal. Given the dollar's resurgent rise since the Fed cut, did we silence the carry trade pessimists?
For the time being, a little bit, but I wouldn't say that it's certainly, it's still an impact type of scenario. If we do see the Bank of Japan make any moves there, it will have a ripple effect. But as of right now, it does appear that that's calmed down a little bit, basically unchanged today when you look at it versus the dollar. And again, being dragged down based on just the general direction of the dollar here the last several months, as it's printing near better than 2-month high here recently. And so I would say yes for the time being, Oliver, but that is certainly a wild card that could raise its head any day as far as how the Bank of Japan might try to manage things moving forward. And we've seen the impact before, and it could certainly have a significant impact moving forward should the Bank of Japan change the trajectory of what the expectations are right now.
Well said. Full circle back to bonds then, with the Fed coming up after the election. Dan, any strong thoughts on where we're going to be looking at the 10-year this time a week from now?
I say higher, Oliver, as far as yields. So prices lower. I think that what I see in the market is that the 10-year, and it's not a secret, it's heavily discussed by some of the minds that know the bond market better than I do, that they see the 10-year probably moving back towards that 5% mark after this all said and done. As the Fed continues to try to navigate this, that they will probably slow the pace of the potential cuts. Now, they probably will cut 25 basis points because they've already telegraphed it to some degree in November, but I don't know about December yet. So if that's the case, then in theory, you should still see some selling pressure, particularly on the back end of the curve, and moving those yields higher.
All right. Appreciate that. Good look, Dan. Like the call for next week. Looking for yields to continue the ascent, especially if they're going 25. I don't know why they wouldn't. Yield's been ripping since they cut 50. I would imagine 25 is a little sprinkle of extra, right?
Huh?
Yeah. Why bet against the trend? All right, thanks, Dan Deming. Double D, managing partner, KKM Financial, good stuff. All right, let's talk some directional moves with Jenny Horn. Today's developing story is the big winning success of Garmin. More than just directions these days, right, Jenny?
Apparently so. I've been learning a lot about this product. I frankly didn't even realize that it's relevant still, but I mean, they have a variety of these navigation systems that are great for like hiking outdoors. And I also was seeing some of their wearables, which is huge, and they're not cheap either. I will say, to speak to that price tag, I mean, most of these devices are well over $1,000. So I think this is a great resale product, and there's also a whole market for that. I guess I just didn't realize the value. But hey, I mean, like, talk about a value name, because we're surging to $207 a share today. We are up 24%. This is the best performer in the S&P 500 today. After the company was able to pretty sizably beat on its earnings and revenue estimates, it's boosted its financial outlook, and substantially so. They did say this is based on the results they've achieved so far, the momentum they are experiencing as they enter this very important holiday selling season. So for the fiscal year, they now forecast adjusted earnings of around $6.85 a share, higher than the $6. Should have been expecting like $6.10. So well above that. On full year guidance that we saw also was pretty momentous, well above what they had previously issued. So logged gains also across their portfolio. Wearable fitness was up 31%. Outdoor products was up 21% on this growing demand for so-called adventure watches and also sales in their marine segment were up 22%, and boats and cars and the overall part of that business.
No way.
So it's been a really, I think, interesting story actually.
No, it's not.
I've been going through their site too, looking at some of the stuff. When you're researching this, just like how powerful did your craving get to go just explore the wilderness?
Pretty bad.
Yeah, it made me think that I need to be investing more in like these various watches. Like the Apple Watches ain't cutting it.
Yeah, I think like this is if you're like legit, you know, hiker, backpacker, explorer, wanderer, vagabond, then you go Garmin. It sounds like if you're like a city dweller, you just strap on a Whoop or an Apple or something. So, and they as a result charge really high prices. Okay, cool, great chart. Thanks for the report, Jim Horn. Host of Next Gen Investing. When we come back, we got a good big picture discussion with our team, including Mike Townsend jumping on, talk some politics. Michelle Gibley is going to give us the international perspective. We got more ahead coming up.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
Yes.
So how are you exploiting human weaknesses?
Being lucky in trading.
That's a good question.
It's not a fixed formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by
I don't know what to do there.
or by technology.
When we look at your whole brain, we don't see
Dummy.
any activation in these emotional or reward pathways.
I was about to have an emotional breakdown. Glad I didn't pay for this conference. We got 9 more minutes. Boom, boom, boom.
Welcome back to Market on Close. Time for big picture discussion about what's ahead. Mike Townsend joins us, Managing Director of Legislative and Regulatory Affairs. Charles Schwab, Michelle Gibley, Director of International Research. Afternoon, guys. Great to have you both. Let's get the big stuff here out of the gate, Mike. Tomorrow, or next week, rather. I'm getting a little bit ahead of the schedule.
It's dead.
Yes, sir. What do you see?
You know, Oliver, I'm running out of ways to say that it's tied. I mean, it just is tied. And we're at that point where, you know, you just get all this, buzz around tiny incremental movements. You know, the polls, the sites that aggregate the polls like 538 and Real Clear Politics, you know, they move, Pennsylvania's moved 0.3 of a point towards Harris or 0.4 of a point towards Trump. You know, it doesn't matter. We're tied. We're going to have to wait till next week and start
Tied.
and I think it's going to be really close, and it's probably going to take a while to figure out who won.
Any new thoughts or revelations on how policy will impact markets? Have they given us anything else to chew on?
Nope.
No, you know, there's been a ton of talk about taxes. Everybody knows there's a big tax bill coming next year because of the 2017 tax cuts expiring at the end of 2020.
Oh, God.
And you've seen over the last month on the campaign trail.
I'm not excited about it.
Sort of candy to different groups, different constituencies around their tax proposals, whether it's, you know, Harris talking about, a bigger tax deduction for startups, for small business startup costs, or, a new, larger newborn tax
Open up a new
credit.
business.
Trump has talked about, making car loan interest payments deductible, all these sorts of different things. that's going to get sorted out next year. This is campaign promise land, not legislative reality land, and we're going to have to see what the balance of power is in Congress next year to sort all this out. But right now,
Who's this guy,
it's
Mike?
all about momentum. It's about getting your voters out to vote either early or next week, and see which campaign can do better at it, because it's going to be incredibly close.
Michelle, do we need to run our models on things like 200% tariffs
Yep.
that could be promises but not reality? If we do get stuff like that, I imagine that starts require some recalculations in your part of the world.
Yeah, I think there's still some uncertainty about how that ends up. The rest of the world is watching, certainly because there are implications for inflation as well as currencies. This prospect for a tariff, excessive tariffs could be inflationary, but what is on the campaign trail doesn't always translate into policy once into office as much.
That's right, honey.
Up to now, tariffs on China have been somewhat avoided as China redirected exports through other countries before further export to the U.S. But across the board, tariffs may not be so easy to avoid. But just like during the Trump administration's first term, we had the Phase 1 trade deal, we had the USMCA, and so we could actually get some kind of a deal with China
I want to buy this
reduce
knife.
tariffs in, maybe exchange for revaluation
Then
of the
short the
Chinese
market
currency
again tomorrow.
against the dollar, something that he's been vocal about.
That's a fun thought. I like that thought. Unique one. We also
What
got
call
some
is.
election
What time is
action in Japan. We talked a little bit with Jeff earlier this week about that, but wanted to circle back on that subject, Michelle, to think about how markets might respond and how we as traders or investors should respond to how the market acts. Because obviously 4 years ago, there were some pretty good short-term
31st.
I guess 8 years ago.
Well, yeah, Japan's election, it may have some lessons for us here in the U.S. this week or next week. The LDP party,
31st.
which has been in power in Japan for 65 of the last 69 years, offered, they had a surprising loss over the weekend, plunged political, uncertainty.
58.50.
Policy and fiscal policy into uncertainty, but despite that,
Or the
Japanese
58.60.
stocks rose. And again, we don't know what the election results will hold, but the lesson may be just putting the election in the
$5.90.
past could maybe set a stage for, let's take a
That's
longer
very
term view of
interesting.
what the implications are for economic and earnings growth.
Okay, love that. Mike, last thought for the election. And
570.
impact. How big of a difference is there considering the levels of control or cohesive levels of victory? Should we be going through the calculus about market implications if it's like full sweep, all the different houses, etc.?
Very tempting.
Yeah,
Grab
overall,
one
I'd say, I think
and
it's
swing
gonna take a
it
little
for
bit.
tomorrow and see what
maybe
happens.
The underrated part of this election is the battle for control of the House of Representatives. I think that the Senate is pretty likely to go Republican. And so the House could be really, really important here. But House races tend to take a long time to count, particularly in places where there are competitive seats that are going to decide the
540.
margins in places like California and New York and Washington State and other states. So it could be a little while before we know the balance of power. And so, I think people should not overreact, particularly in the first couple of days.
We did this yesterday too, another
There
one.
might be some uncertainty, that might be some choppiness in the market as a result of that uncertainty and investor concerns. But it's going to get sorted out. However long it takes, we're going to have an answer. We're going to know what the outcome is, and we'll then be able to kind of assess what the policy implications of that are. So I'm trying to caution people to not overreact.
58.50 at 540.
A few days in terms of just not knowing what direction things are going after the election.
What's the over-under on a contested election right now that it drags out, Mike?
Go, baby.
Well, I think we're probably talking, several days before we know the answer, and then the question is whether there's legal challenges and all that. I think that's what a lot of investors are concerned about, that there's just a extended period of uncertainty where there's challenges going on and possibly unrest and protests in the streets. And I'm trying to tell investors to not that's going to be short term, however short that term is, and things will settle down and we'll know the answer soon enough.
All right. That's
You think so?
optimistic and hopefully accurate, and hopefully that's what we get. So appreciate the message.
What do you think about that, honey?
Mike Townsend, Michelle, give good stuff, good perspective. And when we come back, it's earnings time. Be right back. 2 minutes till the bell.
Hit 530 there for 540. 520.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education.
I'm gonna swing one of these contracts, and it's probably a big mistake.
Webcasts, articles, courses, and more. All crafted just for traders.
That's the 5850 for October the 31st. I've got one contract at $5.40. That's the 5850. At 540. Having I still break out? Oh, is the bell rung? Oh, I've got it on mute.
Schwab Network.
I think the bell's rung already. Shit. That's not cool.
Knock, knock. Number one broker here for...
Knock, knock. The bell rung, you dingbat. Get all them dingbat. Knock, knock. Yes, it's your friendly broker here. The bell rung, you dingbat. Okay, well, let it be said. It's going to be fun. See what happens here. Probably not good. It don't look good right now. Ooh, shit, what happened there? Okay. Oh, SPY dived. That's why. So something bad happened here. Okay. Well. I guess I'll catch you all later. Really appreciate your hospitality.